Progressive Commercial Insurance offers affordable small business protection. You can receive discounts on commercial auto insurance.
I've been thinking lately about the people I meet, the car wash on the corner and the hole in the street, the way my ankles hurt with shoes on my feet, and I'm wondering if I'm gonna see tomorrow. Father, forgive us for what we must do. You forgive us, we'll forgive you. We'll forgive each other till we both turn blue. Then we'll whistle and go fishing in heaven. Till we both turn blue, go whistling, fishing in heaven. Fishing a whistle and fish, and a thing that we put on the dish. When we get through, we'll make a big wish. Never have to do this again. What we must do, you forgive us, we'll forgive you. We'll forgive each other till we both turn blue. Go whistling, fishing in heaven. We'll whistle and go fishing in heaven. We'll whistle and go fishing in heaven.
Exclusivity due to patent, it's not a surprise to us. We planned for it.
Let's talk about the slowdown in China, because that's a story that has impacted a lot of other big companies too. Procter & Gamble's CEO is going to join us in just a little bit.
Yeah.
Last quarter, he warned about the slowdown that they'd seen in their China business. It was pretty significant. Is this an issue of the Chinese economy faltering, and therefore there's not as much money to be spent from consumers there? Or is this an issue where China is replacing U.S. companies' products with their own products?
I think it's a blend of both. So I think the big catalyst in China, specifically in our medtech business, is around volume-based pricing that they have. And because the economy has slowed down, the volume in some of the outlying districts for which those pricing agreements weren't covered didn't really follow through. If you look at our pharmaceutical business, that performed pretty well throughout the course of 2024. So it's largely a medtech matter. Our estimates going forward do assume, I'd say, a somewhat pessimistic outlook. But if that rebounds, that will obviously be a source of growth and upside for us going forward.
Joe, I know you were in Washington for
Yeah.
the inauguration, as a number of business leaders were.
Surprising,
what does
ain't
this
it,
change
Becky
in
Quillette?
administration mean? I think through to things for the pharmaceutical companies.
Listening to you and
particular,
Sargason, you'd think the world was coming to a frickin' end.
What do you think happens with that? What are
Stupid.
the potential upsides and downsides with coming to a new administration?
Yeah, so Becky, by the way, great job of your coverage in Washington. It was exciting.
This is what they don't understand.
Historical moment.
So we've already heard a commission that say they're going to put $500 billion in AI coming from the billionaires' hands, not the government. We went through 4 years where we spent $14 trillion frickin' dollars of your tax money. None of these CEOs used their own money, which they had. The difference between the private sector and the socialist government sectors, where they control who they pick and choose. The private sector do their own picking and choosing. There's a huge difference. And that's what Becky and Sorgensen don't understand. Joe gets it, but why would you want to use taxpayers' money when billionaires are making a ton of it already? And it's called trickle-down economics, when the government spends your money and trickles it down to whoever they want to where the private sector is building bottom up. And all these CEOs I'm hearing, all of them are saying they love Trump. And I heard just the opposite yesterday from Sorgensen.
That the patients incur, they've gone up more than 50% over the last decade. We've got to get those discounts and rebates into the hands of the patients who need them most. There's things that can be done pretty easily with respect to copay reform. So calculating the copay off of net price versus list price. Having a transparent discussion around that, which is where the administration seems to be heading, I think is certainly good for the industry. It's good for business, and it's also good for America and America's patients.
Joe, it's such a complicated system, the healthcare system, and more importantly, the pricing for that. It's really hard to track down where these numbers go, where the increases go. Americans know that they are paying more. Your line of thinking here is that it's the pharmacy benefit managers and the insurers that are the ones that are lining your pockets with the increases that we've seen?
Yeah, just to give you an idea, Becky, here at Johnson & Johnson, the average discount and rebate across our entire portfolio was 58%. So we were recording less than half, only about 40% of gross sales. Those were discounts and rebates that went to PBMs and insurers, but also went to some government programs as well. Those discounts and rebates are not getting to the patient. Copays are going up, insurance premiums are going up, and we've got to make sure that there's clarity around that. I also think it could be beneficial, not just from a patient perspective, but from a government spending perspective. If you look at some of the 340B discounting that goes on, it's sometimes double dipped with Medicaid, so there's an opportunity.
Just so people understand 340B, because I'm afraid they'll get lost in the details here. 340B is the regulation that says hospitals in poor areas, maybe that's rural, maybe that's urban areas,
That's correct.
are granted discounts from the pharmacy companies to get cheaper medication. I think the big issue with it, from people I've spoken with about this, is that over the years it's been abused a bit. Wealthier hospitals, or hospitals serving wealthier areas, come in, buy up one of those poorer ones. They get all the cheaper drugs through that and then ship it out to areas maybe like on the main line in Philadelphia or somewhere else, to places where they really wouldn't have qualified for that, but it's not policed very closely.
That's correct. And what we're looking for HRSA to do, the agency that governs this, is simply to apply the tools that are in the law to audit, and there's been audit findings that says there has been double dipping in this respect. So to give you an idea, and Becky, you described it as well as anybody I've heard talk about it, the patient population has grown about 4% over the last few years. The program itself and the discounts in it has grown more than 25%. So right there's just an imbalance of how these discounts are being applied, and they're not getting to the right patient in that case.
Joe, the one thing I'll say is Donald Trump sounds like he definitely wants to bring drug prices down, or wants to make sure that Americans are getting cheaper prices. You can circle on the language he's used around the pharmacy benefit managers to think maybe he'll go after the middlemen.
Right.
But Bernie Sanders has said that he'd be willing to work with the Trump administration in some areas if it does things like brings prices down. And there's so many cooks in the kitchen on this. There's just such a complicated system. If it means that the IRA sticks around and that they can negotiate drug prices, in their words, or potentially tell you how much they're going to pay for certain drugs, what does that mean?
Yeah, so the first thing I would request of Senator Sanders is to ensure he's using the right data. Often those comparisons about U.S. pricing versus rest of the world pricing is using a list price here in the U.S. versus some net price outside the U.S. There is a difference, Becky, but there is some benefits to that difference, but it's not as exaggerated as maybe some make it sound. It is important to understand that the American system, we've got the best universities, the best physicians, the best healthcare providers. Americans also have the best access. If you think about drugs when they're approved, usually they're available within days after approval, but certainly within that first year. If you take a country like Canada, it's on average 2.5 to 3 years for that same drug approval to get to the patient. If you think about cancer, a very serious illness that when you're diagnosed you want the best possible care. Since 2012, there's been about 130 cancer medicines approved. In the U.S., 94% availability of those drugs. In developed countries, the G20, that same availability is only at 46%. So we can't throw out what is a good system that provides the best health care coverage with the latest scientific advancements to patients and throw that out because of some PBM and discounts that are already in the system not getting to the patient.
Joe Wolk, thank you for walking us through this. I think this is a conversation that's going to continue because there are so many parties involved here. Joe Wolk from Johnson & Johnson, we appreciate it.
Thank you, Becky.
Thank you. Andrew?
Thanks, Becky. It is just after 7 a.m. on the East Coast, after 1 p.m. right here in Davos, Switzerland. You're watching Squawk Box on CNBC. Andrew Ross Dorkin along with Becky Quick. Let's show you the futures real quick before we get to our next big guest of the morning. Looking at some green on the screen, the Dow about 136 points, the NASDAQ up about 181 points, the S&P 500 up about 27 points. And our next guest is going to be weighing on everything, the state of the U.S. economy, the banking sector, rates, and so much more. Jamie Dimon, JP Morgan Chase Chairman and CEO. Thank you, sir, for being here once again.
Andrew, thrilled to be here. Though
Put him in his place, Jamie.
Joe, I'm sure you're watching, and I lost my wingman, so I'm not going to do a walk-off, but I was thinking about it.
Oh, well, okay, so here, you know what, though? I'm going to start with this, though, because last year you were here, and your words went around the world, because you told our audience you have to respect the Trump voter. You said that Trump got it right on a lot of things, including immigration.
Or partially right,
and some other things. And I'm curious what you watched the reaction in real time, and you got calls and emails and all sorts of things that didn't just happen the day of, but I think happened for months afterwards. What that was like for you, and also what you think now.
Well, first of all, welcome everybody. Thrilled to be here. Of course, ever have an opinion, as you guys know, it comes up everywhere. And a lot of what people respond to isn't what you said or thought, it's just what snippets they heard or something like that. So I'm used to that. I was really just trying to make the point of respect a voter. The problem with putting a voter in a box is a voter may be voting for someone for completely different reasons than you think or I think or something like that. And respect why they may have grievances or angers. And I was trying to point out that there was some, we had problems with the border wall, that NATO needed to spend more money, that the economy wasn't growing enough. We hadn't grown the income for the bottom 20% for the better part of 20 years. And that we should respect that. And when people automatically, get angry over an issue, it takes away their ability to analyze why that person may be voting that way.
So let me ask you about how you feel now, because you made a comment about a week ago where you said, not that you were cautiously optimistic about our economy, and there's, by the way, I think a lot of optimism by U.S. CEOs, but you said you were cautiously pessimistic. Why?
Probably, I don't know where I said it, was probably making a little bit of a joke, but I do have a little more caution around a bunch of subjects, okay? And while America's an unbelievable place, the growth is unbelievable, pro-business growth is great, getting rid of, I hate the word regulation, it sounds like we're trying to get away with something, but the bureaucracy, the whole American public knows the bureaucracy. It is extraordinary, and it's been allowed to blossom like a cancer all throughout our country, and it damages everybody quite a bit. And so But what I'm a little questioned about is the deficit spending, and it's a global issue. It's not just an American issue. And the related, will inflation go away? I'm not so sure. And what if rates go up, credit spreads go up? Asset prices are already quite elevated. So that's kind of one issue. But the really important was geopolitics. It's Ukraine, Iran, Russia, North Korea, and the related role of China in that. And that just got me very concerned how it's going to affect our world for the next 100 years, whether or not these things get resolved in the next couple of next year or months or whatever.
Where do tariffs fit in? Because that's a topic here in Davos that everybody's talking about. Trump talked about tariffs just yesterday. Mary Erdos, your colleague, was on stage talking about how your firm has created a quote-unquote war room that's looking at each of these executive orders as they come in, trying to assess what they mean for the bank and I imagine for your clients.
So we always, war room may be a bad word, but we always, this is a real-time, full thing, analyzing for clients, for communities, for a bank. And we get a million questions, stuff like that. Look, I look at tariffs, they are an economic tool. That's it. They're an economic weapon, depending how you use it and why you use it and stuff like that. And, people argue, is it inflationary and non-inflationary? I would put in perspective, if it's a little inflationary, but it's good for national security, so be it. Get over it. National security trumps a little bit more inflation. But I think the question is how they get used. Can they be used to bring people to the table? Yes. Is there some unfair trade? Yes. Is there some state-owned subsidies? Yes. Is the president going to use that way in his team? Yeah, and we'll see. But how it gets played out, we're going to find out. And
on the topic of the markets, Becky and I were talking on the broadcast yesterday about an article in the Wall Street Journal that was looking at the beginning of presidential terms and the PE ratio, and we are at historic highs. And I wonder whether that factors into your thinking about being cautiously pessimistic about where the market goes in this environment. Are we priced for perfection?
I think asset prices are kind of inflated. And by any measure, they're top 10 or 15%. I'm talking about the U.S. stock market, but it's not true for stock markets around the world. And they say sovereign debt's priced pretty well. Credit spreads are all-time highs. So they're elevated. And you need fairly good outcomes to justify those prices. And we're all hoping for that. And I think having pro-growth strategies helps make that happen. But there are negatives out there, and they can tend to surprise you.
Hey, Becky. I think Becky's got a question for you back home.
Yeah, Jamie, first of all, hi. Great to see you. Second of all, the stronger dollar, how do you weigh into that? And I'm just thinking because we just finished talking to Joe Wolk from Johnson & Johnson. Procter & Gamble is going to be reporting this morning. It was a really rapid rise for the dollar, and that's going to mean some things for some of these international companies, especially if you consider the potential for tariffs and retribution tariffs on the other side. How do you kind of play that out? And is that one of the things you guys are gaming out in the war room?
I don't think it's as important as people think. The stronger dollar is an outcome of all these other things. And so, all things being equal, an American president, American Secretary of Treasury can say we want a stronger dollar, because what that means is your economy is strengthening versus others generally. So, it'll bounce around, and of course, tariffs can change the dollar. But the most important thing is growth. Good economic growth is good for the United States. Probably will strengthen the dollar. And so, we should be wishing for that. And yes, it'll have some negative effects in some companies, but most people will be voting for the better growth around the world.
I'm curious.
And I should point, the world needs more growth. So even being here with Europe, you talk to European nations and how their GDP stagnated for the better part of 15 years. Growth is the only real solution to reduce these deficits, to reduce debt, and to make the investments necessary to grow. A lot of the investment, by the way, don't think it's government investment. Think it's also private capital. Private capital dwarfs government investment. And so I think you have to be very careful about thinking the government can fix all these things.
Do you think other nations, let's say Europe and around, do you think that they are recognizing that and thinking that they need to change their ways to be more like the United States, to go after bureaucracy, to maybe change tax codes, to try and lure private capital?
Totally. I mean, I heard a little bit of a speech from the President von der Leyen yesterday. I met today with some, Chancellor Reeves of the UK. I don't think there's anyone who doesn't understand that they need more growth, and that certain things that people have done have inhibited growth. Inhibited its regulations, its permitting, its rules, its, I put in general anti-business sentiment, is having kids having skills getting out. I think everyone realizes that, but the real trick here is execution. You can talk about it all you want, you can the Draghi report, I mean, that's great, but they have to execute the Draghi report. And so a lot of people are talking about the Draghi report, and I think in the United States, the same thing. People are realizing how damaging these things have been.
Talking about the United States, I'm curious what you think about Doge and what Elon Musk is doing. You've had a frenemy, complicated relationship with Elon Musk over the years, given lawsuits and other things back and forth. What do you think of his role in all of this, and what do you think Doge can actually do?
Yeah, Elon and I have hugged it out.
You hugged it out?
Yeah, he came to one of our conferences. He and I had a nice long chat. We've settled some of our differences, and the guy. I mean, you got to look at Elon. I mean, SpaceX. I mean, Tesla. You know, Neuralink. I mean, the guy is our Einstein, and so I like to be helpful to him and his company as much as we can. I think it is completely rational for someone to look at our government and say it's been ineffective. Of the grievances, you know, I would say that you have inner city schools and educations, income didn't go up for the bottom 20% for the better part of 20 years, literally until the tail end of Trump's first administration. But we deserve good government. And I don't think anyone thinks sending another $1 trillion to Washington, D.C. will lend to good government. So government needs to be more accountable. It needs to be more efficient. It should be outcomes based. I mean, I'd say department by department, so I wish them the best. It's going to be complicated. You know, the federal government's complicated. You read about all the people in it. And so, you know, if we could be helpful to them, and I'd love to be helpful to them.
Let me ask you about the bank, because it's on fire. Profit rising 50%, $14 billion in the fourth quarter, which is extraordinary. Where are you? I mean, one of the things you've done over the years, and I'll give you enormous, without pandering you, I'll give you some credit for a moment, which is obviously the bank is stronger than it's ever been, but you've been very opportunistic about buying things and being in a position to buy things when the moment arises. First Republic being the last example, but of course during the financial crisis. I'm curious, when you think about investing now on behalf of the bank, what you even look at.
Yeah, I don't think doing a big deal is like in our cards, you know, and some of those were done to help the United States at the time. They weren't necessarily done for JP Morgan. And we have great people. I mean, you know a lot of them. I mean, they're just, I mean, I feel blessed with that. So that's the beginning thing. And obviously, if you don't have good people, you're not going to have a good bank. And at the end of the day, that is the number one thing. But in terms of investing, and I could go country by country, area by area, and think we can actually invest and grow. And investing shows up as bankers, physical locations, and technology, and marketing. So we spend, you know, a lot of money in marketing to create new cards and stuff like that. So we think we can gain share in investment banking, wealth management, retail, small business. We still have big pockets of, you know, Daniel Pinto always talks about the yellows and the reds where we're not very good. You know, that could be, you know, FX in Vietnam, but those are huge opportunities done properly over time.
Let me ask you another question. I don't know if you saw this article. This is in the Wall Street Journal. Anti-DEI activists target Goldman Sachs and JP Morgan Chase. There's been a vibe shift. We talked about it a lot here in Davos. A rebuke of ESG, a rebuke of DEI. Robbie Starbuck is out there going after companies. You now have a couple of activists going after your company.
Really?
Are you aware of this?
Well, bring them on. No, I'm not aware of it.
Well, that's what I was going to ask you in terms of what you think your approach to DEI should be, given that we've seen a whole number of companies effectively end these programs in large part under pressure. And by the way, it's worth pointing out, one of the first executive orders that President Trump put in place was to end DEI within the government.
Yeah. So I think, first of all, I don't like monikers, and it makes it sound like it's a binary thing of what you do. And so let me just tell you what we do, and what we've always done. It doesn't mean you're not going to change policies going forward. We've always done our own thing in climate. So we get criticized by people on the left and the right about climate. We've financed the biggest oil and gas companies, who've done a great job reducing their CO2, by the way. We're the biggest financer of solar and wind. And we finance companies, we finance Tesla at this point, we finance a lot of different things. And our outreach, and it's commercial. This is 90% for profit. We are going to continue to reach out to the Black community, the Hispanic community, the LGBT community, the veterans community. We have special programs for the disabled, Second Chance Initiative, and wherever I go, red states, blue states, green states, mayors, governors, and said they like what we do.
Right.
So we're not trying to pander to any which side or any which thing. Now, if you pointed out something that we're doing that's wrong, I'd change it at the point, and and we will make modifications going forward. But we're very proud of what we've done, and what we've done is lift up cities, schools, states, hospitals, countries, companies, and we're going to do more of the same.
So you're going to tell these activists to go pound sand, it sounds like.
I don't know which ones you're talking about. If they've got something that we're doing wrong, I'd listen to what they have to say.
I got to ask you about a topic I know you hate to talk about, but I got to ask because the president is all in on it, which is Bitcoin, potentially a strategic Bitcoin reserve.
Yeah.
You can now buy a Trump coin, meme coin if you can buy the Melania coin if you
Yeah.
like.
Yeah.
No, what do you make of this? Because this could be a true shift in terms of, by the way, talking about the strength of the dollar, I don't know what you think happens to the strength of the dollar if Bitcoin becomes our reserve currency.
Okay, we use blockchain, and I think there'll be real use for blockchain and stable coins. We have a thing called the JP Morgan deposit token.
Yep.
So you can move money. It's a JP Morgan deposit worth par wherever you go. I'm not going to talk about the Bitcoin.
You're not going to talk about the Bitcoin?
Not at all. You guys talk about plenty. Just like you used to talk about AOL all the time. I'm not going to spend much time on it.
Well, let me ask you this, though. Maybe it just speaks to animal spirits or speculation or something in terms of the markets.
Yeah.
What do you make, though, of the public market? People are betting. By the way, they're gambling on sports. They're gambling on meme coins.
What's that show, Casablanca? Oh, they're gambling in my shop. Really? There's been gambling going on for millennia.
But does it say anything about this moment?
I have no
in terms of the economy.
I have no interest in this particular subject. People are going to speculate. Some will win and some will lose.
Lastly, we always ask you the question, and well, it's the succession question, which is Doug Pinto or Daniel Pinto. I apologize, I called him Doug Pinto. He's going to be stepping down. You just mentioned him. He's been literally the if you get hit by a bus guy who takes over. How do you feel about him stepping down, and how long do you think you're really going to continue doing this?
Well, Daniel has been such a magnificent partner, and for the public, just to know, he started as a kid in Argentina at 20. He ended up running a little piece of Argentina, then running trade in Latin America, then running emerging market trade, then running global trade, then running the CIB, helped build one of the best investment banks the world has. And he's been a partner of mine. He's trusted by everyone around. He'll still be around. He's not going away. And then hopefully he'll stay as which we said he wants to, as a vice chairman after that, because he's got just enormous capability and stuff like that. But there's a time, and there's a time. And Daniel leaves a vacuum, but that's good because now other people have to fill that vacuum and give other people more things to do. I'm blessed to have great people. We're working on the succession, and we're convinced that we have a good one. You saw Jen Peepsack, who's another fabulous talent, who said she doesn't really want my job, I can't tell people what's going to want and not want. I always kind of worry about that a little bit. But she's also devoted to the company. Right. She's going to stay. That brings huge continuity because she's willing to work with any of the people that you would speculate are going to be a successor.
Would you ever, 2028 is around the corner.
It's about that.
For you?
Oh, I no. If you're
never
running for any kind of office now.
Is that really off the table?
Yeah. Well, no, you know me. I'm not going to make any promise to you. I will never make a promise to anyone, but I don't intend to do it.
Okay. Jamie Dimon, it's always good to see you. Thank you for coming.
Andrew, thank you. Folks, thank you. Mary, miss you, Becky.
We'll
miss
see you back
too, Jamie.
Thank
you very much.
Becky, back to you.
And Joe.
Thanks, Andrew. Earnings are just out from Procter & Gamble and Travelers, two more Dow components. Travelers, the insurance company, earning an adjusted $9.15 a share. That was well above what the street was expecting. Revenue came in line with forecast. You can see that stock popping on this news, up by 4.1%. We're going to have to check out where the Dow futures are after we see this. Looks like the Dow's indicated up by about 132 after some strong reports from some of these companies this morning. Procter & Gamble, another Dow component, also just reporting, and it's registering a beat on both the top and the bottom line. That stock right now up by 3%. So you're looking at some big gains on better than expected earnings that are coming through. That's going to be driving things. We've talked about how the markets are priced at these historically high levels. The only thing that you can hope for, the reason you expect more growth, is if these companies beat expectations, if they meet expectations and go into it. And that is what we are hearing this morning. When we come back, we're going to be speaking with Procter & Gamble's CEO, John Mueller, about the quarter and much more. Squawk Box will be right back. Procter & Gamble out with its second quarter results this morning, beating on both the top and the bottom lines. Joining us right now to break down that report is John Moeller. He is Procter & Gamble's chairman, president, and CEO. And John, thank you for being here this morning. That stock right now, your stock up by about 3% after after these numbers came in and better than expected. What was fueling things in the quarter?
We're seeing some reacceleration of top-line growth, both volume and sales, particularly in our biggest markets, North America and Europe. North America, we were up 4% on sales, and that was on volume growth of 3%. Europe up 4% on volume growth of 4%. And that growth is across the board. 9 out of 10 categories growing sales. We're building share. So the team is executing the strategy, delighting consumers, and the results reflect that.
So from where you see things, pretty strong economies both in the United States and Europe?
Yeah, reasonably strong consumer participation in the categories that we compete in. Also very strong in Northeast Asia. Obviously, China, the Middle East, a little bit weaker. But if you look at the broad regions, North America and Europe are our largest, and they're performing very, very well.
When it comes to China, that was an issue last quarter. You talked about it a little bit, what you'd seen with the sales slowdown there. Do you think that's because of a weak economy there? Do you think it's because Chinese manufacturers are kind of pushing their own brands at this point? What's happening? Is that a situation that evolves and eventually gets better?
It's getting better as we speak. So last quarter, you're absolutely right. We had sales that were down 15% versus a year ago. This quarter, the quarter we just completed, we were down 3%, so making progress. And some of our big brands that weren't growing, like SK-II, grew in the quarter. SK-II was up about 5% in China. Our baby diaper business is up despite declining birth rates and despite a market that's down. We're bringing lots of innovation to the marketplace in our hair care business, in our skin care business. So we continue to look at China as a source of mid and long-term growth. If you just look at the demographics, yes, you've got an aging population, but you also have a population that is growing as relates to income and is forecasted to add 200 middle-income consumers to their ranks by 2030. So it's a market we continue to invest in.
So let's talk through the idea of tariffs and the potential for trade wars. Tariffs, I think you all have done a lot to spend money in the United States to boost up manufacturing. Maybe you spent $6 billion to do that. So potentially it doesn't impact you for the tariff news in terms of what you'd be going back and forth. But China has spoken out pretty quickly and said that trade wars don't help anybody in terms of what they've heard in terms of threats from the Trump administration. Let's talk about tariffs where they don't matter for you, and then potentially if it blows up into something bigger, if there's a tit for tat with China. Maybe talk about what you've done to invest in the United States first.
Yeah, well, first of all, our product categories incent production proximate to consumption. The highest component of our cost of goods sold is delivery costs. And so for smart economic reasons, for a long time, we've been localizing our manufacturing base as much as we can. So that puts us in a pretty good place to start with. We also learned a lot, as many companies did during COVID, about the fragility of certain points of our supply chain. And as a result of that, increased its resilience by increasing the number of possible sourcing points. So that's helped us. And as you said, largely due to or enabled by the tax reform regulation of 2017, we invested a lot in manufacturing in the U.S. because it became much more profitable to do so. We invested in our organization. And the irony, as we talk about tax reform is we're paying more taxes today to the U.S. than we did in 2017. So it's worked out pretty well for everybody. We're fans of free trade, but we'll manage as best we can with those kind of initiatives at our back.
Do you worry, though, about any issues with the Chinese government convincing the Chinese people that maybe they don't want American brands if this does blow up into a trade war?
You know, the last time that I met with the Chinese ambassador to the United States, he started the meeting by telling me, my family wakes up to your brands, they go to sleep with your brands. Your brands are Chinese. We've worked very hard to weave our brands into the fabric of Chinese life. There are no guarantees, but generally, in our product categories, people really select brands, stay loyal to brands based on their performance. And so that's what we're primarily focused on. The rest is kind of weather, whether it rains or is sunny. Our job is to wake up and delight consumers, and if we do a good job of that, I think we'll be in a good place.
Let's talk about the dollar, stronger dollar. We just had Jamie Dimon who said stronger dollar is great because it means America's growing. But it can be an issue for international companies when they're dealing with the FX effects, the things you sell overseas, not being as valuable when you bring those profits and earnings back to the United States. What kind of headwind is it going to be in 2025 for you? What are you expecting?
Yeah, my friend Jamie, easy for him to say. It's the stronger dollar hurts us from a bottom line standpoint. We've seen an acceleration on the strength of the dollar in the last couple months. It had an impact on the quarter, though we over delivered. It's going to have an impact on the balance of the year. It's a headwind.
How do you handle that? What does it mean from an operations basis? I mean, because you're standing by your guidance for the full year, so you got to make up for it somehow.
Yeah, we had several years ago, as we were coming out of COVID, we had the combination of foreign exchange, commodities, and transportation cost escalation. Those three together take out 50% of our profits over a 2-year period.
Gosh.
The team offset all of that and more through their focus on productivity. And we remain focused on productivity, about $1.5 billion a year as a way to help deal with some of these things. And by the way, not only do they offset those impacts, we grew earnings, but they increased at the same time our spending on innovation and our spending on commercialization of that innovation. So I have a lot of confidence in this team. It's not easy. We'll have some bumps along the road, but we're going to continue the journey of innovation, of superiority, enabled by productivity, and that should take us through the day.
Sounds like that team deserves a raise, John.
Be careful, Becky.
John Mueller, want to thank you very much for being with us this morning. Procter & Gamble shares right now up by about 3.1%. We appreciate your time.
Thank you. I appreciate being on.
Let's get back over to Andrew in Davos. Andrew?
Hey, thanks, Becky. President Trump announcing a new joint venture yesterday called Stargate to build and grow AI infrastructure in the U.S. OpenAI, SoftBank, and Oracle plan to commit $100 billion to start, potentially up to $500 billion over 4 years. Microsoft listed as one of the partners to the new venture. Joining us now for an exclusive interview is Satya Nadella, Chairman and CEO of Microsoft. Good morning to you.
Thank you so much.
And it's so good to talk to you in the midst of all of this, because we're all trying to understand it and what it means, whether it's possible to get to $500 billion, and what it means specifically, I think, for your partnership with OpenAI, given that they had been using Azure exclusively, and now obviously are going to be on other platforms as well.
Yeah, first of all, anytime a company that you've sponsored and were essentially a seed investor in raises money from others, it's a good day. A good day for OpenAI and a good day for Microsoft and our investors. Look, our partnership continues. We'll be a tech partner to Stargate, but more importantly, our partnership with OpenAI, we talked about exclusivity. OpenAI APIs are exclusive to Azure going forward even, so nothing changes there. IP access to Microsoft continues, and in fact, because of this, there will be more IP, and so therefore we'll benefit, and we have rev share arrangements that are great, and also OpenAI committed in a very significant way to Azure consumption, and so we're very thrilled about that as well. So all up, as far as I'm concerned, this accelerates OpenAI's model work, which accelerates Microsoft's ability to go to market with those models and really grow our business.
Let me ask you this. We had one of your competitors on earlier this morning, Mark Benioff, who has been very critical of this partnership. And one of the things that he said was, this is a demonstration of a fissure between the two companies, that you are going to go off longer term and build your own frontier models, and that there's a disconnect or of some sort between Sam Altman and Mustafa, who you hired to run your AI program. Can you speak to that?
I mean, look, I think the partnership with OpenAI to us is a critical partnership. We love it. It's working. It's created a lot of value for us. And we plan to just continue forward with it. It's true that on Azure today, there are other models. There are open source models. We have our own small language models, and we'll continue to have all of that. Because customers at the end of the day are going to demand choice there, and that's fine, and we'll make sure we support it. But having a leading model on Azure exclusively is a great advantage to us, and it's good.
Let me ask you this. So I talked to Sam Altman at DealBook just about a month and a half ago now, and he says, I don't think we're disentangling, to your point. He says, look, I will not pretend there are no misalignments or challenges. Obviously, there are some. On the whole, he said that he thinks it's tremendously positive. What are the things where there's not alignment? One of the things I noticed in one of your filings recently is you actually put OpenAI as a competitor on your list, which I thought must speak about your ambitions long term.
Yeah, but more importantly, I think for us, one of the things that in fact Stargate is beyond is, Sam wants to continue with the scaling laws to build out more compute in order for him to train more models. And we have a ROFR, so he comes to us first. If we meet those needs, then we clear it. If not, he can go to these other providers. And so therefore, I think it works out well for Sam and for us. So this was an adjustment, quite frankly, that we made in order to support both his needs, while at the same time keeping the integrity of what we wanted as the strategic value.
You were investing $80 billion already. How much money do you ultimately put into this?
So this is where Microsoft is investing $80 billion in capital each year, and this year we're investing. And I'm not particularly in the details of what they're investing.
Okay, and so, but when you look at that $100 billion commitment, $500 billion potential, I don't know if you saw Elon Musk took to Twitter and said they don't have the money. The money doesn't exist, as if this is not really going to happen. What do you think of that?
Look, all I know is I'm good for my $80 billion. I'm going to spend $80 billion building out Azure. Customers can count on Microsoft with OpenAI models being there everywhere in the world, serving OpenAI models and other models. That's, I think, what I know.
One of the other discussions here in Davos, and even before Davos, has been this question of whether there's a wall, whether the scaling laws will continue apace. And Sam Altman has been out there saying that they will continue apace. Sundar Pichai has been suggesting that actually it gets a little bit more complicated sooner than we may imagine. Where do you land on that?
I mean, I think both are true, actually, because the reality is I don't think there's a wall. Things do get harder with scale. And interestingly enough, pre-training scale with, as the scale goes up, gets harder. But then what Sam and team have shown, even with O1 and now O3, is this inference time compute and the ability to really have inference scaling compound in some sense the effects of scaling laws. So what used to be a 6-month doubling, maybe a 3-month doubling. So I would say scaling laws are very much alive. And the question now is, in fact, if anything, how do you take advantage of all this capability building to deploy real AI systems?
Where are you on your own frontier models? Obviously, you did hire Mustafa. You have your own efforts that are underway. What does that look like? When will we see that? And what do you think that ultimately does to, you've done remarkably with OpenAI, and that may turn out to be a spectacular investment unto itself. but how you think this whole landscape shifts at some point.
I mean, I think just to be very, very clear, we have access to OpenAI IP, so we're not going to do things twice. So we are very, very happy with the access we have to OpenAI. It's just that we do have other models that we have built. We built the public model that we talk about is 5, which is an SLM, a small language model, 5.4. It's best in class for its parameter size. And we have other models too. But to me, the more important thing for me is to build value on top of OpenAI. So we have a fantastic post-training stack. We have done even a bunch of mid-training in different languages. So that's where our focus is.
When you think about the scaling laws, how much of all of this is simply about processing power? If you can buy enough NVIDIA chips today that you too can create a spectacular large language model. I look at what Elon Musk has done in the last 12 months, which is just remarkable. Built out a whole stack. He got a lot of NVIDIA chips and he's done it. How much of it is about the processing power versus the algorithm?
I mean, look, it's all of it, but compute is intelligence. But on top of compute, you need the algorithmic breakthroughs too. I mean, so to some degree, if you look at even why the scaling laws are working, is because we're getting good at being both using algorithmic changes as well as data and data usage and compute efficiency. And that's where the capability is. So when we say scaling laws, it's just not compute. In fact, it is faster than compute growth. So if the compute is gone 10x, the capability is 100x. Why is that? It's software.
One of the big questions, and I've heard it from a bunch of Chinese AI executives here, they say that their AI programs are 97, 98% of what some large language models in the US can do. And they claim they're doing it with chips that are 5, 10 years old. We had Dario Amodi from Anthropic here yesterday. He said, I don't know if that's totally true because they got a lot of NVIDIA chips early before the government put certain things in place. And they might have gotten other chips, from around the bend, if you will. What do you think is happening in terms of how you think about AI in the US and China and this chip issue?
Yeah, first of all, I'm going by the papers they're publishing, and it's very impressive. I mean, to see the DeepSeek new model, it's super impressive in terms of both how they have really effectively done an open source model that does what is this inference time compute, and it's super compute efficient. So I think we should take the development out of China very, very seriously. And it also speaks to perhaps what I think is going to happen now, which is the model layer itself will get commoditized. And what's going to be really important is obviously a great world-class infrastructure underneath and then world-class applications on top. And both of those places is where most of the enterprise value gets created.
Big regulatory question for you. Now that we have a new administration, you went down to Mar-a-Lago, met with President Trump. Lina Khan was very much against a lot of the kinds of transactions you were looking at, investigating even the transaction with OpenAI, for example. Do you see a lot of M&A now ahead of you?
Well, I mean, to me, always, whether it is LinkedIn or GitHub or the partnership with OpenAI or Activision,
I was going to say,
we're all done because we felt we could be better owners, because we could do things on the technology front, on the go-to-market front, and then on both sides, the shareholders could benefit. And so we'll obviously be definitely open to anything that fits that criteria, but fundamentally, we have to have that brand permission, and we have to have a vision that we can actually be a better owner of that asset.
What did you talk to the president?
It was a great conversation on a couple of different topics. One, of course, on AI and energy and the nexus there, and the need for the United States to build out more of the energy infrastructure and support. We talked about cyber, that was the other topic. So yeah, broad range of topics.
What do you make of the number of tech CEOs who have either gone down to Mar-a-Lago or were at the inauguration lined up behind the president in better seats, frankly, than some of his cabinet members?
I mean, having a government that wants to talk to business leaders as one of the constituents is always welcome, right? I mean, at the end of the day, I think we as a nation are better off. I'm not saying that it needs to be only about business. It needs to be about the country and all the constituents. But at the same time, having an open dialogue on what we think and having effectively a pro-growth agenda is a healthy thing for the country.
What do you think the American public should think of it? Because I think that there's some people who look at it very optimistically, the way you just approached it, and others say, oh my goodness, they're going to kiss the ring, there's an oligarchy. something like that?
Yeah, I mean, I hope it's not an oligarchy. I'm a citizen of the United States, where I hope we elect people to be the government of the country, and I think that's the way it should be. And everybody's vote counts the same.
Right. One other question I had, given that we're talking about AI and the energy consumption issue, is for many years we talked about energy and climate here. You've made pledges. A lot of other companies have made pledges. I think you're going to be trying to beat those pledges, or still think you can. A lot of other companies, I think, can't. What do you make of what's happened?
Yeah, I mean, I think one of the new growth formulas for GDP growth anywhere in any country, I think, is going to be what I describe as tokens per watt per dollar, right? That's the way to think about that energy and compute and intelligence nexus. And so in that context, we have contracted something like 36 gigawatts all around the world of energy, and we plan to continue with our goals to 2030 and feel confident that we can get there with both a combination of what we source on the grid and behind the meter, and so we feel pretty good about making progress.
Final, maybe humanity or existential question about labor and life with AI. Dario yesterday was saying that he thought, so many jobs could effectively go away very soon. I mean, we're getting very close to that. Mark Benioff was saying that he's actually stopped hiring software engineers because so much of the software is being written by AI. What's Microsoft doing, and what do you foresee?
I think for sure there's going to be productivity increases, because in some sense AI does really help reduce the drudgery in a lot of our work. In fact, talking about software development, when my first belief in all this technology came when I saw GitHub Copilot and what it did, because the joy of programming was something that was brought back because of AI helping me with the task in hand. So I think what AI does, quite frankly, is simultaneously reduce the floor and raise the ceiling for all of us. So that means the expertise level inside of an organization goes up, productivity goes up. So that means there will be, like, take software development. I think there'll be 1 billion software developers. And you could say, wow, does the world need 1 billion software developers? Look at the tech debt. You look at every IT organization and say the number of apps that they need to refactor, rewrite, build new. I think 1 billion software developers is a good thing for the world.
So no job losses.
I think there's going to be real new skilling, real changes in jobs. Even in software engineering at LinkedIn, for example, we've changed what used to be front-end design product into full-stack builders. So think about it, right? So the role itself, the complete scope and scale has changed. That, I think, reimagining of the labor force and the scope and scale, I think, is what's going to happen.
Satya, thank you for having this conversation with us, for staying out here in the cold. I want to thank you very, very much, especially for coming on and discussing this deal as it was announced. So thank you so much.
Thank you so much.
Becky, I'm going to send it back to you in New York.
Okay, Andrew, thank you very much. When we come back, Uber CEO Dara Khosrowshahi will join us to talk about business under President Trump. Uber donated $1 million to his inauguration. We will ask him about that and much more. Plus, Democratic Congressman Ro Khanna of California will be joining us. His district, of course, is the heart of Silicon Valley. We're going to talk to him about what he sees happening with the new administration. Squawk Box will be right back. Welcome back to Squawk Box, everybody. We've been watching the futures this morning. Dow futures right now indicated up by close to 150 points. We've gotten some strong results from many Dow components this morning. S&P futures are up by 28, the NASDAQ up by close to 200. Let's check on some of the companies that have reported those results this morning and see why you're seeing some of these green arrows this morning. First up, consumer products giant Procter & Gamble coming in with better than expected profit and revenue for its latest quarter. Results got a boost from strong sales of family care products. We spoke with the CEO, John Moeller, who talked to us about how he's seeing demand across the board up very sharply in not only the United States, but in Europe as well. And you can see that that is stock that's indicated up by about 3.5%. Some of the problems they saw last year in China, or last quarter in China, seem to be resolving. Sales were down, but not nearly as much as they had been in the previous quarter. And Johnson & Johnson beating estimates both on the top and the bottom lines too. Quarterly earnings coming in at $2.04 a share. That was 3 cents above estimates. The company was helped by improved sales of cancer drugs and medical devices. They did say that that strong dollar is going to be an issue, and that's a headwind for the rest of the 2025 that's anticipated. We saw some very rapid appreciation in the dollar. That stock right now off by about 1.5%. And shares of GE Vernova bouncing back off earlier session's lows. The provider of energy technology saw revenue miss consensus forecasts. GAAP earnings came in at $1.73 a share. It's unclear how that compares to the estimates of $2.29, what's included and what's not included. You can see GE Vernova shares up by about 3 cents. Then there are Netflix shares, and that is a stock that's soaring this morning. The company's fourth quarter beat estimates on every metric. Revenue was up by 16% to $10.25 billion. Earnings more than doubled on a per share basis to $4.27. That was 7 cents better than the street was expecting, and the company added, get this, 18.9 million subscribers. That was 10 million more than the street was expecting. The only disappointment was the first quarter revenue guidance. It came in a little below what the street was expecting, but that stock is up by more than 14% this morning. It was trading just above $1,000 earlier. As a result of its confidence in demand, Netflix also says that it's raising prices by anywhere from $1 to $2.50 for each of its plans. Andrew, I'll send it back over to you.
Thanks, Becky. President Trump's recent executive order could pose some challenges, we'll see, to electric vehicle mandates, potentially impacting Uber's ambitions to meet its zero-emission goals. That's one of the topics we're going to talk about with Derek Khosrowshahi, who's Uber's CEO. It's great to see you, sir. In from Washington, you were one of the few CEOs who made it to both.
Yes, both very important events, and I wanted to make both.
Before we even get to EVs and everything else,
yes.
I'm curious, you threw a big party.
Yes,
you were at the inauguration.
I heard it was the best party in town.
Uber gave $1 million to the inauguration.
Yes.
And you personally
yes.
gave $1 million to the inauguration.
Yes.
You had not done that before. Now, Uber had done that with Biden.
Yes.
But I'm curious about your personal decision to do that. And I will note that I was thinking Tony West, who's your great legal officer, brother-in-law of the vice president who lost the election. What was that conversation?
Well, listen, from our standpoint and from my standpoint, we want this administration to succeed. When this administration succeeds, the country does well, business does well, and we have a very broad envelope in terms of consumers, in terms of drivers, and we want to show our support as it relates to the administration, and we want to engage with the administration on things that our drivers care about in terms of the cost of living, in terms of the access to transportation and vehicles, et cetera. And, it's a beginning, hopefully, of a dialogue.
What do you think, though, just of this larger conversation that people are having about the role of CEOs being engaged and involved in this administration, unlike any other in a very, very long time?
I think that having a voice as it relates to the future of the country and the economy is a positive, right? When the economy does well, the country does well. We're an economy that is the envy of the world.
Right.
And I think that a big part of that are the CEOs and the leaders who are making the everyday decisions, and having a strong relationship and an open communication channel with the administration, I think is very healthy.
What happens when the president does things that you don't like? And I'm thinking about these EV mandates and what may happen to them, given where you are and where he is.
Listen, those are his decisions, right? And so we work with every administration And there are certain decisions that any administration will make that we agree with and some that we don't agree with. The fact is with EVs is that they are actually a great product. And so we see EVs in our fleet growing. Our drivers are moving over to EVs about 5 times faster than the general public. They're great cars. Our riders, our passengers love them.
Right.
So it's the economy's working, which is if you build a great product, then the marketplace will take care of it, and EVs will continue to be a higher and higher percentage.
Well, what happens? I mean, if this gets repealed, and when I say the tax credit, the EV tax credit, the likelihood of getting repealed, what does that do to the ambitions that you've set for?
I think that our EV penetration could slow down to some extent. We'll see. We continue to lean in. So, for example, drivers who are driving EVs on our platform make more. We reduce our take rate. We're working with industry to get discounts to make EVs more affordable. So we're going to keep doing what we're doing. And I think anyone who bases their business plan based on government subsidies is not doing the right thing. Sure, they help, but the fundamentals for us continue to be there, and we'll keep running our business as we have before.
Are you campaigning either privately or publicly to continue?
No. No, I don't think we need those kinds of assistance.
Calling Elon? Are you talking to Elon to try to get to the president to say, hey, because you would think that he would want him, but he actually, well, in a way, he probably doesn't want him because he thinks that he's already in such a pole position.
We're in a very different position, but we don't need subsidies for EVs to succeed at Uber, and we continue to increase them because they're actually a really good product, and of course, they're good for the environment.
Autonomous vehicles.
Yes.
Feels like this is the year of autonomy for Uber.
Absolutely.
You made a announcement at CES in terms of a partnership with NVIDIA. How quickly does all of this happen? And what do you say to your drivers? Because eventually, maybe not too soon, not too far away, they are going to start to compete with humans.
Well, I think that the technology development as it relates to autonomous is happening at an incredible pace. Obviously, we have a relationship with Waymo, with NVIDIA, but a number of other companies, Wave, WeRide, Wabi, and Aurora in trucking as well. This is a technology that is going to hit prime time, and it's going to make for safer streets.
And what do you think the timeline is now? I mean, it feels like finally we're talking about something realistic.
So I think that the technology will be ready for prime time between now and 2 years from now. Okay, it's moving very quickly, especially with some of the newer kind of 2.0 newer generation companies. The commercialization of EVs is going to take much longer. The bill of materials, the cost of the sensors, the cars, et cetera, is too high right now. And we think that our partnering with AV developers will speed up that commercialization because we can bring them a lot more business much faster. We have fleet operations in cities in which we operate. And you'll be able to see it live in Austin, Atlanta early this year.
Okay, if I said to myself, though, that I was a potential Uber driver, that I was going to go out and buy myself a Suburban, and I was going to try to amortize that Suburban over the next 5 some odd years, 10 years, in driving for Uber, would that be a good idea?
I don't think you are going to feel anything as it relates in the next 5 years. So, for example, in San Francisco, our business continues to grow, and Waymo's growing. Just the overall envelope of the business is growing faster. And I think we will operate in a hybrid network, combination, by far predominantly human drivers, and then some AVs feathering in over the next 10 years. 10 years from now, things may be different, but between now and 10 years from now, the humans are going to have plenty of work, and AVs are going to work their way into the system.
Okay, final question, and it's a conversation Becky and I have all the time. Congestion pricing in New York City.
Yes.
You're now a New Yorker again.
I am.
So what do you think? Do you think it's working? Are you happy or unhappy?
Well, I take Ubers around, so
you pay $1.50 extra.
We do.
I do.
Yes.
If I'm in a taxi at 75 cents.
Yes. Yes.
I'm a cheapskate, so I'm very aware of these numbers.
You know your prices. It is absolutely reducing traffic over the bridges and tunnels. It has not had a significant impact in terms of traffic in the city.
Okay.
It's too early to tell right now. Things are moving over too quickly, and right now there's a holiday period that has quite unusual traffic patterns. So I think it remains to be seen. We supported congestion pricing because our cars, our drivers, have a huge amount of utilization and utility within New York. And I think to some extent, congestion pricing is pricing out the low utilization vehicles And we think that's a good market.
You're going to know whether it's working before just about anybody else, given the data you have.
I'd say so far
come
so
on
good,
back.
but it's too soon to tell.
Okay.
Yeah.
Dara, thank you.
Thank you
very much. Becky, back to you.
Okay, thank you, Andrew. When we come back, California Congressman Ro Khanna will join us on his bill with Senator Rand Paul to repeal the TikTok ban. Plus, a big hour is still ahead this morning from Davos. We're going to be hearing from British Finance Minister Rachel Reeves. Also, David Solomon, the CEO of Goldman Sachs, and Coca-Cola CEO James Quincy. We'll be right back. It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Andrew Ross Sorkin, who is at the World Economic Forum in Davos, Switzerland. Joe is off sick today. Among today's top stories, healthcare giant Johnson & Johnson reporting fourth quarter results above expectations. The company also forecasting 2025 adjusted earnings per share that came in above what the street was expecting. That stock right now down by about 1.6%. President Trump says his team is looking at imposing a 10% tariff on China starting as early as February 1st. Trump tied the move to his claim that China is sending the drug fentanyl to Canada and Mexico. And speaking of the president, he announced a joint venture with OpenAI, Oracle, and SoftBank to invest billions in the United States. In the United States AI project that's dubbed Stargate. Those companies have committed $100 billion, which reportedly includes projects already announced under the Biden administration. They say they will spend up to $500 million over the next 4 years. Taking a look at the market so far this morning, we are in the green. Dow futures indicated up by almost 150 points. We've seen that gain through the morning as we've seen some Dow components report. S&P 500 looks like it would open up by about 30 points here, and the NASDAQ is now indicated up by 200 points. We've also been keeping an eye on Treasury yields, and it looks like those yields are a little lower this morning. The 10-year's at 4.56, the 2-year is at 4.27, and then you have Bitcoin prices, which have risen pretty steadily. They're up to $105,147 this morning. Andrew?
Thanks, Becky. Ministers from the United Kingdom are here in Davos meeting with business leaders, pitching them on private investment in the UK. Joining us right now is Rachel Reeves. She's the UK's Chancellor of the Exchequer. Good morning to you.
Good morning.
I have so many questions about tariffs, about all the conversations that are happening around Davos. But I'm just curious, you come here, you're meeting with lots of US companies, frankly, to try to bring them to the UK. Where does that stand?
So my government is just 6 months old. We were elected in July last year, and we had a clear mandate in that election victory to grow the economy. To grow the economy, to make working people in Britain better off.
Right.
And to get that economic growth, we need more investment into the UK. And so my message to US investors and global investors too is Britain is open for business. We want your investment. We're looking to reopen some of those trade links and investment links to bring more good jobs to Britain.
And you're meeting with folks like Goldman Sachs, KKR, Morgan Stanley, and others. I'm curious, since the other big conversation here is tariffs, both in terms of what the U.S. is gonna do, we'll see, and whether there's gonna be retaliation. What you think of that?
Well, first of all, I won't speculate on
Right.
what may or may not happen. But I do understand that President Trump is concerned about countries that are running a large and persistent surpluses on the trade balance with the US. That's not the case for the UK. We are not part of the problem here. We, the UK, increased trade with President Trump last time he was in office. And there's absolutely no reason why our two great nations with such a strong and special relationship can't increase those flows of trade once again.
I'm curious, talking about two countries that may not have that special relationship. I'm thinking of the U.S. and China. You were just in China with the Vice Premier. By the way, the Vice Premier was here, spoke about this idea of protectionism leading nowhere. A trade war has no winners. What were your conversations in China like?
I went to Beijing and Shanghai to try and get a better deal for UK financial services firms that operate in China, like HSBC and Standard Chartered. And I was able, during that economic and financial dialogue, to secure licenses and quotas for big UK banks and asset managers that do business in China. That's in the UK's national interest, and that's what I will always do as Chancellor of the Exchequer. Represent the interests of my country on the global stage, whether that is improving the ability of British businesses to export to China, improving our trade links with the European Union, or indeed strengthening the ties that we have with the United States, our biggest single trading partner.
Let me ask you about this. I'm sure you saw this. Elon Musk has been attacking your government on X. You've seen him. He posted just last week, he said, America should liberate the people of Britain from their tyrannical government. What do you make of the influence of Elon Musk, and what is the reaction to that in the UK?
Well, Elon Musk is entitled to his opinion, but he's not one of the people that votes in a UK general election. We had an election just over 6 months ago. We received a huge majority, a huge mandate for the change that we're bringing. That change to grow the economy and make working people better off. Those changes to improve our schools and our health system. And that's what British people voted for. And that is what our Prime Minister, Keir Starmer, and me as Finance Secretary, as Chancellor of the Exchequer, are getting on and delivering.
Right. Let's talk about the finances, the economy in the country. And I'm thinking about the interest rate environment. You're probably not going to be willing to totally go there. But, there has been a global bond sell-off. And I would argue that the UK has been hit as a function of that.
Well, just before we began this interview, there was an update on what's happening in global markets. And the UK is not immune to what happens in global markets. But, I'm not going to provide a running commentary. What I would say, though, is that in the budget that I set out in October, I put out the fiscal rules that this government will operate within. And those fiscal rules are to pay for day-to-day spending through tax receipts and to get our debt down as a share of our GDP. Those fiscal rules are the bedrock of economic and fiscal stability. They're non-negotiable, and we will continue to meet them.
Chancellor, thank you for coming in today.
Thank you so
very
much.
Appreciate
Thank
it.
you.
Becky, I'm going to send it back to you.
Okay, Andrew, thank you. When we come back, Silicon Valley Representative Ro Khanna will join us on the ongoing TikTok saga in Washington. He's introducing legislation to try and overturn the ban. We will talk to him about that and much more. He's also got Silicon Valley in his district, and we'll talk to him about what we've seen with some of these tech leaders heading to Washington. We'll also hear from the CEO of Goldman Sachs live in Davos, David Solomon. Stay tuned, you're watching Squawk Box, and this is CNBC.
Deal, I think, is this, and I've met with owners of TikTok, the big owners. It's worthless if it doesn't get a permit. It's not like, oh, you can take the U.S. The whole thing is worthless. With a permit, it's worth like $1 trillion. So what I'm thinking about saying to somebody is buy it and give half to the United States of America, half, and we'll give you the permit. And they'll have a great partner, the United States.
That was President Trump's yesterday speaking about TikTok. That service briefly went dark in the United States over the weekend before being restored. President Trump now says that he would be open to Elon Musk buying the app if Musk wanted. Of course, he signaled over his shoulder and said, maybe you'd like it too, Larry. Larry Ellison standing next to him from Oracle. Joining us right now and on this story and much more is Democratic Congressman Ro Khanna of California. His district is in the heart of Silicon Valley. In fact, on Monday, the congressman co-introduced the Repeal the TikTok Ban Act. And Congressman, thank you for being with us this morning. Let's talk about this. This act that you introduced was along with Rand Paul, the senator from Kentucky. It is bipartisan, it is bicameral, and it would overturn a law that Congress voted for overwhelmingly last year. What's changed, and do you think you actually have the support to get this passed?
Well, millions of Americans spoke out when TikTok was going dark, saying this is our livelihoods. I talked to a mom of 4 kids who was broke and relies on the app to make $60,000 a year. I talked to people who use it to pay rent, and there was outrage. And I think that this has captured the attention of many members of Congress and senators. And by the way, many of them used TikTok to campaign in just the last election. So I think the attitude is changing.
Congressman, the lobbying that was coming from the millions of people who use TikTok started well before the original law was passed by Congress overwhelmingly. In fact, there were times where Congress's switchboard was getting shut down by the numbers of people who were calling in. At that point, Congress voted for it, and those who were supporting it said that they thought it was a spying device that can or could or would be used against the American public, and they thought it was a security risk. Has that changed?
Well, the volume has gone 10-1. I mean, I voted against the original ban, as did Senator Rand Paul, but the amount of people talking then were a small group coming to the Capitol. We got 1.3 million people to sign a petition to stop this in 48 hours, so the intensity is far more. You also have the hypocrisy of many of the same members of Congress and senators who voted for the ban telling their campaign staffs to maximize their followers in this past election. But look, there are legitimate security risks. The question is, can you mitigate them and prevent them without banning the app? And I will work with President Trump and Michael Waltz, who I know well as National Security Advisor, on a solution. We can get the data stored in the United States. I would love to see 50% ownership by the U.S. There's already 60% U.S. investors, and we can make sure that it's a crime to have any algorithmic interference from a foreign adversary. But let's work on a constructive solution, and frankly, I give the administration credit for being open to work on that.
The question has always been whether the algorithm could be controlled by China. You just said that you wouldn't go along with that, but that has been something that the Chinese government has not been willing to bend on or to acknowledge. So you're in favor of repealing the ban. Is that with the understanding that they would give up the algorithm, that the United States would own 50%, or you just don't want to mess with this at this point?
Well, I would want to have some safeguards. I think the ban was overbroad, but I think we would need at least a law saying that the U.S. executives of TikTok will be held liable, civilly and criminally, if there's any evidence that they're colluding with the Chinese Communist Party to tinker with the algorithms. And you can pass that law. Now, if those executives then face a choice where the Chinese Communist Party tells them to change something, then they would be in violation of the U.S. law, and they'd have to face the consequences. But my problem with the ban was it was overbroad. There was no evidence actually that this was happening in any systematic way. It was a hypothetical, and why not try to resolve it like we're hopefully going to do in the next 75 days?
I think Andrew has a question from Davos. Andrew?
Congressman, I'm so glad to hear you say this, because I've been making this argument for a very long time that we haven't actually seen real evidence. Does that mean that the American public and the Supreme Court has been lied to?
Well, look, Andrew, we have a history in this country with national security of times of overreach. We had it with FDR, with the Japanese internment camp. We had it during communism with McCarthyism. And my view is that this was a collective march of understandable fear with the Chinese Communist Party, but we just passed a ban without really thinking of the ramifications of 170 million Americans, and there were narrower ways to do this.
Right, but Congressman, the reason I mention this is we had people come on our air, your colleagues and peers, and say not just that this was a prospective threat in the future, that was always on the table, but that this product was being misused, meaning effectively the government was controlling this company, was asking this company to do things and surveil people and do things that they were not supposed to be doing. And it sounds like you were saying, given that you had private access to a lot of these meetings, that part may not have been true.
Without going into any obviously sensitive briefings, I am of the belief that there has not been any public evidence or any real reason to believe that there's been systematic algorithmic interference by the Chinese government. And by the way, people who are actually on the app, who are not just listening to a few Beltway DC folks, would see that. I mean, spend a day on TikTok. It may not be the best thing to do, but at least spend an hour or two and then make these decisions. And the hypocrisy, again, I want to just point out, because everyone was using it to campaign. So I do think that this is going to be now resolved, and in my view, we jumped the gun.
Congressman, I do want to point out, TikTok has admitted to using its app to spy on journalists in an effort to try and track down their sources. That maybe you think that was an isolated incident, but again, you have status and clearance that we don't. You don't think that there's any risk here?
Well, look, if they did that and admitted that, there should be penalties for that. None of the social media apps, of course, have had clean hands. I mean, there has been allegations of foreign interference on other apps. There's certainly been allegations of data breaches. Data brokers are selling American data to the Chinese. So if we want to have a strong data privacy app law, let's do that. If we want to have a strong law making it illegal for any interference by an adversary on algorithms, let's do that. But to just ban the app is what went too far, and I don't think the evidence justified that, certainly in the public record.
Do you have problems with China continuing to own the algorithm?
I would like to make sure that the U.S. control of the algorithm is in the hands of U.S. executives, so that if there's something that happens, China can't say, you know what, we don't like this Ro Khanna guy. He's always criticizing us on a $1 trillion trade deficit. Let's manipulate the algorithm so none of his posts talking about the trade deficit come up. And if there is any evidence that that is taking place, then find and sue the TikTok executives, or even hold them criminally liable. And people say, well, how? Well, if they do that and we can't enforce it, well, then you can start to talk about a ban after you've had evidentiary hearings and you've proven some of this case. But right now you're going on mostly hypotheticals and a few isolated cases.
All right, Congressman, let's talk about your district. You are in the heart of Silicon Valley, and so many of the technology leaders from your district and nearby your district have made their way to Washington recently. The inauguration was filled with tech leaders. You've made some comments recently that you said you know tech moguls, you talk with them regularly, and you think they're forming a dangerous oligarchy. You want to talk a little bit about that?
Well, I don't think I used those words. When I was at the rotunda, I felt like I was back in my district. Now, I would say Silicon Valley has become the ultimate swing state, and my party needs to be for innovation, for technology, but we need to be for innovation and technology, not just for the chosen few, but that's going to harness the potential of every American in different places. What I have said is that there's a dangerous alliance of wealth and power, that too many people are putting in too much money into politics, but we have to call out both sides. I mean, Kamala Harris had more billionaires supporting her than Donald Trump. So let's overturn Citizens United. Let's get the billionaires out of politics in terms of our elections, but that's a broader issue.
But you're excited about innovation and technology and ways to unleash that?
Absolutely. I think our party has to get back to being the party of the future, party of innovation. Look, President Trump was talking about manifest destiny. It's a 19th century idea, and we're not going to go conquer lands, and just drilling for oil is not what's going to make us the nation that leads in the 21st century. My party should say we're going to lead in innovation. We're going to lead in new technology, but we're going to do it in a way that not all the wealth is just coming to my district, $12 trillion. We're going to help people in the working and middle class prosper with this technology. And that's, I think, it has to be the Democratic contrast to President Trump, and we got to win back some of these people in technology. Many of them were Democrats. It's now, unfortunately, like I said, a swing state, but I think we can win many back.
But your point, Congressman, was that your party alienated a lot of them.
Some of them we did. I mean, look, I think some of the fundamentals of celebrating innovation, celebrating entrepreneurship and technology should be central to the Democratic Party. Now we can say that there are too many people who have been left out of the globalization and technology revolution. That's just a fact. We can say income inequality is gone. We've gone in America from 53rd to 128th. And we have to figure out, when you're talking about Galesburg, Illinois, or Milwaukee, or Johnstown, how we're going to bring innovation to lift up those communities and economic growth. And our message should be, we're the party of growth and innovation, but we want it for everyone, not just for sort of the 5 or 6 people sitting on stage behind President Trump. But that doesn't mean that you reject innovation or you deny that some of these are innovative companies.
Congressman Ro Khanna, want to thank you for your time this morning. Hope to see you again soon.
Appreciate it.
Thank you. Andrew?
Thanks, Becky. Coming up next, Goldman Sachs' CEO David Solomon is going to join us right here at the World Economic Forum in Davos. Stay tuned. Squawk Box coming right back after this.
Welcome back to Squawk Box right here on CNBC. The futures have been in the green all morning. We've actually picked up steam across the board. Dow futures now indicated up by about 160 points, and NASDAQ indicated up by over 210 points. You've got the S&P futures up by about 35. This builds on the gains that we saw yesterday. Yesterday, the Dow was up by about 530 points. Andrew?
Becky, thank you. We're going to get to our next guest. We're talking capital markets, so much more. Joining us right here in Davos, Switzerland, is David Solomon. He is the chairman and CEO of Goldman Sachs, of course. It's nice to see you, sir.
Thank you. Thanks for having me, Andrew.
We're all
and
trying.
Becky, we miss you, Becky.
We miss Becky. We miss Joe. We're all trying to get the pulse of what's really happening here. And I know you've been here since Monday. I was saying before you came on, you've been part of the inaugural weekend. I know you weren't at the inauguration, but there's been a whole bunch of CEOs, including Derek Khosrowshahi, who was just here, who did we call it the double dip. They've gone to both. What do you make of just the reaction to what's happening in the U.S. and how that's going to impact the economy?
Sure. Well, first of all, the U.S. economy is in pretty good shape, Andrew. You know, as we head into this new administration. But I think the thing that I'm encouraged about, and as I talk to clients, I'm finding clients are really encouraged about. It seems like and this is true in the US, it's true with the new administration, but I'm also hearing it in my meetings here as I'm talking to clients from Europe, et cetera. People are focused on growth. And if we can run a more growth-oriented agenda, if we can do some things that free up capital investment, especially private sector investment,
Right.
that is a good path for us. And I think people are optimistic, and it's not going to be a smooth, perfect path, but people are optimistic that we are going to run a more growth-prone agenda. We're going to free up some investment. We're going to unlock the private sector a little bit more, and that's got to be constructive. And that is the best path for us.
Do you think that's already built into the equities market? Because we are at historic highs on a relative PE basis when you start to think about, a new term of a new president.
I think it's hard to dispute the fact that equity multiples are high. And you've asked me these kinds of questions before when I've been on with you, and I've always said I'm a very bad predictor of equity markets up and down. But I think the equity markets exhibit a sense of optimism at the moment, but they also exhibit a sense of optimism around growth in technology, and particular, this AI wave. And of course, it's not going to be a straight line, but some of the technology we're seeing, the opportunities for that technology to improve productivity very, very meaningfully, I think are really extraordinary. And I think that optimism's in the market too. So yes, there's a little bit of a change in policy that's creating optimism and has put us in a little bit more of a risk on, mode for assets. That's affecting equity multiples. But I also think you're seeing real changes in technology that are advancing us economically in ways that I think have the potential to be quite positive.
How do you quantify the sort of new regulatory landscape in terms of what that can do to multiples and things like that? If all of a sudden there's going to be a wave of transactions, and I know you've talked about that prospect, or a wave of IPOs.
Yeah. So look, I think one of the things that you have to recognize, the market runs ahead. The market looks forward. And so we are coming off of a very, very tough regulatory environment across all industries. One of the things that was interesting to me last spring was at an event with a very broad group of CEOs. And when asked broadly across all industries, what's the number one thing affecting the strategic execution of your business, 67% said regulatory kind of program. So the change in that is something that I think can be quite constructive, but it's going to take time. People are policy, you have to get people in place, and it's going to take time. How do you quantify it? I think it's hard to quantify, but it can have a real impact on growth. By a real impact, 0.5 percentage point of growth, if we can just unlock a little and have a little bit more M&A activity, a little bit more of the opening up of the capital markets, I think that can be quite constructive.
We have Bill Ford here from General Atlantic, and we were talking about the prospect for exits, both in the IPO market, but also all of a sudden strategic buyers that might actually be able to buy some of these assets that are owned by private equity that have been sort of traded among private equity firms for the last decade, but with no real exit out. Are you already hearing about deals like that?
There's no question that the private equity venture community has been on the sidelines for the last couple of years. And I would say from what we see inside the organization, the activity levels, kind of the lineup of things that people want to bring to market, should allow us to see a meaningfully increased pace of deal activity in 2025. I've talked a lot, Andrew, about the fact that equity volumes and IPO volumes in particular have run well below 10-year averages. My expectation in 2025 will get back to 10-year averages at the point.
Tariffs. We were also talking to Jamie Dimon. Mary Erdos was talking about they created a war room, apparently, at JP Morgan to look at all of these executive orders that Trump is putting out to try to assess what they mean for clients, tariffs, of course, being one of them. How do you even advise a multinational business today about the tariff issue?
So it's complex, and it depends, where they sit and where they are. And I think one of the things that we all have to recognize is that this is going to be fluid. And so I think for a lot of CEOs that we're talking to today, they've been thinking about these things for a number of years. This is not new, on the agenda of policy discussion. The question is how quickly and where. And, I think it's uncertain. I know there's a lot of talk. And
you're an investment banker and a negotiator. Trump is a negotiator.
Absolutely.
You usually have a good sense of just how these negotiations go. What do you think this turns into really?
I think it turns into a rebalancing of certain trade agreements over time. And I think that rebalancing can be constructive for U.S. growth if it's handled right. And the question is how far, how quickly, how thoughtfully. And there's no question. Look, he said it blatantly, and others in the administration have said it blatantly. Some of this is negotiating tactics for other things other than simply trade, and some of it is trade balance. And I think that's important.
Right.
I think used appropriately, it can be constructive. I think the dollar is super important in the context of kind of the strength of the U.S. and U.S. preeminence. And so I think this is something that's going to unfold not just in the next couple of weeks. This is going to unfold over the course of the year.
Right.
And we have to watch it closely.
Becky's got a question for you.
Hey, David, yesterday we had Peter Navarro on and had a long conversation about these tariffs. And I think a lot of business leaders look at this and think this is the art of the negotiation to a certain extent. But if you talk to Peter Navarro, or if you talk to Stan Druckenmiller, who we spoke with earlier in the week, they are counting on some revenue potentially coming out of this. And those revenues are going to be pay-fors to not only extend the 2017 tax cuts, but perhaps enhance and offer other things. President Trump made a number of promises on the campaign trail about no taxes for tips, any number of other areas that they would like to pare back the taxes that Americans are paying, but you got to pay for it some way. We've been watching higher yields in the credit markets and treasuries, and I just wonder how much of it you think is the higher yields that we're watching sticking inflation, how much of it is concerns about our debt and deficits, and where all of this revenue is going to come from. What you're anticipating this year from credit markets and from the buyers of those treasuries.
Yeah, so I think, Becky, look, I think you're asking the right question. The answer is, the move in treasuries over the course of the last few weeks is a combination of all these things. But I do think it's something to watch very, very carefully. And I do think the key message in all this is growth. You can talk about pay-fors, but at the end of the day, the way we get out of the situation we're in with respect to the debt, the growth of the debt, has got to be driven through growth. And so you've got to get the balance right on this. And it's a complicated cocktail, for lack of a better term, of a range of policy initiatives. And I think one of the things everybody wants the answer right now, I understand that, but whether it's immigration policy, whether it's tax policy, whether it's trade policy, whether it's energy policy, all of these are evolving and developing, and they'll all have an impact on the balance of where rates go, et cetera. On rates with a longer term view, Becky, I'd just say it's hard for me. I'm in the camp that some are in, that it's hard given the level of our treasury stack to see longer rates going lower, in the near term. I think the pressure is going to be upward as we move through the end of the decade.
And is that problematic, or is this a situation where if we have enough deregulation that's put in place, if we have enough cutting of bureaucracy, if we have enough embracing of innovation, that offsets those potential higher treasuries?
It can absolutely offset that. You could have a very constructive environment. Look, for most of my business career, the 10-year treasury was not 470. The 10-year treasury was meaningfully higher. You can certainly have a constructive economy and growth with higher treasuries. It's all a balance of where inflation is, where growth is, and these are things that are uncertain at the moment, and things that we and others are watching very carefully.
We've been talking with a number of your peers about crypto under Trump, and just how it may change what you do. You laugh, but for a long time we talked about it, and there was nothing for a bank like Goldman Sachs necessarily to do about it. But I wonder, in an environment where Trump is now talking about a strategic Bitcoin reserve, whether your sort of thought process around how to deal with crypto is going to fundamentally change.
Well, first, and Andrew, we've had this conversation a number of times. The underlying technology is something we spend a lot of time on. Right. It's something that we're utilizing and testing to create less friction in the financial system. Super important. At the moment, from a regulatory perspective, we can't own, we can't principal, right? We can't be involved with Bitcoin.
But you may be able to soon.
If the world changed, you and I could have a discussion about it.
But you want it to change? Is that something that your lobbyists in Washington would be advocating for?
I don't have a lot to say about a speculation as to a significant change like that. At the end of the day, I'm a big believer in the U.S. dollar. I think the U.S. dollar is super important. Bitcoin's a speculative asset, an interesting speculative asset. I don't think there's a lot more to say.
Let me ask you about this, though. In an America First world, and we're talking to Brian Armstrong a little bit about this the other day, is Bitcoin a threat to the U.S. dollar? Meaning, if the United States really...
I do not think Bitcoin is a threat to the U.S. dollar.
Do you see what I'm saying? Meaning
I
if
think
there's...
there are others that might see... I don't see Bitcoin as a threat to the U.S. dollar.
Let me ask you a different question, because there's some news in the Wall Street Journal today about DEI, a topic, and ESG, a topic that we talk a lot about in Davos, or at least historically did, and maybe we're not going to anymore. But a number of shareholder activists who are targeting now Goldman Sachs and JP Morgan over the issue of DEI. Obviously, a whole number of companies have abandoned a lot of their DEI programs. What do you think?
So I saw the article this morning. I know there are some people putting shareholder proposals into a bunch of financial institutions. I got briefly posted on it, but to be honest, I haven't looked at the specific proposals in detail, so I can't really comment on the specific proposals. More broadly, we've always looked at these issues, Andrew, and you and I have talked about this before, through the eyes of our clients. We're advising our clients think about these things. They think about decarbonization. They think about climate transition. They think about their businesses, how they find talent, the diversity of the talent they find all over the world. You know, we operate a big global business and we serve global clients everywhere. We think about these issues through the lens of how do we help our clients navigate these things, and we continue to stay focused on talking to our clients and doing the things we've always done.
But in a world where Robbie Starbuck is calling up these companies on a Friday, and companies are announcing that they are abandoning their plans on a Monday, and I imagine you're advising some of these companies on how to think about some of these things. What are you telling them?
Well, I think the construct is companies have to do what's right for them to successfully run their business, operate, compete in the markets they operate in. I think one of the things that's interesting on this topic here is the legal construct's changing a little bit, and especially when you get into states and different jurisdictions. And so that's something that we continue to evaluate, and I think other companies continue to evaluate.
Finally, we had a segment just before you got on about TikTok, and we've been talking about China, the relationship with China. Obviously, Goldman's been trying to do business in China for a very, very long time. I'm curious about what you make of TikTok as a chess piece in all of this, whether it's a national security threat or not. I don't know if you're going to be ultimately involved in negotiating or helping to advise on a potential transaction.
Well, I don't have anything specific. I don't have anything specific to say about TikTok. You know, on China broadly, as you highlight, we've had business there for a long time. We continue to operate there and serve our clients there. Most of our business there at this time is around advising our clients who own big global multinational companies in China. I do think it's very, very important for the United States and China to get their bilateral relationship back to a better place. And I'm hopeful that the president, you know, in his approach and his dialogue will be able to drive us to a place where that bilateral relationship is improved. But at the moment, you know, I would say there are a number of issues there that have to be worked through. TikTok is one small one in the overall scope of the bilateral relationship that has to be worked through.
David Solomon, thank you for coming in.
Oh, thank you for having me. Always good to see you, Andrew. Thank you.
Becky, back to you.
Okay, thanks, Andrew. When we come back, another big interview live from Davos. We'll hear from Coca-Cola CEO James Quincy. And a programming note, tomorrow, Charles Schwab CEO Rick Wurster will join us in his first earnings interview since he took over the company earlier this month. That's tomorrow in the 8 o'clock hour right here on Squawk Box. Stay tuned, we'll be right back.
Welcome back to Squawk Box. We are in Davos, Switzerland this morning at the World Economic Forum. Our next guest is here to weigh in on inflation, the state of the consumer, food and beverages, and so much more. I want to welcome Coca-Cola Chairman and CEO James Quincy. It is so nice to see you.
Thank you very much.
Becky's back in New York, and she may remember this. Many years ago, you brought us bottles, our own bottles, that said Andrew, Becky, and Joe on them. And I was thinking about that because, of course, there's images of you everywhere just the last week going down to Mar-a-Lago, bringing the president a bottle. Have you always had bottles for the president?
We have been doing inauguration bottles for like 5 inaugurations.
But they never got attention like that.
No, they didn't. But this time we did a Diet Coke one, which was slightly different. Before, there'd always been Coca-Cola ones, going back the last 5. And this time we did a Diet Coke one because, of course, the president is one of the great Diet Coke consumers. We did it.
How many Diet Cokes a day do you think he drinks?
I have no idea.
Did you guys discuss his Coca consumption?
No, we actually had the interesting conversation we had was like he also likes Coke, so he actually goes back and forth. I think he obviously drinks more Diet Cokes than Cokes, but he's a consumer. He loves the product, he loves the brand, and we thanked him for the business.
When you go to a meeting like that, and we've seen now a lot of different business executives go to visit with President Trump, what do you talk about? What do you ask him?
Anyway, it wasn't that actually. We'd sent the bottle with a nice letter. Actually, the president had written a response back on the letter saying, "Thanks very much." And his team said, "Well, why don't you come down and give it to him personally?" So it was more kind of just to present the bottle. We talked about all sorts of things across the scope of how the world's going, golf, which sort of golf courses. It was a bit of everything, but it was a nice opportunity to present, the president of the United States' own bottle.
When you told him about the economy, and maybe you can help tell our audience, how do you see it now? I mean, you do have your pulse on the global economy in a way that actually most don't in terms of what consumer demand looks like.
I think the economy is in good shape going into 2025. I think the US is particularly strong. There are other bits that are a little softer, maybe Europe, but in broad terms, the economy globally is in okay shape. The US is clearly in better shape going into 2025. And I think that's what's going to take us forward.
In terms of inflation and pricing power, what does that look like for you right now?
In the US, it's clear that it's moderating down to much more normal levels. I mean, inflation overall is at 3, which is pretty close to 2. I know there's a lot of worry that it'll be hard to squeeze the last 1% out. But think how far we've come just to get down to 3. So we see inflation in the US moderating substantially, and we see ourselves on a track down to what the Fed is going to be happy with, and we're sure they'll stay applied to the business of getting down. And that's also true globally. Inflation globally, whether it's the developed economies of Europe or some of the more inflationary economies, we see inflation coming down, and that's a more normalized state of affairs. And we see that playing out in 25.
Like so many other food companies, you have been accused by the Elizabeth Warrens of the world of shrinkflation. What do you make of that argument that the bottles are smaller, the portions are less, given the price?
I think shrinkflation applies, as a term when you only sell 1 pack, but that's not how we do business. I mean, not only do we sell lots of different products, but a Coca-Cola is available in lots of different sizes. The regular can, for example, of a Coke has not changed from decades. So our strategy is to provide a range of choice of different pack sizes at different price points. So there is no real shrinkflation in that sense. In the sense you can buy a 6-ounce Coke or a 3-liter Coke around the world. That all the pack sizes are out there, and our intent is to provide the right amount of liquid at the right price for what you want.
Talking about liquid, you've been adding alcohol to some of the liquid recently. I'm curious how that's been going.
It's a super initial start. We've got some joint ventures with.
We have a deal with Bacardi just now.
Bacardi, right? And Jack Daniels, and with Absolute vodka and Sprite. These are pre-mixed cocktails,
right?
And they're kind of experimental. And so we're looking at a couple of places around the world, saying, is this something that's got a bit of traction? We need to believe it can become a significant segment within the alcohol industry, or relative to beer, let's say. And that we can get a significant share. I mean, it's easy to make. The question is it easy to market and sell?
So that's what I was going to ask. I mean, just in terms of the early testing, what are the results that you like?
Some things have worked really well, like the Jack Daniels and Coke has worked really well. Some of the other stuff we've done hasn't worked so well. It's really in that innovation stage, and we're not expecting everything to work. And we need to prove to ourselves that it's worth continuing to invest in, that it's not just a hobby, that it can be something big. Early signs are good. And we'll see where we go in 25.
What are the opportunities in the developing markets at this point?
I mean, there's lots of different pieces of the development. It's not a singular thing, obviously. We're very excited about the growth potential in India. We've been investing heavily in India. We've seen strong growth in India over the last 5 years. We see continued growth in Southeast Asia, in Africa, and of course Latin America, which is a big piece of the Coke business. So in general terms, the developing markets are good, led, I think, principally, first in line by India. Of course, there are places which have been adjusting to very high inflation and all sorts of geopolitical problems over the last few years, which are obviously in negative territory. But generally, I think the developing economy is gathering steam.
Becky's got a question for you back in Times Square.
Do. James, it's good to see you. Wanted to talk to you about an issue. We've spoken with a couple of their Dow Components today, executives from Dow Components, both Procter & Gamble and Johnson & Johnson on with us today after reporting earnings. And both of them talked about the weakness in China. It was a big issue for J&J, a headwind that they've been dealing with. Procter & Gamble saw weakness, but not as much as they had seen in the previous quarter. Obviously, China's a big market for you, too. What do you see there? What's the economy telling you? What are sales like?
Look, China, I think, it's been okay in 2024. We haven't announced the results for the fourth quarter yet, but China in 2024 through the third quarter was just okay. Clearly, there's some economic adjustments happening in China. They've got a kind of real estate deflation, not unlike some of the other countries around the world. You will remember the savings and loan issue in the US. So they've got a macro adjustment that's coming through in the economy that's taking off some of the growth, but the growth is still there. Our business is doing improve. We made some decisions to rebase the business early in 24, but we think the consumer is still in pretty good shape, and we're looking forward. I mean, the key selling period in China for us is Chinese New Year, which is right now, and we're looking forward to having a good Chinese New Year.
I'm curious what you think the impact, of tariffs or the prospect of tariffs are on Coca-Cola, insofar as Coca-Cola is one of these companies that represents America. I mean, this is one of the great American brands. And here we have this moment where there could be some tectonic shifts in terms of how some foreign countries think about the U.S.
Yeah, I mean, you've got to think that Coca-Cola is a very interesting business, not just a global brand. And what I mean by that is everyone sees it as a massive global brand, but actually it's also an intensely local business, and often consumers see it as a very local brand. All the Cokes made in country X tend to, sold in country X tend to be made in country X, and all the Cokes in country Y.
No, I'm not arguing that you're going to be impacted by tariffs per se. I'm sort of
the geopolitical fallout.
Yeah, the sentiment of that.
No, I think if we've done our job properly, they see it as a global brand, but also intensely local, because it's local jobs. They see the salesperson and the manufacturing side and the distribution truck, and it's that's part of the incredible power of the Coca-Cola brand, is it can be seen as both a global, an American brand, and a local brand all at the same time. And if you look back over the history of geopolitical disruptions, whether they come from economic or other reasons, it's been incredibly resilient business. So we feel we have the ability to be resilient if things get complicated.
You are one of the biggest spenders when it comes to advertising in the world. I'm curious what's going on right now in terms of how you're thinking about online spend, Facebook, Instagram. Are you advertising on TikTok, for example?
We do, but very.
Will that have an impact if TikTok goes away in the United States?
It won't have a huge impact on us because we advertise in lots of different channels. I mean, of course, we're looking at which channels give us the effectiveness based on who we want to talk to, about which brand and which occasion, which demographic, and also the prices vary between the different channels. So it's not just about which one's effective, it's about who's charging what. So we have lots of options to advertise, so it's good. It's a broad market. So if one player, drops out for whatever reason.
Any great surprise on efficacy? Meaning, for those CMOs out there who are listening to this conversation, is there anything that you've learned in the last 6 months? You go, that worked in a way we didn't expect. That's pretty good.
I tell you what's working is generative AI. I know that's a topic, and it's probably already been beaten to death this year. But the generative AI ads, there was a huge debate about whether our Christmas ad was more or less effective because it was made all with generative AI. The data says it was more effective.
And do you expect most of the ads in the future to be produced by generative AI?
Not this year, maybe not even next year, because doing video through generative AI is not simple. needs a lot of compute, and it's not. You got to also get a good price from all the AI guys because it's not free.
Right.
But I do think that's the direction of travel, and it's not yet good enough to do humans.
Real quick, how much are you using AI for logistics and the like?
AI in the kind of calculation sense has been in logistics for a long time. I mean, there's been AIs in the supply chain for quite a long time. The current thing that's really different is this generative AI, whether it's around text or image, and actually putting it together and getting voice or sound and motion, video. That's what could really change marketing.
I want to thank you, James, for coming in. It's great to see you as always. I usually drink lots of Diet Coke on the set, but today it's coffee. Stay warm. Nice to see you. Thank you. Squawk Box coming right back from Davos, Switzerland in just a moment.
Insurance.
We've got another huge lineup of guests on Squawk Box tomorrow. We're going to be hearing from the CEO of Honeywell. We've got BlackRock's Larry Fink joining us, Morgan Stanley's Ted Pick, and so many more, Becky. What a week it has been, and it's not over yet.
It is not. I think we'll be right back here tomorrow to do it again. In the meantime, we should catch you up to date on some of the earnings out this morning. Procter & Gamble, that company reporting earnings and revenue both above expectations. It was driven by demand, growing demand for household staples, and that stock is now up by about 3.25%. Fellow Dow component Travelers also beating on both the top and the bottom line for its most recent quarter, and you can see that stock's now up by more than 5.6%, so a big beat there. And United Airlines shares rising after the company forecast first quarter earnings that came in above the street's expectations. That stock also up by about 5.33%. And by the way, don't miss an interview with United CEO Scott Kirby. That's coming up at 9:35 a.m. Eastern right here on CNBC. Let's take a final check on the markets this morning. We've been building throughout the morning when you're looking at the equity markets. So the Dow futures are now up by 170 points. Andrew, yesterday that was up by about 530 some points. S&P futures are up by about 33 this morning. Yesterday it closed higher, and that index is less than 1% from its all-time high. NASDAQ is really strong this morning. It's indicated up by about 220 points. Treasury yields that we've been watching have been a little lower. Relatively speaking, the 10-year Treasury is at 456, the 2 years at 426, and then you've got oil prices, which have come down a little bit in recent days. This morning up by about 15 cents to 75.96. Tomorrow, Andrew, big lineup of guests and a lot of common themes to kind of run through with some of these interviews, seeing how people are reacting to the incoming Trump administration and the changes they're making. And we're going to continue that all again right here tomorrow morning. 4 degrees, that's what it is here. I think it's warmer there, Andrew.
It is. It is.
We'll see you tomorrow.
See you tomorrow.
Right now, Rivers Waters.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Bulls have their sights set on fresh record highs. S&P's less than 1% away. Strong earnings from Netflix, United, and Procter are a tailwind, along with this AI infrastructure push from the White House. Oracle up nearly 10% pre-market. Our roadmap begins with stocks looking to build on yesterday's gains, but Jamie Dimon warns the U.S. stock market is, quote, kind of inflated.
Netflix shares are surging this morning. This after the company beat on the top and bottom lines. And of course, for subscriber additions, it's raising its 2025 revenue forecast and now has over 300 million subscribers around the globe. And that big tech announcement that was made yesterday by President Trump, SoftBank, Oracle, OpenAI, they're in a joint venture that will eventually invest as many as hundreds of billions in AI infrastructure in the U.S. We're going to talk to one of the key technology partners in that. That's Arm Holdings CEO Renee Haas, and that is coming up very shortly in the show.
Let's begin, though, with the markets. Jim, I know you're looking at some of the follow-through to what this Stargate might eventually bring to all kinds of suppliers.
Yeah, I mean, initially, initially you see these things and you think, well, it's for show. We all know that Oracle said it's going to build, but they said they need 1,000 data centers. You start thinking, okay, wait a second, what's part Moss's son? Well, of course, he's talking his own book. We're going to have Renee Haas, Moss on his SoftBank's big position in that. And then you step back and you say, no, wait a second. AI is the partner here. You know, you see Sam Altman up there, and you think, well, wait a second. I thought he was Microsoft's guy. Right. And then he's not. And then you realize, you know what, there's something big going on here, bigger than you think, which drives Oracle up 16, not because of meme guys coming in and saying, you know what, hey, this is good for Oracle, because we already knew Oracle was going to do this. But because maybe there's a reshuffling of the alliance, and the alliance could be in play, David.
You know, Jim, that's the takeaway this morning, at least. And you know, yesterday, as you watched Oracle shares surge on this announcement, again, to your point, it's a big number, but I can go back and give you big numbers before. Back in September, probably something we barely covered. BlackRock, GIP, Microsoft, MGX launch a new AI partnership. I just referenced this because that was $100 billion for data centers over time. So the numbers here over time, they're enormous, but we all know the build needs to continue to take place. But to the point you're making, Jim, what I'm hearing as well this morning is that it's kind of seen as the end of exclusivity in terms of the financing from Microsoft for OpenAI. Now they put a statement out in which they talk about their partnership continues, and they, our duration of our contract through 2030, our partnership remains in place with access to OpenAI's IP, our revenue sharing arrangements, and exclusivity with OpenAI's APIs all continuing forward. But
there you are.
But it is Oracle now that is clearly also a partner of OpenAI into the future, I think, that has that stock moving and that has many market participants focused, not on the Stargate announcement and the numbers, but on that.
And I think that people have to understand how this is, the fluid nature of things here is rather extraordinary.
Yeah.
I mean, you get up, you try to figure out you parse these things, you parse that meeting, it happened at 6 p.m., but I think Bank of America is the right call. And it says partnership provides potential scale benefits to Oracle. In March, Reuters said that Microsoft and OpenAI were planning to launch a joint venture dubbed Stargate, involving $100 billion $100 billion of joint funding for data center capacity. If it appears that Oracle might have replaced Microsoft in an OpenAI joint venture, this would be extraordinary.
Yeah.
And, Carl, I don't know whether Ellison was doing a dance yesterday because he was so happy about this announcement, or because he may have a real coup here. And betting against Ellison has been one of the greatest fool's games in history. Man, he was on his game yesterday.
It was interesting to see Musk reply to OpenAI's post yesterday saying, quote, they don't actually have the money. So there are some fissures in here somewhere.
He was talking about SoftBank in particular, and when you look at SoftBank and what they have on hand and everything else, they don't have the money. Something we can talk. Now, they have a lot of ARM.
Well,
if you want to sell some ARM, then you can have the money.
And he will not be able to address that, but if we don't ask it, then we have not done our job.
Yeah, no, I can ask it if you don't want it. But
David, we're not on a commercial.
No, sorry. All right, but so that does raise a question.
But it's shocking.
The numbers are going to be extraordinary. We know that. We talk about it every day in terms of what needs to be built to continue to support the infrastructure that needs to be powering all of these AI models, whether they be the large language models or smaller models or whatever they may be, and then the agentic world that we're all entering. We just know the numbers are enormous. You want to be in the data center business right now. At some point you may not want to be, because perhaps some of this money will not go for a great return.
Right.
Everybody's running to do it, figuring out how to finance these things. Private equity, everybody's just, it's a gold rush. It continues, and you're seeing the numbers, which are extraordinary.
Well, had there been a doubt in people's minds about NVIDIA, which is at the same price as it was in June, that NVIDIA may not have the orders it needs, well, that was ended yesterday, because obviously this team up would want everything it could. I also think that the whole sovereign nation kerfuffle that Biden put in at the last minute with 18 friends who can get NVIDIA, that's going to be just put aside. I don't think that there is any sense that there is any water being held by that particular stricture. By the way, NVIDIA may be crucial in something that we haven't thought of. The president wants a smaller trade deficit with China. One way to do it is to have them have all the NVIDIA chips they want, provided they're not used militarily. Now, you could argue, how could that ever be? I think this president is trying to get everybody's trade deficit to go to a surplus for us. And NVIDIA is the crucial way to do it. That has the most, it ain't soybean, it's the real.
Yeah, where is the balance though, Jim, between reducing the trade deficit, boosting our exports, and maintaining some semblance of safety around AI?
Well, I mean, I went to Peter Navarro yesterday, haven't had a chance to, he's doing a lot of things, but Peter would be a leader on what's going to happen with the actual intellectual property, because he's taught me the idea that intellectual property is basically something you can't be trusted once you give it to China. But I would say that I come back as putting my hat on and say, all right, NVIDIA has not been able to break out since June. A lot of people feel the stock is over. And then you wake up this morning and you realize that Larry Ellison take everyone again.
Yeah. I do wonder, Deirdre Bose has been doing reporting on this Chinese large language model or AI chatbot and the like, DeepSeek, which they say they have financed with a fraction of the money, that they do not have access, obviously, to the high-end compute that our AI players do, Anthropic, OpenAI, and on from there, and yet it's putting up numbers or performance numbers that are very similar. What is going on with that, and what does that mean? Nobody seems to have the answers.
When you are as visible with NVIDIA's eye, and people, you're like a magnet. Someone came up to me with a very well-capitalized outfit saying, look, we've got something that goes 10 times faster than NVIDIA. And I said, well, that's terrific. I remember when Intel had the 386 and there were companies that had something that was 10 times faster, and I don't even know where those companies went to.
Right.
I think it's scale. I think it's the ability to be able to manufacture with 45 plants going on right now. And the idea of the payback, which seems to be left out of the equation all the time. How many times has Jensen Wong said the payback is 4 to 1 the moment you get Blackwell, versus my friend Michael Sanders yesterday, he's still talking about it being a big drag on free cash flow. I am a believer that you make money when you get a NVIDIA Blackwell. And that means it's got a valuable project. What do you got?
Yeah.
Really?
again, back to sort of the leaderboard here and what's moving and Oracle, what's moving. I'm going to reference a note here from UBS. It goes back to what we were saying at the start, but I think it's very important for people to understand. They kind of think that Microsoft viewed exclusively financing OpenAI no longer made sense. I'm reading from their note, from a risk and capital allocation standpoint. Put another way, OpenAI's massive scale ambitions, specifically in terms of required GPU compute, namely buying NVIDIA chips, may have been running up against Microsoft's desire to exclusively serve them. At some point, we will have some sound from Satya Nadella, who was with Andrew Sorkin this morning, kind of answering that question, but I'll leave it there for now.
Well, let's get some people who are in the room. I think that Renee Haas has been, by virtue of the fact that ARM is a crucial partner here, is one of Stargate's first technology partners. We've got Renee Haas, who I think is very informed about the situation. Worked, by the way, at NVIDIA, and obviously large shareholder is Masa-san. So, Renee, great to see you. Please explain to us how important how important this really is, because I initially thought that some of these things are just kind of be political, but Stargate seems to be suddenly jumping ahead of everybody in terms of its importance here.
Good morning, Jim and David and team. It's a pretty big deal when you just think about the scale of investment that we're talking about. You know, $500 billion. I think it's probably the largest infrastructure or any investment of any kind in history. And AI, and we've talked about this a lot of times, requires it. You need a tremendous amount of energy, you need a lot of land, you need a lot of compute, and you need low power. And that's where ARM fits in. But it's a big, big deal.
Okay, so compute, when I hear it, says to me that your friend Jensen Huang, NVIDIA, is going to be the major player when it comes to that. Can you shed a little light? I know that Jensen wasn't available or talking about yesterday, but he's kind of the elephant in the room, isn't he?
Well, technology partners that were announced were Microsoft, NVIDIA, ARM, OpenAI, and Oracle. And of course, NVIDIA's Grace Blackwell, which we've talked about many times. The CPU there is ARM, the GPU is Blackwell. They're going to be the primary technology partner off the bat. With $500 billion of investment and just the amount of problems that need to be solved over time, I think there's opportunities for more players. But right now, yes, it's a great day for Grace Blackwell, and it's a great day for ARM. It's also a great day.
I'm sorry.
No,
Look, I hate to get too granular on this thing, and I know it's not really your world, and I'm putting you on the spot here, but we're trying to figure out OpenAI's relationship with Microsoft and OpenAI's relationship with Oracle after yesterday, because I had always thought that it would not be, and Dave and I can talk about this, that OpenAI was Microsoft, and now it looks like that the OpenAI is partnering with Oracle, and that would not be something that I would have thought was going to occur 48 hours ago.
Yeah, it's probably an area that Sam and Satya should comment on rather than myself. But I think one of the things when you look at Stargate has been the vision of Masa and the vision of SoftBank to be very instrumental in making this happen. Masa-san is the chairman, and as a result of that, I think he has been very integral in making this happen. And this obviously also would not have happened with fantastic support, without the fantastic support of the incoming administration. There's a lot of work required, Jim, to get all of these permits done, expedited, regulations put in place that can be fast-tracked to make all this happen. So that's why it was such a big day yesterday, and why the venue that was chosen was at the White House.
Renee, I obviously never question the ambitions of Masa, but there are those who are questioning the ability to actually finance this, including Elon Musk, who said simply in a tweet, SoftBank doesn't have the money. Now, what they do have is an awful lot of ARM.
Goodbye. Hello.
friends are going to be able to get what NVIDIA sells. And, yep.
Oracle got very excited here. Oracle introduces generative AI and intelligent agents to revolutionize sales team. Got a head and shoulders, two-headed snake. So probably come back right around here, pull back.
Have any reflections at all on that, or?
Arms had a big bounce. Broke major resistance on the weekly. Next one, 163.38. Today's 22nd. "23 minutes after. We got 7 more minutes to go." Check out the earnings for tonight. I'm gonna get something to drink. My throat's killing me. Tonight's Wednesday. We got Johnson & Johnson this morning, Abbott, Procter & Gamble. Tonight we got Discover. That's the only ones I see. Commerce Bank this morning. CBSH. Put this over here. That's my bank. PG this morning. I heard it was up. And Johnson & Johnson, they said, was good. Not so good. This could be a possible opportunity. Got an inverse head and shoulders with a double bottom. And Apple. Boeing. Baba. Bank of America. Tesla. We bounced off the 200 SMA yesterday. And we got Alaskan Airlines, ALK, coming out tomorrow morning. Had a pop yesterday, probably along with UAL. New high on UAL. Netflix. Didn't pull back. Texas Instruments, TXN, tomorrow after hours. It's at a pop. Verizon, VZ for Friday at open. With all that negativity, the market sure likes Trump. Be right back.
Repeatedly into the.
This did. NVIDIA broke resistance. Okay, we've had a gap up here, another gap up there, another gap up there in a week. Look at the puts real fast. Second, 6090s. Oops. The 6050s. $290. tight stop right off the bat. VWAP channel's pretty tight today. I'm at 330 right now. I could go ahead and get out. 340. There's $50 a contract. 350. I'm out. I'm out at 350. $60 a contract times 3. Okay. Losers are Sound. Sound's down 40 cents. Baidu's down $1.83. Target is 136. JP Morgan down 256. Mister's 256. Mister had a good run yesterday. Announces release date from live video webinar. And then coin. I don't think I have coin on here. I'll make sure I do. Arms up 16. Always clean?
Hello?
Yeah, what's up?
Hey, good morning, Bella here. Hey, how are you doing today?
Well, I'm trading right now. I'm kind of busy. Are you an AI?
I'm actually a real person.
No, you're
but
not.
I'm mistaken for a bot quite often because of the microphone. I just want to make sure you have the best benefits for the remaining year because it's the open enrollment 20.
I hate it when they lie to you. Yes, I'm a bot. Can't you just say it?
tie it to macro forces. And the kind of back and forth on what the tariffs are going to look like right now are clearly moving that marketplace.
Okay.
So that's where
If you're going to talk about tariffs, it ain't going to do a damn thing. I've never heard so much gibberish. The video just hit my resistance that I called in the video. The first resistance after the pivot point of what? Well, the second resistance. The pivot point was 140.30. So we got 2 more to go. That almost scale out here if you were in the trade. I think SPX is going to drop today, but we're going to find out. I'm out of the trade at 350. NVIDIA just hit my resistance.
Line swinging into the black for adjusted EPS of 203 a share. Revenue top 2.3 billion. So they beat expectations on both of those fronts in terms of guidance. What they're forecasting for the current quarter is adjusted EPS to come in between $1.50 and $1.90. Revenue they're projecting.
Could have got back in them at 3, but I didn't.
Between 1.95 billion and 2.25 billion. So that is ahead of what the street is expecting, especially when you think about revenue. The top brass over the company saying, quote, "We are advancing our technology roadmap to meet our customers' growing need for scalable, cost-efficient, and sustainable storage solutions in the age of AI." Not surprised to hear that commentary, especially when we think about the massive investment that has been going into AI and the data storage capacity need, including what you've just been talking about and what we heard yesterday with regard to that $500 billion investment announcement yesterday. So Seagate certainly expecting to be a beneficiary of the growth there. They talked on their earnings call about their free cash flow picture and just their overall growth in margins, rather. And that looked very good in terms of their growth in margins, and they expect that to continue this year. So you're seeing the stock rip 7% right now.
Okay. One move up to one-year highs. I guess maybe some of Seagate's memory components might get the nod for some of these big data centers getting built. I'm thinking about Micron too, which is stuck right now. So I wonder if maybe Seagate kind of leapfrogged them a little bit in advancing faster for current needs. Because a lot of folks thought this was going to be Micron's job. To some extent, there is still a decent amount of overlap in their businesses.
And it's possible, again, just to go back to the point about free cash flow, it's up significantly compared to a year ago, so they have the cushion to do more investment. I mean, their free cash flow last quarter was $150 million in the December quarter. You compare that to the same time a year earlier, it was 27 million. So there's certainly a more sizable cushion there. And then the trajectory year to date of Seagate, I mean, you just pointed out how much their stock has been ripping, and they brought the numbers to add credence to that investment story there for Seagate. And plus, we know that given where the White House stands and the investment from the private sector in terms of AI growth and wanting to continue to be a leader in the data
Tesla had a nice pop.
that the country will have, it benefits Seagate.
Okay. Big pop, impressive stuff.
Get ready to watch Tesla here.
Up 1.7%. Nvidia up more than 3.5% right now. So good demand from the AI train, which is on a steamroll right now. How about Capital One? We talked flying. And,
Amazon had that huge breakout.
Pretty robust still. Capital One breaking out.
Yeah.
Capital One. It's one I never look at much. What is it? I can't see it here. COF. 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 And today's the 22nd. Price target to 200 from 190, so we're already there. Maintains that perform rating, sector perform. Raises price target to 220. Barclays. So they had earnings. Looking at the puts again. Back in at 280. With a tight stop. Video. Got a symmetrical flag on the SPY. It's kind of pulled back, but we're at the 200. Pot stocks are down today. AMD's got some volatility. So does Apple. My next resistance on NVIDIA is 148.
I think even though you're not, I think it's because when you do that comparison on a year-over-year basis, that's an improvement for P&G because they aren't having to do this, kind of massive price cuts. And really quickly, I do want to circle back to Seagate because you made a point about debt with regard to Capital One. This is actually a positive thing when it comes to Seagate. They talked about the reduction of debt they had in this previous quarter. And they retired about $479 million of notes that were maturing this month. But they also highlighted they don't have any debt obligation until late fiscal 2027. So that's another positive for Seagate.
Okay. Good stuff. Thanks, I appreciate it very much.
All right.
That is the most important mover of the day. Though we'll come back and talk some more of the airline business with the focus on Boeing. Doing a little bit of trading with the stock down 0.5% right now, despite the strength in the airlines. We got earnings around the corner for the beleaguered airliner. Be right back.
Hello? Yeah.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Added 2 more to 245. Look at that arm go, boy.
Welcome back to Morning Trade Live. We got Boeing earnings coming up, and if United's any indicator, there's a lot of demand for flying. How about on the 737 MAX, though? Ben Chicanos joins us from S&P Global Ratings, Aerospace and Defense Director. Ben, thanks for being here. Tell me about your guys' view on Boeing. We got earnings. I know that's the equity side, but from the credit side, how's the financials looking
What
right
are
now?
Boeing?
Yeah, well, certainly we'll be looking at the results for the fourth quarter and look for guidance from the company on what to expect for the year in terms of production and deliveries. That's really the key to the credit turnaround is being able to recover production after the strike and after the quality problems that they had throughout last year.
Where are they right now in terms of their credit quality? How much did they, is it about their cash flows that they lost? Is it about the money that they had to pay out for fees, litigation, all this other stuff? Take me through your guys' financial analysis.
Right. So last year, because of the quality problems and the strike, they had a cash outflow. We're estimating of about $14 billion. They guided that this year they will probably also lose money, have a free cash flow negative, probably in the low single digits. So they, I think, bought themselves some time to recover with a large equity raise in November. that kind of bridges the gap. But it's really for us about returning to starting to generate free cash, and that's going to depend on getting production and deliveries back up.
Okay. The potential for those deliveries, what do you see from the customers right now? Is it a matter of how much Boeing can produce, or is it a matter of how much folks want to buy? Are airlines still ready to take 737 Maxes if they can push them out?
Yeah, there's no shortage in demand. I think that airlines want the planes.
They just got to build them
when they get them for the most part, and
we got a huge backlog.
Boeing has a massive order book, which at production levels that we're likely to see this year is going to be years worth of
I'm gonna have to get out of these.
So I think it really is a question of how fast and how kind of steadily can the company produce and deliver those planes.
Okay. When you look at the numbers, will any of this leave a permanent mark on Boeing competitively? Did they lose?
Well, I think there's no question that they've a position in the market in terms of market share with Airbus. They
Spy broke out.
An edge in wide bodies, but
broke past my resistance.
In narrow bodies. Airbus built twice as many planes last year that Boeing did. So I think in Boeing's favor, they're not losing customers to Boeing, to Airbus rather, because Airbus is also sold out. So there's no opportunity to switch, to cancel orders and just get a plane from their competitor.
Okay. So cash flow negative all year though, is that the baseline expectation?
Well, our expectation is it'll be negative in the first half and positive in the second half, and net it'll be negative.
All right. Demand exceeding supply, though, still a pretty simple recipe for getting back on their feet. Thanks for the perspective, Ben.
Sure, happy to do it. Thanks.
Thank you very much. S&P Global Ratings, Ben Chikanos. George Till's got two different trades for us, George. Let's start with the Iron Condor, something with some wings. What do you got? Neutral position?
Yeah, neutrality. If you look at Boeing, volatility is actually quite low. They're expected to release earnings coming out next week, I believe on the 28th. So you have to be mindful of the event, but also the event essentially has caused the volatility for the expiration next week to be a little bit inflated. So if you're kind of neutral on the stock, if you look at the stock, it's been trending higher over the past month or so, but it's still obviously in a primary downtrend. But if you expect some neutral price action, we can essentially look at containment strategy by selling an Iron Condor that expires essentially in 9 days, so Friday of next week. So what I'm going to do is I'm going to select 20 Delta options that I'm going to sell both on the call side and the put side. So by structuring this as a $5 wide spread, I'm going to sell the next week expiry again, the 187.50. 192.50 call spread, that's above the current price, and then below the current price I'm going to sell 167.50 and 162.50 put spread. So altogether you could structure this trade for about $1.75 in credit or $175 a contract. So in essence, you have to consider the reward is $1.75, your risk is $3.25, and that risk essentially happens if the stock blows out above the 192.50 on the high side and the 162.50 on the low side.
Okay. So that kind of seems like it's one way to think about the chart that's fair, because it hasn't really ventured too far past $190, basically 186 is 187ish or so. But it also kind of seems like we've been moving up the range somewhat compared to the last quarter, because I mean they hit 137, they hit an all-time low in November, so it feels like the downside risk still is kind of more prevalent than the upside, just trend-wise.
Yeah, correct. If you just look at the primary trend on, let's say, a weekly or even monthly chart, it's still to the downside, but they are starting to gain ground from a price action standpoint, particularly since November of last year. So, for what it's worth, unfortunately, this is a company that's got a lot of volatile cash flow, and it's a very difficult predictive stock. So, technicians would look at it potentially as a cup and handle formation, but it hasn't broke out of that formation yet, which is certainly could into earnings. So you have to consider that when you structure a trade like this, which again is neutral with a defined risk and defined reward.
Okay. All right, nice. 167 gives you a pretty good amount of breathing room, though, to the downside here. You could even cut through. Well, not quite. You don't want to go down to the lows from a week ago, but you could still take a little dent and be all right. What if, George, you're a believer? What if you think that it's time for Boeing to make a comeback? You got a bullish trade for us, hit me.
Yeah. So if you think it's potentially, breaking out of that cup and handle formation, and maybe this is, the start of something bigger for Boeing, considering how the stock has been moving since last earnings. You could certainly consider a call vertical, which is an outright debit trade. A little bit more of a risky situation, because you have to consider that if there's not a meaningful move on earnings, this could be a trade that could go down. Essentially, all your premium could rewrote quickly. So with that said, in this case, I'm going to go out to the February monthly contract, and this is about a 29-day expiration. I'm basically going to buy the first strike out of the money. It's a 175 call. Then I'm going to simultaneously sell the 180 call above that. So altogether, in the target you're looking for on a call or a put vertical is about a 1-to-1 return on risk. So we could essentially buy this structure for $2.50 a share, or $250 a contract. So 177.50 essentially is your break even. And of course, if the stock hits the 180 or higher, your max profit of 250 is achieved. So you're spending $2.50 to potentially make 250 in this case. And so you've defined your risk and defined reward here as well.
Okay. Upside, call vertical, sell a little bit. Why not? For Boeing. I like the also in the money approach. I think that
come on, Jimmy.
is a nice little kind of baby step into Boeing.
Not working for me so far.
Buy the in the money call. Don't expect too much. Just don't break down, basically. I think it makes sense. Thanks, George. I kind of like that one, actually. The call vertical at the end of the money, 175. All right, thanks, GT. Coming up, let's talk some Tesla. Stock is under a little bit of pressure again today, but yesterday it found some bounce back. We'll take a look at the options next.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free.
Oracle's
Empower
off
your
the
portfolio with
21.
the Schwab Network. He's Alex Coffey.
Oracle's off the 21 on the 1 hour. Oh, there we go. What the hell happened here? All of a sudden I'm up. Keep dropping or get out even. Not even, but down. Shit, I should have added. Pulled back to the previous support level, which was resistance. Okay, just hold on. I'm going to triple bottom on AMD. QQQ's looking good. Just looked at call right there. Penny stocks. I'm really surprised about NKLA. That was supposed to have been a $100 trade. Did I get P-hat in here? Or B, is it B-hat? B-hat.
Potential entry points, exit points. Always enjoy getting John's take. I think inspiration for my risk grade are the Asbury 6. I like the signaling method of John's system. All right, Chartmaster is going to take a look at Reddit for us. Marvell, too, as we do have some interesting notes out. Marvell's trying to break out alongside the chips. Got a bullish analyst note on that. We'll take a look at Reddit, too, which has been very persistently gaining, but this morning got a little bit of a downgrade and it's somewhat soft right now. And then for AppLovin, just a monster of a winner the last year, from $40 to $360. So we'll see what the Chartmaster has to say.
Chips are on fire. They try to let them down, but they just can't do it.
On that company too. I got Jeff Pierce with me for check-in.
Trump's announcement.
Jeff, what stands out to you?
I think exactly what you talked about, right?
That's private sector money going into the chips now, not government money. Government money, when they usually spend it on stuff like this, it's for the unions. It's a hidden transfer. Walmart. Dell's up $7. Meta's up 11 something. Meta's broke out, I think. Yep. We got a double top up here. Meta's about to hit my resistance in a double top. Sorgensen couldn't shut up about Elon again today. I just Elon this, Elon that. I don't know why he does that. Arm's looking very nice. We got double tops up on arm on the weekly time frame coming up. Quad top. 182.41. I got 4 puts on SPX that are down. Damn. AMD got 124.74 for resistance. Jim Cramer says it's a great company. So does Jimmy Howard. Meta did hit my resistance right now. Hike. AMD has a double bottom, triple bottom. I mean, IWM. Yeah, I got that one wrong. Might as well give up on it. Kind of too far out of the money now to add, but dang, my hands are cold. AVGO, Mister's bounced up from the bottom. Tesla moving up some. Which two may be delayed. What happened? Not sure why my question to Wash was deleted. What was your question? I wonder if it's if we have a bot in here. Only a few of us can do that. Magnificent, are you deleting post? Hee hee. I was in a put, but it's not doing very well. I don't think anybody's deleting them on purpose. Come on, baby, come back for me. You gotta tell me what program that is, Randy. It is just patterns on toss. I don't know where that is. Mine don't do that. You have to select the patterns you want to see. It's got to be under tools, right? Not under tools, but under oops. Oh, patterns. I got mine says show patterns or select patterns. Okay. Falling wedge is one of my favorites. Head and shoulders, inverse head and shoulders is another one of my favorites. You got it under the rectangle. Okay. Coming back a little bit. I got quite a few of these right now. Let me know if anybody else gets anybody deletes anything in here.
We sat there for a month, almost a month. So yes, we're very much positive now. There's a lot of mojo in the market right now. You've got tech is outperforming. Semiconductors are not only outperforming, but I'm watching the stocks this morning. It looks like it's breaking through some resistance. If it can hold that level in the stocks is 54.42. If we could stay up above there, we could rally another 10% from here. I don't understand it, but we just follow the data, and the data's telling me that at least tactically, you've got to be long.
I understand it. Banks have done well.
Right now, fading pretty quickly.
Earnings are doing great.
What do you see in terms of VIX? John, I know you like to monitor vol as one of your indicators.
Plus, we got a business president.
The VIX is just a very near-term, fast-twitchy way to see if the market's nervous or if the market's comfortable. And we look at the 21-day moving average overlaid on the VIX to make that determination. The 21-day in the VIX now is about 1720, and the VIX is at about 15 right now. So we've got some room. You can see from January the 15th, that's down on the right, the green. January 15th, you can see that it dropped back below the 21-day moving average. That's right when CPI came out. Volume got better. Just, the sun came out. And again, I think it was three failed attempts to take the correction from the middle of December highs a little bit lower. It failed 3 times. All we needed was a trigger. CPI was, it wasn't like huge. It wasn't a huge number, but it was a good number, and that was just enough, I think, to get the shorts offside and to get this thing going.
All right. Yeah, the breakdown of VIX timing with this latest breakout. What about the timing from the inauguration and the election too, John? Do you give any thought to the narrative of this and what type of policies we'll need to get to justify? Or are you just looking at price is king, technical, pure?
Well, kind of a hybrid of those two things. Yeah. The market could care less what I think or what anybody else thinks, for that matter, of what might happen. I know the market doesn't like uncertainty, right? And there's a lot of uncertainty out there now, and I think there's going to be for some time. But the data that we need to pay attention to is what the market thinks. And you'll see that in volatility. You'll see that in volume. You'll see that in asset flows. So we're completely data-driven here, and I firmly believe, after doing this for 40 years, that the way
you've been doing it for 40 years.
Determine what the market thinks, and that's the only opinion that matters, is by watching specific data sets, which is Asbury 6 and a lot of the other models that we have here. And those are telling me right now, tactically, the market's happy. The market isn't really worried. You can see that in the low VIX. I'm seeing asset flows going back into SPY, going back into the Q.
It checks all them fat cats.
Outperformance. Stocks are outperforming bonds again. The Qs are outperforming SPY again. So again,
So we got a little sell-off on IWM.
To understand why all this is happening, but the market sees it. The market likes it. That's all I need to make money.
All right. Amen to that. Okay, take us back to the technicals here, John, on the S&P. If we get through that 6100, which we are really trying to, and like we're seeing this morning, you go to 6089. I can't imagine you don't go to 6099. What type of upside do you think is possible, John?
I don't have anything here. There's some retracement analysis that somebody can do. I think the big round numbers are going to be important here for the next month or two. So, through 6,100, look at 6,200. Again, I've been watching for something else besides the NASDAQs to give this some leadership. And what I've seen over the past week is it's coming from semiconductors, and that's a place that you want to see that. Usually in a healthy bull market, you get semis doing better than the S&P. You get the technology indexes doing better. So if the SOX is indeed kind of coming back online here, that's going to help to kind of fire the retro rockets on this. The thing we have to remember, and I wrote this down, since October of 22, the S&P 500 is up 75%. It's an enormous move higher in just a couple of years and change. At some point, this is going to revert back to the mean, and I think if you're going into this like, damn the torpedoes, I'm going to be a buy and hold person this year, I think it's a huge mistake. But as long as you're looking at the right tactical tools so you can get out of the way, I think there's still a little bit of, I think the music is playing for a little bit longer.
All right. Like that. Hey, John, final point. You mentioned SOX. I've been talking about the semis all morning. Still the heartbeat of the tech sector, which powers the S&P. A technical breakout after being range bound. Do you see it as I do?
I see it as an emerging breakout. For the SOX, I'm looking at the chart right now. For the SOX, if we can continue to close, We haven't done so yet. We need to close above 54.45 for a number of days. If we can stay up above 54.45 from here, we could go another 9 to 10% higher.
All right. That is inspiring stuff. The word of the morning. Thank you very much, John Kosar. Great to catch up.
Great to see you. See you next time.
He's been here 40 years.
Chief Market Strategist, Asbury Research. Coming up, we got some analyst notes to talk about. As I mentioned, the downgrade.
I bet she's younger than me.
The price target hikes on App Lovin and Marvel.
With all that gray hair.
Solid charts, I think, in their own right. App Lovin moving the most on them this morning.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere. on any device and screen. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab.
So far, I ain't done much
Our
trading.
team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out there.
I think a girl that's 29 years old is too young for me.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with
Tell us about it, honey. ARM had a little reversal off the quad bottom, triple bottom, quad, maybe a 5 bottom. SPY double topped with a new high. We're going to find out now how this market feels. I'm about ready to go make me lunch. Right now I'm about 200 in the red. So I got to figure out something. Tesla moving. That 427.50 area, that's been my double top resistance off of a trend line. God, this sucks, man. I think ATT's really screwed my phone up. I'm not a good person when it comes to the code. I'm a beach boy. So I'm going to go get my lunch ready, or at least have a burrito. Hopefully round 2 will be better than round 1. I took a loss on that one. Well, I bought and sold it 125s at 140, but I took a loss on them 2 right there. So down about 200 for the day. Almost 200. Be right back.
As well for these individual companies, not even necessarily advertisers.
Yeah, for sure. So I guess they're getting a bigger piece of the advertising pie right now. Maybe their mousetrap is finally clicking.
The mousetrap.
How do you begin with a chart like this?
Well, once again, we can begin from August 5th.
Arm can't break my resistance.
Low right here, where we touched on our 250 2-day exponential.
Yeah, well, that would have been a good one.
To really lift off to the upside, but the big push came like our other 2 names on earnings here. So a big rally from that point here. We had a brief period of consolidation near 292. That was where we topped out a few times here. That's what lines up with our 63-day EMA as well. Now near our light green line. However, we can see that we pushed up to 417, gave back some of those gains, had a sideways period of activity. Now we're pushing up to the upside once again beyond that ceiling here. So an interesting breakout here. We didn't really even come remotely close to filling the gap or anything like that. Not even close to where the gap began. So that was a pretty more positive sign for the bulls that we were able to hang on to these elevated prices. And now we're seeing another push to the upside. We did see some bearish divergence in momentum before the decline here, but really things mostly stayed bullish. Now we've invalidated our 2 downward sloping trend lines in red and white there, and we can see some other key price levels. Now we have our volume node area right here, 335, 336 that we pushed above, and we're closing in on the +1 standard deviation channel near about 382, old highs 417.64, +2 channel 483.50. To the downside, the area I mentioned here also lines up with our yearly linear regression line, so around like 290 or so.
All right, pretty good chart. Oh yeah, looks like the first one we had that consolidation and then the inch up higher, except this one is just showing even more strength with the pop, finding old support at 335, using it as a platform to rally. Incredible what Apple and the stock has accomplished here over the last couple of years. Great context on the charts. Thanks for a look at the analyst notes. Rick Ducat and Jenny Hart, the chart master team. Coming up, Georgia Caroline jumping on with me for a check-in on the session as we saw the Russell down, but NASDAQ well bid still this morning, up 1.5%.
There it goes, new high. I'm gonna go from that body right there. Whoop. To that body right there.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading.
Randy, what time frame were you using with them patterns?
Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Boom. It changed from each time frame.
Welcome back to Morning Trade Live. We've got the NASDAQ ripping here. Semiconductors up $6 right now. Caroline Woods, George Tillis taking a look through the market with me.
Come on, Caroline.
Nothing's changed other than a little bit of a fade in bonds, which might also support the dollar. It seems to be.
Again, she looks
Market's
hot.
taking that in stride, though, George. Given the dollar got walloped yesterday, I don't think a little firming is going to bother anyone.
I don't think so. I mean, we talked about this last week that I thought, you know, the rates at around 4.8% on the 10-year looked a little toppy, so we're trending back to, you know, the midpoint between 4 and 5%, around 4.5%. Obviously, there's a lot going on, and I think there's a lot of market volatility within the markets on an intraday basis. The VIX really doesn't represent sort of this intraday volatility, but essentially, obviously, the front and center issue is policy changes, executive orders, potential tariffs, Fed meeting next week, and then you've got the backdrop of earnings. So there's a lot to digest in this market, and obviously there's a lot of opportunities with the initiatives that the Trump administration is taking to improve the capital investments in artificial intelligence, with infrastructure companies like Oracle making some nice moves higher, Aristanet. Essentially is a communications network backbone company. That's been trading to the upside, and we're seeing the usual suspects, including the mega caps, aside from Apple, which has got its own consumer products selling issues right now, just based on some of the demands in China and so forth. But with that said, market looks like it wants to go higher. I think that last week or two was a sort of a bear trap. 6,300 doesn't look like it's far out of reach right now, just based on the weekly trend lines on a technical basis.
Okay. We're listening to John Kosar's bullish take on the market. Pretty convincing. All his lights flashing green. And it does seem to, the calendar favors us, as we talked a little bit about this morning.
Earnings, my friend.
Really, I mean, when it comes down to the tried and true recipe for gains, it's big tech. So if we're going to get more money piled into this group, which is what we heard from the Stargate stuff, then, you know, it's not hard to make that connection for why we're up.
Right, and we'll start to hear from some of those big tech companies next week when it comes to earnings. But overall, tech mostly higher today outside of Apple, as George said, and Tesla, as we talked about this morning. That
Sorgensen on CNBC asked the CEO of CRM this morning, he said, "I know you're a Democrat." And the guy looked at him and said, "What? I ain't a Democrat." He says, I was a Republican, now I'm more of an independent, which I think I am too. But he said, "I've never been a Democrat." And he kind of, I don't like his questions.
numbers that we talked about last night now surpassed 300 million paid memberships, hit a record high, already off that, but still charging higher. Seagate higher after earnings. United Airlines in the green.
Think about
after,
starting to scalp
earnings,
SPX again.
kick off 2025. I will say the overall travel trade pretty mixed today, but United a winner. Other earnings winners include GE Vernova, Travelers. There are a few laggards today because of earnings. Johnson & Johnson is lower after a narrow beat, but a slight miss when it came to the outlook. Textron, the worst performer on the S&P 500.
Johnson & Johnson.
After the company missed revenue estimates, earnings narrowly beat, but seeing quite a bit of red there today. Fifth Third Bank also lower today, down about 3.5% right now after both earnings and revenue disappointed, bringing the rest of the regionals kind of lower with it. KRE down more than 1% today, but Ally, a bright spot. Shares of Ally seeing a nice boost today after earnings and also after news that it's selling its credit card division, so getting a nice
good
bump today. So overall earnings definitely
well, it pulled back.
Upside for stocks today, but you
know, Ally Financial had
there was
earnings.
A Wall Street Journal report yesterday talking about Make America Cheap Again, that Trump is inheriting a very expensive, the most expensive stock market when it comes to cyclically adjusted PE ratios. So they made the case that he might not want a pullback, but investors should. Not seeing that today, though.
Okay. The groups are that are down seem maybe a little bit rate sensitive. Utilities, real estate, possibly. Banks taking a little bit of a breather. It just kind of seems like when we have big tech melt-up days, George, you know, it is kind of an opportunity for some of the other stuff to take a breath after yesterday's big pop. The fact that the Russell's only down 0.5% with tech's ramping up. I mean, we've had such skew in some sessions where NASDAQ rallies.
Okay, we're at major support.
It's not really what's happening right now. It's more like the stuff that rallied yesterday is just.
We're at a major support here on SPX right now. If it doesn't hold, I think we could drop down. But we got that 63 in its way still, so you have to use that as an indicator. If it holds a 63, I could have scupped it right there for 105 to 120. I need to get closer to the money, though. Tesla back to 420, 75 off the 200. Amazon's doing good today. Nancy Pelosi's happy. Well, they got a big price upgrade on it, Lilly. Above $1,000. SPX put went from 105 to 125. Go get my second burrito started and I'll be right back. Oh, excuse you.
Who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders.
We're at the 63 right now, so this is it.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all.
60, 82, 63.
Every trading day at 8 a.m. Eastern, only on Schwab Network.
IWM new low.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So glad you're with us as we're watching stocks moving higher. The indices are higher. In fact, we're within a stone's throw, for example, on the S&P 500 of new all-time highs. Coming up on today's show, our spotlight is on the Glimpse Group. I'll be joined by the president and CEO to discuss the company's business in AI and immersive technology. Our disruptor, Oracle, as the U.S. announces the Stargate project to invest in AI infrastructure. And our panel taking a look at Netflix. This stock hits new all-time highs. What a report that was. We'll dive into that. In the meantime, taking a look here at the numbers, we've seen the markets moving higher over the last week or so, mostly up. Hours ago was one down day. The Dow right now is being about 74 points, sitting at 44,100. The S&P 500 is 6,087. The high, 6,099.97. So we're not too far off those record highs. As I said, the major average is about within the 1%. Right, the Nasdaq, tech-heavy Nasdaq up 1.25% at 21,844. The Russell small caps pulling back today, and those are down more than 0.5%. This is the 10-year bond is sitting at 4.6%. Oil and gold are mixed. Gold is gaining $10 today. Oil is pulling back fractionally at $75.50. Drill continues to push oil lower, and it's at $75.52 the barrel. Dollar 108. 104,250 for Bitcoin. There you have it. That's down about 2% after hitting records earlier in the week. I'm joined by Jenny Horn to take a look here, markets correspondent, taking a look at earnings season. You have a winner and a loser, two huge names, two consumer staple companies. They're heading in opposite directions today on the heels of their quarterly numbers. So we'll start with Procter & Gamble. This is a winner, gaining about 3% now. Jenny.
It is a winner, Nicole, and it's amazing to see really like what the street liked within these reports and obviously what they didn't. But what we know from Procter & Gamble is shares are heading for their best day in 5 months, at least as of right now, based on the price performance. They beat sales for expectations for the first time actually in more than 5 quarters, even as prices actually didn't rise for the first time in nearly 6 years. So they maintained their fiscal guidance now.
You must have turned her mic down.
By about 1% in this increase in volume from a year ago, amid particular strength in their various segments, but particularly in baby, feminine, and family care. Grooming and fabric and home care products also saw volume increases, while their healthcare segment was flat and beauty saw some weakness. And the volume growth was solely because they did say a result of this favorable geographic sales mix. Well, prices remained flat, but again, the first time we didn't see price increases in the first quarter since 2019, when prices also did remain flat. So there's a lot to like within this report, but I think the fact that you're starting to see price increases moderate, a win, of course, for us as consumers,
and the fact that this was actually the 10th straight quarter of bottom line beats. So they did say that now they return more than $4.9 billion to shareholders. I think operating from now a point of strength. For a long time, it felt like they were playing somewhat catch up as far as the pricing mix was concerned. That doesn't seem to be the case though anymore. And based on today's reaction, Street is looking at this like a win.
All right, it certainly seems like one, right? With some positive comments. How about on the downside here? We see Johnson & Johnson falling about 3%.
Yeah, and I will say that it's difficult to find really what was so starkly different within Johnson & Johnson's report because, on the other hand, like you said, facing for one of its worst days since July of 2023, they did unveil financial results that beat the street expectations as they do brace for one of their top-selling medicines, the Stelara, to go off patent in the coming weeks. So we did see adjusted earnings that topped expectations, revenue to rise 5%. They do still expect some operational earnings growth between around $10.75 to $10.95 a share. That was actually ahead of the prior guide, and did say that right now the overall mix related to their various medical devices and medical device sales should still remain on par with what they'd previously guided for. But again, Stelara, I think, is huge. That's expected to begin facing some stiff competition from similar companies in the recent weeks. And there is still, I think, the concern about the ways in which the U.S. dollar impacts them, the overall business. I was reading some of the street notes, and basically what I could see is they're facing stiff competition. A new administration does create massive unknowns, and for a company as massive as Johnson & Johnson, that does create a lack of flexibility maybe in their drug rollouts over the next year, which is perhaps why we're seeing some weakness. But again, financially speaking, their fourth quarter report was pretty strong here.
All right, Jenny Horn, great to see you. Thank you. Markets correspondent looking at some movers, important movers today. Let's get some insights in the news shaping the markets. For that, we welcome in Burns McKinney is here, Managing Director, Senior Portfolio Manager, NFJ Investment Group. Thank you for being here. How are you feeling? I mean, we've had a few good days where, you know, the record highs are in our sights. What are you thinking?
Well, you know, looking forward, I think the best way to think about what we expect to see going into the new year is looking at the most recent history of what we saw in 2024. And you know, we began last year with a lot of concerns going into the year. We had a inverted yield curve, which meant a recession was coming. Well, okay, we avoided that. You know, inflation has been running near 9%, and you know we've gotten that down. There were geopolitical concerns.
Another thing on my keyboard.
Some of these hotspots would escalate into regional wars, and knock on wood, so far so good on that. And finally, we went into last year with concerns about uncertainty about.
We'll make some tea.
We did come out with a fairly certain outcome, and so on the legs of sort of climbing that wall of worry, you saw the markets go up by 20+%, and now we
SPY come close to the VWAP with a double bottom.
Scenario whereby we have a very supportive policy environment. We have a new administration that's talking about tax cuts and deregulation. And you have a central bank that's easing. And,
smart guy here.
And likewise, we have the market trading at a multiple that's more expensive than it's been about 80% of the time. So if we had a wall of worry last year, if anything, we might have a wall of complacency this year. And so, going forward for it to replicate what it did, it's really
don't get complacent.
Expansion from here. So earnings growth might have to carry the day. And I know that. Forecasts are for 13-14% S&P earnings growth, but that's almost double the long-term average. So even that may prove to be a little bit aggressive. And so probably what investors should expect is something a little more muted this year, and perhaps a continuation of what we were seeing in the middle of 2024. That being a bit of a broadening of investment returns, whereby the high momentum and some of the highest growth tech names maybe share the wealth with some of the rest of the market.
Yeah, you talk about that. You said, look, we're not seeing any sort of near-term recession. You may see slower growth. That being said, you're looking at not necessarily the Mag 7, but the other 493 and market breadth, and that some of those names really could be set to break out. So if you're setting up a portfolio here, knowing what the administration is likely to do or not do, where do you see value? Where do you see maybe put some money here to work?
Well, in thinking about the incoming administration, the interesting thing about Trump 2.0 is the fact that we've done this before, so you kind of do have a playbook, and so We don't necessarily suggest investors go, risk on, risk off, because of the fact that, over the last century, markets have done about 7% annually under Republican presidents and about 7% under Democratic presidencies. But when we think about what some of the differences we might have for this administration, probably the first and foremost would be is that investors might expect interest rates to be a little bit higher for longer. We did see that as the S&P began to price in the Trump victory. We saw the 10-year bond yield creep up a little bit, and that's for several reasons. I think one of which is investors should maybe expect a little bit faster economic growth. It could have to do with the fact that tariffs are inflationary, as well as higher deficits. And so when we think about that higher 10-year bond yield, that certainly could be a steeper yield curve. That might bode well for the financial services sector, which is one for which valuations are the lowest of any sector. And investors should maybe focus on what some of the areas are that might be the biggest beneficiaries of that deregulation. Again, you have financials. That could also speak to the energy names, or even healthcare names that are certainly have been down quite a bit on headline risk recently. That actually stops it. Go ahead.
Sorry. You talk about financials in this group, which is still some value, right? And many people do. They come on, they do like this group. Has already run up, has done very well and often pays a dividend. So within financials, let's break that down a little more. We've heard from the big money center banks. You have the regional banks. You have fintech. Where do you think might be a good play?
Well, the big money center banks have come out of earnings a little bit better, simply because just one of the things that deregulation means, it could mean increased M&A activity, increased deal making. That's certainly been bigger for those banks that do have investment banking arms. One of the more recent winners would be something like a Bank of America, whereby they've simplified their business model in recent years, but valuations are still low. That said, coming off of earnings, the regional banks got kind of left behind a little bit, and so there's still some value there. We wouldn't necessarily recommend just going anywhere, but I think this is the type of market for which you want to go for quality. And when we think regional banks and think quality, PNC Financial is one that jumps really off the page. It's been trading recently at 13 times earnings. You have a nice 3% dividend yield, and it's kind of a hybrid whereby it's a regional bank.
Showing a lot of bearishism right now.
Four majors. It's almost like the fifth major, so to speak.
$1 to 130 right there.
You have broad diversification regionally speaking. They operate in 4 time zones, and so investors can actually benefit from that. Loan growth has been a little slow across the board for all the regionals of late, but that's one reason why valuations are so low today.
Yeah, understood. And within healthcare, there's so much there. When you say healthcare, I mean, what do you say when you say healthcare? What do you mean within that group? Where do you see some potential?
Well, the exciting or the interesting thing about healthcare, I noted that there has been some headline risk, specifically with RFK Jr. coming in. You have a vaccine skeptic. I think some concerns that the FDA may be a little more difficult to manage for some of the big pharmaceutical companies, but some of the medical device companies have just been absolutely hammered of late. And so you find a name like an Agilent is the type of stock for which investors can get that trading below a lot of the med tech type stocks, and they produce measurement instruments, a lot of diagnostic single-use consumables. And so within healthcare, this really is the consummate pick and shovel play, where
10-year yield is spiking higher.
Have to be smart enough to know which drug compounds, which biotech's going to be successful. We just know that they're all going to be using a name like Agilent. Earnings are still forecast to grow at double-digit rates.
Thank you, Mike.
Spending a lot on R&D compared to their peers to help maintain that competitive moat.
For Bitcoin, we saw Bitcoin hitting new highs, crossing, and hitting new highs. And so with that, is that something that you dabble in or get asked about a lot? What's the demand for Bitcoin in your world?
One of the earliest lessons I learned in this business is know what you know, but also know what you don't know. Know what where your
how do you know what you don't know?
End. And Yeah, that's not something that we're
What?
terribly as familiar with. I think that for investors, certainly when you have something like
Know
that,
what
it
you
can
don't know?
offer the diversification benefit for a small portion of the portfolio. But at the same time, we like to focus on assets that actually generate cash flow, generate income,
Know
rather than
what
necessarily relying on
you
greater fool theory. The only reason it's
don't
important something
know.
is because someone might pay more for it later on.
Know what you don't know is an expression that means to be aware of your knowledge limitations.
Thank you for this conversation and setup for 2025. We appreciate you being here. Thank you. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. And Rick Ducat will take us through the technicals. Don Kaufman will take us through the trades for Broadcom, the energy sector ETF, and Nike. We'll be right back here on Schwab Network Trading 360.
Spy at the VWAP. Know what you don't know. Spy at the VWAP. Bounced right off the VWAP. Was my sugar mama back on here yet? Oh, that guy. Broadcom. No.
Near about 185. At the same time, our lows were getting increasingly higher. We made a series of progressively higher lows coupled with horizontal resistance in a consistent way. And then we got the breakout to the upside. It behaved as the bulls would have wanted. Since then, we topped out near 251.88. You could draw kind of a
I can't get no patterns to show up.
Describes a lot of the recent price action. I think in reality, though, if we were doing this in real time, it would have been more like this. And then we had the breakdown. We held the line at the previous lows near 219, and then we retook our 21-day EMA. Now we're on the move back up to those old highs. RSI also trending upward.
Daggum right.
Downward sloping red trend line.
AVGO on the daily.
Cooperating with this price breakout. Now, if we zoom in a little bit, look at our volume nodes here, we can see that the breakout level and our +1 standard deviation channel line up with the volume node. So around 235, 236 could be an important area to retest. We have our old closing high near about 250 here. Then our +2 standard deviation channel comes in near about 276. So some upside areas to watch. To the downside, we've got this spot right around there. We had our green line near about 219, and then the post gap up low near about 211. So a couple more points to keep in mind.
Okay. You know, when you think about this and the group overall, pretty good news, right? This name in particular is up 101% over 12 months. Don, final thoughts on this name?
Yeah, this one, once again, this is much more about the news, Larry Ellison, Oracle, and again, really Broadcom riding some of the coattails of both NVIDIA and Oracle in today's news environment.
Okay, next up we look at energy, which has been pulling back. You're watching the XLE. In fact, you're feeling a little bearish in your trade. Want to hear more about that? Because we went from 80 to 75 right now. We're at 75.57 on oil itself. You're watching the XLE ETF. Tell me a little bit about where you think this could be headed.
Yeah, you know, so XLE, I am a little bit bearish on it right now, just in the near term, because eventually you get drill baby drill turns into sell baby sell. And I think this is well priced in, meaning that most of the drill baby drill is actually priced into the upside here inside of the XLE. You're already seeing oil diverge a little bit lower. I think the energy complex is ripe to actually cool off in the near term. As look, the policy that's going to play out, it's going to take some time. And we've got a lot of earnings coming up. Those might not necessarily be absolutely stellar just yet. A bit of a lag in here. Anyway, to see the XLE pull back would not be unusual at this point. My trade is the February 21st expiration. I'm just going to buy the 94 puts, sell the 92 puts, just a $2 wide put spread done for a 92-cent debit. So it's fairly short term, just looking for a mild pullback. We're not like, you know, outwardly bearish on this one. Nice mild pullback.
To the 200, buddy?
An absolute rip to the upside.
$90?
Anticipation of Trump coming in and, well, doing exactly what they did. But it's time for a bit of a pullback.
All right. You know, and also there's still concern about demand, China demand, things like that. You know, what kind of economy we may or may not have. Let's hear what Rick Ducat says about the charts, please.
You know, you could describe this chart for much of the past 52 weeks, at least as range bound. It's a wide range, but when you look all the way back here, we had some lows at this green line near about 83 bucks.
Oh, that'd have been a good spot to jump in that trade.
So we held that low point. You could also go all the way back here and look at our best close on the year. That matches up almost exactly with our high point there, 98.08. but it's really important that we did not quite make it up to
Wow,
the previous
whatever
high.
I
It's a
ate
little
was
hard to see
spicy
on this
in that
chart
one.
here, but we fell short of that level. So the rally did not take out those old high levels. Then we had a very swift and severe collapse, and followed by an equally severe uptrend here, a very quick rally. We crossed above our moving averages. They're all kind of clustered together now on top of each other. That speaks to a lack of clear trend direction, which makes sense because we've had such volatile, big whipsaw type swings back and forth here. So the moving averages are not really adjusting. They're not fast enough to adjust to what's happening with the price action here. But the faster ones are starting to cross above the slower ones here. RSI was improving, but our green trend line has been broken as we went up to this resistance area, 94.15, frequent stopping point for price and consolidation area. We backed off a little bit from there, which gives us the short-term trend line now. If we were to zoom in a little bit and look at some of these key areas, well, volume node right about where we are now. If we were to move to the upside, we've got our trend line and our area of resistance and our +1 channel near about 94 to 95, so that could be a key area. From there, old highs match up very closely with +2 standard deviation channel near about 98. To the downside, our big cluster of our moving averages is very close to our point of control, so 89 to 91 is a key support area.
Yeah, and I think about, too, you have the Gaza ceasefire, which brought a little sense of calm to oil, but you still have Red Sea risk. So this can be a very volatile group, no doubt. I mean, I'm not telling you it's something you don't know, but really front and center. Final quick thought on this name, Don.
Yeah, no, trader speak in here is like, look, it's never just a one-way ticket. It's the upside over here. A little bit of pullback again, I think, is overdue, and that's exactly what I'm looking for. I agree with actually many of the points that both you and Rick have just raised in here. Nevertheless, with oil starting to actually cool off a little bit, you should see the energy complex kind of follow.
All right, one of the analysts called Nike a visible recovery story for 2025. I mean, they had on cloud, they had Hoka, really nipping at the heels. Even Adidas has always been there. You remember the Yeezy days, but it's a tough environment, but they have so much athletic wear across the board. It's up 1.3%, but has really been a real laggard. I mean, not a great chart. Rick will be looking at that. Some of your thoughts where this could be headed here, Don?
Yeah, Nike, first of all, Nicole, look at this. 2 bullish trades out of me in the exact same session. This is record-breaking for me, but I am a little bit bullish. I'm bullish inside of Nike, and by the way, you mentioned on clouds over there. Love my on clouds. Absolutely love them. Nevertheless, I think the Nike has possibly bottomed here at the 70 level. We've actually been scraping in and around that 70 level. We've kind of lifted our head up, and I think if Nike gets above 75, this thing is actually clear for takeoff right now. It is a turnaround story inside of 2025.
Randy did it again.
They haven't done anything in the last 18 months. So for the most part, I think you have upside potential. As such in here, I'm looking at Nike, the April 17th expiration. I'm going to be buying the 75 calls, selling the 80 calls. So it's the $5 wide call spread, okay, all the way out to the April expiration. Give ourselves plenty of opportunity, and I'm going to buy that for about $1.60.
So I think about this, and look, maybe this.
We hit the band on the VWAP.
Do you see some $80 targets, some $90 targets? Piper Sandler has a $90.
That was a good cup of tea.
Tell us about the technicals. As I said, not a pretty chart.
No, certainly not. Nike, Greek mythology, the winged goddess of victory here. It seems like the stock at least could use a boost, some kind of a lift from, those wings perhaps here. And when we look down, we can see that it's really struggled to take off. We have bottomed out once again at our old low point there near about 71. But things are actually improving a little bit today because we're crossing above our white trend line there, starting with this high point here after our gap down. Notice as well, we never really cleared that, or filled that gap rather. We didn't even come that close, to be honest with you. We peaked our head above that trend line on an intraday basis. But if you look at our blue downward sloping trend line, even though we had some intraday fluctuations beyond it, the closing prices match up pretty well. So the closing prices are often more significant if you have to choose between intraday or closing. closing tends to be more significant here. Anyway, we can see that the recent term shape, that is more of a triangular pattern between our two blue lines, but we broke to the downside. Now we still have this old blue upward sloping trend line to contend with. RSI did show some improvement. We broke to the upside beyond our red trend line. We are moving above that 50 midline today now. So if we were to assess some support and resistance areas, we can see that our point of control, 77.10, the area of heaviest trading according to our volume profile study, is pretty close to our orange 63-day EMA. So 76 to 77, an important area to clear to the upside. Our linear regression line lines up with our lows near about 71. -1 standard deviation channel comes in near 60.46 if things really start to fall apart. Ultimately, though, the bulls would probably want to break above this range. 79 would represent that long-term blue trend line as well. That would be an important area to break above.
Right, understood. Okay, final quick thought here. Don Kaufman.
Yeah, the overall marketplace continue to look for, again, two-sided trade. I mean,
That's
today,
funny.
it's a little bit of an anomaly. We've actually, we're back right now on the bid inside of AI underlyings, but it's not how we open here. It's going to be how we closed. And as I said to you guys earlier, is you have volatility basically stagnating. Volatility is not pulling back for the marketplace, ripping to the upside. The advanced decline line inside of the S&P 100, S&P 500 happens to be negative. You've got dollar up. You've got bonds actually backing off a little bit. A couple of warning signs, and last but not least, skew is basically sitting at record highs. So we're not done right now with some of the tumultuous volatility.
SPX broke to the upside.
Of just that.
All right, Don Kaufman, and good luck there at Broadcom, the XLE, and Nike, and Rick Ducat there on the charts. Always doing an excellent job. Thank you both so much for the big.
Good job, Rick.
Today. Coming up next, we're going to spotlight the Glimpse Group. The CEO is here to discuss the company's spatial computing and its use in immersive technologies. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange, and it's time for our CEO Spotlight here. We're spotlighting the Glimpse Group, and for that, we're joined by the CEO and President Liron Benjamin is here to tell us a little bit about the company. You can look at the ticker.
Did you get out, Randy?
AR. Welcome.
Thank you for having me.
So, a lot of excitement.
Did you take profit? Very good. So YouTubers, we had a little bounce off the VWAP. And we run it up to the top of the band. You see where it kind of broke over the band and pulled back? You could probably expect the same thing and then pull back here to the triple top breakout off 1 2-bis and a 3B. Boom. For support. And that's right off the 200 SMA. Or the, yeah. What is that? That's a 63. EMA. Very good, lunch lady. AMD strong, new highs, Mannequin says. We got someone in the room taking profit off of it right now. We broke past that second linear channel, deviation channel of 125.13 on the 1 minute. If you pull up the 5 minute, 5 day, 5 minute, where are you? It's 126.28. And I got a 127.42 resistance. Another couple bucks. Hey.
Industrial sector, with corporations, with schools, with universities, with hospitals, and we are offering a diverse set of solutions. So you're not just betting on one solution, you're betting on the industry at large through us.
You recently had the closing of the 7.29 million registered direct offering. You regained your NASDAQ compliance. What's on the agenda in that sense to make sure that your books are looking great and you're reaching your goals in your mind and financially.
So what happened is now we're kind of well positioned to look into the future. What we've said at the last earnings call is that we're kind of looking forward to being cash flow positive at this for next quarter we're reporting. Yeah, the one that we're reporting, the one that just closed.
Right.
And we're going to show significant growth as we're beginning to recognize some of those military contracts that we're doing. And hopefully now with the new government, we'll have a budget that will clear up kind of additional deals for the solutions that we're pushing within the military, and that will drive a really strong 2025.
Yeah. All right. Great to meet
VRAR.
you. Congratulations. You can watch VRAR. And this is Liron Bentovin, CEO, President.
Never heard of that one.
At the Glimpse Group. Thank you for being with us. Coming up next here at the Disruptors, and George Sellis is standing by. He will take a look at Oracle. Company plans to invest $100 billion in the AI space. More details next.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have developing stories for you this morning. We bring in Caroline Wood, Senior Markets Correspondent here on Schwab Network, taking a look at Seagate, which is jumping nearly 10% after its quarterly report. Some upbeat earnings. Let's hear a little about this story.
Yes, the second best performer on the S&P 500 today, behind Netflix, as you said, surging after a beat on both the top and bottom line. Adjusted EPS of $2.03 easily topped the $1.88 that analysts were looking for. Revenue was up 50% year over year to $2.33 billion. Wall Street was looking for 2.31, so top line beat as well. Hard disk drive HDD sales rose 57% year over year to $2.17 billion. Mass capacity sales rose 79% to $1.89 billion. The CEO Dave Mosley said, "We are advancing our technology roadmap to
The 6080 puts went from 2 to 230.
Scalable, cost-efficient, and sustainable storage solutions in the age of AI." And then when you take a look at the guidance that Seagate gave, first of all, more broadly speaking, they said we believe Seagate is in a great position to deliver profitable growth in fiscal 2025. For fiscal third quarter of 2025, they're expecting revenue between $1.95 and $2.25 billion. That's, of course, the current quarter. Wall Street looking for $2.2 billion. So towards the higher end of that range. And then adjusted earnings per share forecast to come in between $1.50 and $1.90, compared with estimates of around $1.69. So in response, we saw several analysts on Wall Street hike their price targets. Morgan Stanley to 134. We have B of A to 130, Citi to 125. Benchmark actually turned bullish following these results, upgraded shares to buy from hold, saying while supply constraint is expected to impact the March quarter, we see continued strong cloud demand along with growing AI business driving results in the second half of 2025 and 2026, where they're projecting non-GAAP earnings growth by 25% year over year. So analysts on the whole bullish on this name. Those price targets are getting hiked, and Seagate up 10% now, up almost 30% so far in 2025. Had a tough back half of last year, but regaining a lot of those losses this year.
Is that STX?
Demand grows, and it's bringing up the whole group. We saw NTAP and Micron and some of the other Western Dig was on there. That whole group doing so well today. Okay, thank you so much. Up 10%, big move, almost 10%. Let's turn our attention now to George Sillis, taking a look at our disruptor. George Sillis, Senior Markets Correspondent, taking a look at Oracle, rallying after, of course, you have the U.S. project of Stargate. This has been front and center, but this company has been working on revolutionizing the company in its own way. A little bit about what's the latest here on Oracle, which is up about 6.5% today.
Yeah, a couple of nice.
They got a huge price target on Seagate.
Well,
Well,
a major catalyst now for this company as well as some of the other infrastructure, artificial intelligence.
It's all over the board
out there, and we've talked about many of these. It includes companies like Broadcom, Aristanet. If you look at companies like Dell in the server space, also moving in sympathy with the news, and the news is pretty significant. If you look at, the Trump administration encouraging and also partnering alongside the private sector for basically the Stargate investment infrastructure program, which is expected to be over $500 billion or up to $500 billion in the next 4 years. And major players from an investment standpoint include Oracle, from a software infrastructure standpoint, and then SoftBank is providing private placement financing for a lot of these projects, including OpenAI, which again, Microsoft has a major stake in. So I think if you think about Oracle itself, this is a major company. A lot of people don't recognize this as a backbone of enterprise resource management software companies. So when you talk about the backbone companies from artificial intelligence and integrating data infrastructure software and data management, Oracle's really locked in terms of the ecosystem and the backdrop of artificial intelligence. Major customers that Oracle has includes Amazon Web Services and all the big data center companies, which are expected to manifest based on these investments, but also based on the secular trends we're seeing in artificial intelligence going forward.
Understood. So this certainly is the beginning of, from the 100 billion to the 500 billion. There's big plans ahead for this Trump administration and these group of companies and the Stargate project. So how would you go about trading this? An example trade for Oracle, which here today is up about 6.5%.
Yeah, so if you look at the stock price, obviously there's some big moves. Yesterday, about mid part of the day, and then today. And if you consider, these are investment expectations, and so there should be a manifestation of earnings expectations that are adjusted based upon these investment expectations in CapEx. So it's not manifesting to earnings right away, but the stock price is moving first. So my point is there could be a small short-term consolidation. And with that said, we have to trade around that. And so what I'm going to do is I'm going to use the lower area of the trading range today, which is around $180, and I'm going to sell essentially a cash secured put going out to February with 30 days to expiration. I'm going to sell the 180 cash secured put. That also correspondingly or coincidentally corresponds to a put delta of around 35, which implies essentially we're selling an option with only about a 35% probability of expiring in the money, which essentially is what we don't want by selling this put. So you could sell that 180 put for around $4 a share or $400 a contract. So if you structure this trade, you still have to be bullish on Oracle, but you won't be assigned shares unless the stock hits 180 or lower by expiration of 30 days. But with that said, you're earning $4 to do that, and your break even at that point in time is $176. So if you're willing to own it at a lower price, and essentially if it does go higher, you still get to participate, this is certainly a strategy you could consider.
All right, George Sillis, great to see you. Thank you so much. Good luck there. at Oracle, and this is just the beginning of a really big story for these names. Thank you. Coming up next, our 360 round will take a look at Netflix after the quarterly report. The stock hits a new high, and it's a new all-time high. It's leading the S&P 500. What's ahead for Netflix, which already has been a leading stock, a leader in the streaming space? Our panel is ready.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Not really.
At Schwab, how I
My
choose to
way's the
invest is
best
up to
way.
you.
Exactly. I can invest and trade on my...
My way's the best way.
Let's move on, shall we? No can do.
No can do.
Get out here. Where are you going?
Schwab. Schwab, a modern approach to wealth
We have the 60/80s from $2 now to $2.60 puts.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Something in my eye or what?
Welcome back to Trading 360. It's time for our 360 round. We're looking at the Netflix earnings and the outlook. We bring in our panel. You have Alicia Reese, VP Equity Research at Wedbush Securities, and Stephen Kent, Media Director, Consumer Choice Center. Thank you both for being with us. So Alicia, I mean, we see these numbers. These are our blowout numbers, particularly for the subs, and for on the revenue side of things, there's a lot of anticipation of revenue growth when it comes to raising prices, maybe another ad tier. So there is some projections for growth going forward. The stock's sitting at $964, hit at almost $1,000. Your thoughts on this name, because you've raised your price target too.
Yeah. I think they're really well positioned to gain on the price targets or the price increases this year. They have situated themselves really well by getting over 300 million subscribers by the end of this past year. They are not reporting subscribers anymore, so now they don't have to worry about the stock impact if they report lower subs growth in 2025. So they can focus solely on revenue growth, and with that, they can do these sweeping, really large price increases across the board and see what sort of price elasticity there is around that. They always do a lot of testing around that, and last year they did very targeted
Testing,
price
1, 2, 3,
increases, which worked
testing.
really well. So there wasn't much churn. Outside of that, they have the ad tier for people to trade down to. What we would like to see is whether or not people choose to trade down or if they churn. I think they're more likely to trade down, and that's simply a function of all the content spend and the content quality and the content variety that Netflix is really pushing into. They're really just positioned so well here with the content to keep people on the service, and people are just able to trade down. And if they end up getting kicked off the service, even on the ad tier, it seems like you're going to be able to add that extra member, which is again just going to push ARM even higher.
And you know, it's like we think about Netflix and what it was, and look at how it became the streaming leader. And you're right, they're not going to be telling us about the subs anymore. They don't even have to, because they have this global full-year presence that has just wowed. The global memberships here are up 16% year over year. You have 301.6 million, but just the ads really much stronger subs than anyone expected in the quarter. Stephen, some of your thoughts and your outlook for Netflix. You know, we think about some of the great content, and we came out of COVID and they had this real surge of people jumping on. What's going to drive Netflix going forward?
Well, CEO Greg Peters was absolutely spot on when he said that they are not putting all of the eggs of these live events and sporting into their basket. They're going to be actually scattering a bunch of seeds. And Netflix's success is not about just the quality of TV shows and movies and then the addition of live sports. It's about being good at a bunch of different things. When I think about what consumers really go to Netflix for these days, It's not the big name TV shows, right? Like Friends, which used to be the bedrock of Netflix streaming before it ended up getting taken back by its parent company. You know, they actually are now having to be really good at stand-up comedy, which is what I go to Netflix for. These streaming events, Jake Paul versus Mike Tyson, Beyonce, they bring in tons and tons of views, but they don't always translate to subscribers. So they have to offer bunches of different avenues for people to get value out of it. And they're proving that they can do that. This has been a massive success for Q4 in 2024 for Netflix, and they're looking at a really great Q1. So just really excited for Netflix, and consumers are loving it, but they are going to complain on Twitter about the price increases.
You know what's interesting too is you think about the global presence that they have. I mean, you think about not just here in North America, but across the board. You think of USA and Canada, but I mean the penetration that they could continue to grow if they have the right price point, Alicia.
No, they do, and they're really surgical about those price increases. In a variety of countries, they actually lowered the price last year and the year before. Just to get that right price point. In India, for instance, they see most people use Netflix on their mobile phones, so they have a lower price point for mobile-only usage. And some countries, they'll just figure out that right price point to get the subscriber growth just right, and they were really successful at that over the last year. I think one of the primary things that creates stickiness, as was said, is they have to have a variety of options. And
God, Netflix raises the price to Wedbush.
Children's platform.
You gotta be kidding me.
It just creates a lot more stickiness to the platform. It gives you one more reason to.
Wedbush raises the price target to $1,150 from $950. May I say, bullshit. I don't see how they can do it. Piper Sandler says 1,100. Washboardjim says it's going to pull back to $922.14 to the penny, with first support being at $937.26 before it ever thinks about going up that high. I don't use Netflix, but I don't watch TV. My TV hasn't been on for 5 years, ever since they took down Cops. Might have been longer than that. It was right about the beginning of when they started censorship, the Biden administration. They took it down. I said, what? And they thought it was because it was demonizing black people. And it really pissed me off because that was my favorite show to watch. I sat down every Friday night with my dog and we'd watch it for years. And it kept me out of trouble. It kept me from going out and drinking at night. And that's one good thing about having a dog. But I don't even have a TV no more. I ditched mine. The only TVs I have are monitors. Got to where there's nothing on there to watch. I'd almost like to short this thing. I wanted to do it this morning, but I didn't do it. This is what I called yesterday when we had that peak right there. So I could redo these Fibonacci's, but I'm just going to leave it where it is and see if I was right. $937.26 is what I want to see. Another $30 drop. A little less than 30. SPY dipped down and had a new high. Oh, Mr. Hickey is on.
So, no significant changes from yesterday, but headlines are driving today, right? Like Netflix and Oracle and all these names that
And
are
Trump.
making big moves today in the market. So,
Say
this
it.
is, I think, an extension.
Say it. We're going to be in a bull market with Trump.
Today, not as much, but now headlines are driving the market. You know, we're getting a headline just about every hour here from the Trump administration on something.
There you go.
Big
You finally
news,
said it.
As you know, came out this morning. So, without any earnings, without any
That took a lot of
economic
balls,
data
old
really
man.
to change the tone. It looks like, at least for now, other than the Russell, which is struggling today, the three major indices are all green again, Diane.
So I think it's a good time to bring in Kevin Green, our senior markets correspondent. KG, what's your take when you pay attention to today's market action, especially when you see, the S&P 500 really toying with that all-time high or hitting a new all-time high?
Yeah, so look, we had running out of this rally here over the last couple of trading sessions, a lot of sectors participating. What's a little bit different about today, in my opinion here, is the makeup or the composition of the market. Tech is obviously leading, communication services is very strong. You're seeing a little bit more of a concentration in big tech once again, right? The advancing stocks for the S&P 500 sitting at around 40%. So we don't even have the majority of stocks actually advancing today, which is perfectly fine. We've seen this environment before. You have the VIX actually up on today's session. Excessive call buying is taking place here, but we might be, getting a little bit exhausted right now when it comes to the rally, at least on an intraday basis. But if we do see a VIX up, stocks up event, that's something to also kind of be mindful of. Yields inching higher a little bit, dollar inching higher a little bit. And then I think that 20-year bond auction, which is not very popular, will be something to put on the radar. First one for this administration. Let's see what the demand is going to be. This is overall, it's a decent rally. I mean, the 6,100 level is a very key area, though. There's a lot of positioning there, Diane. So it might be a little bit difficult to try to break above that today on an intraday basis. But when you're looking at what has led us last year, concentration of the market and what can actually push us higher, today is kind of emblematic of that and not really showing what we've seen over the last couple of weeks where breadth is actually expanded, which is okay.
Yeah, okay. KG, Kevin Hinks just talked about this, the headline that are moving markets. So you had that massive Stargate investment announcement and what you just talked about in terms of the sector action. It really looks like AI is the place to be based on the action today. Now, I know you can often, kind of point out the pockets for potential weakness, but it looks like that AI and the tech trade is the place to be. Is there anything concerning about that as far as it goes today?
No, I mean, that's how we were able to make a large amount of, I'm sorry.
When you get a headline like we got this morning, it energizes the sector, right? However, this is day 2, Diane, without Tesla, without Apple contributing to this rally. So I see NVIDIA, slowly but surely, and actually quite quickly, Broadcom is becoming really a number 2 AI player. But you've got Microsoft up today. Obviously, you've got Oracle up big, Netflix up big. So there's still big, high-profile names driving or taking the place of Apple and Tesla today. But this is still, when you look at a heat map of the S&P 500, yeah, it's less green than it was yesterday. I mean, it's actually 8 out of 11 sectors are down, but the market's higher. And it shows you the dominance of that tech sector. Now, does that give you any concern going forward? Well,
yes.
We've all got earnings coming up in the next couple weeks here, except NVIDIA is a little later in the earnings season. But a lot of these names in the next 2 weeks are going to be coming out with earnings, so that might be a little concerning for the market. We're looking for some reason why the market might stop. Earnings might be that, especially when those names are dominating. Now, the bet you have to make there, or the the theory there is they're probably going to have good numbers, right? A lot of these companies have had strong quarters, so we'll see how this plays out. But right now with the VIX, it was, the VIX is back over 15, but it was almost 14.5 this morning, Diane.
Tonight's Discover.
But let's talk tariffs now. So, we did have some commentary.
We got AAL Thursday morning.
Tariffs set to hit China and EU tariffs.
And Alaska Airlines.
It did actually, come to surface because on day 1 that didn't occur. But so far, it doesn't look like it's
screeching's killing me, honey.
Impact on markets. Do you think that would change?
Yeah, I think once we get a little bit more clarity, I think the administration is probably still working this out. So, because some of the numbers that even President Trump is actually mentioning kind of doesn't align with what he said with the campaign, which is perfectly fine. And actually, if that's going to be the case, I think that's going to be a tailwind for the markets. Going from saying 60% tariffs on China to yesterday, the comments being around 10%, I think the market's going to take that as a win for now. And if we do get closer and closer to the deadline or these perceived deadlines of February 1st, or if it's March or April or what have you, and we start seeing the rhetoric ratcheting up a little bit or getting a little bit more aggressive, I think that will have an impact when it comes to the dollar and also yields. He did make a comment today regarding Russia and potentially putting some tougher sanctions and tariffs on Russia if they're not able to come to an agreement or resolution for the Ukraine-Russia conflict. And I thought that was actually very interesting to see how that's going to pan out here. But if we get less than what is expected when it comes to the tariff policy, that's going to be a tailwind for the markets. It's also going to be a tailwind for the Mag 7 names, those multinational names that do have exposure to China, because pretty much every Mag 7 name has exposure to China outside of Meta, outside of Meta for right now. So that could also be a tailwind. And then the technical setup for all of these names going into earnings. NVIDIA kind of hitting a key area, getting close to a key area of 150. Can we have earnings that actually break that out? Meta doing the same thing. Amazon officially breaking out pretty much today. A lot of these are kind of coiled up stocks, and if you get that follow through, that economic message, you get the earnings message there, that could be enough to really try to break us out to the upside here. And it seems like that's what the market's trying to prepare for right now.
And Kevin Hinks, I know we talked earlier about this. It doesn't seem like there is tariff talk. It doesn't quite seem as tough as expected out the gate, or even compared to the first administration of President Trump. Are you expecting more tough tariff talk yourself?
Yes.
Well, I believe that the Trump administration believes in tariff, like Jamie Dimon said this morning, as an economic weapon, right? Those were his comments from Davos this morning. He thinks that this is just the start of negotiations. But however, as you...
I agree and I disagree. I think tariffs are more or less... It's going to be that, but I think it also is going to put a stop to a lot of criminal activity, like Mexico and the migrants. You've seen how it worked before. He threatened to, slap a little bit of tariff on them, and they straightened up real fast and stopped that human trafficking over the border, like he's doing right now. And that's the same thing he's using against Canada. So, I think it's a 50-50.
Going to negotiate off of that stand, Diane.
All right. Well, we know it's not all White House action setting the tone today. We've got some earnings that the market's chewing on. Netflix, KG, making a big move today. They beat across the board, whether we're talking about adjusted EPS, revenue, the subscriber number.
But what do they make, honey? They don't make nothing.
Obviously, it's been the subscriber numbers. No analyst really had the fact that they were going to almost double the expectations that were out there. And then if you couple that with the premium increases for the North American markets and also looking at maybe some of the South American markets, they're looking to monetize on that fairly quickly to drive top line growth as well as to improve operating margins. And that was the only thing that probably was a little bit of a negative. You saw about a 4-point.
I'm going to see what this other Fibonacci does on here.
The price increases are going to offset that, and I think they're also making a calculated bet that that massive growth, even if they had, let's say, an 85,
it actually lowers this. No, it doesn't. Raises it.
Subscribers, that's still going to be a net win for them overall. So this is a company that has been able to not only walk.
So what should I do? I'm going to adjust this.
Every time that they report earnings over the last couple of quarters here, even though the price continues to advance. The multiple is still kind of staying where it's at, even before the earnings, because the fundamentals are actually showing up, and they're kind of the kingmakers in the streaming space right now. So phenomenal results. $1,000 is a very key area for it to actually see a little bit of a resistance, right? A psychological level, positioning in general, but this is a really good report here.
Yeah, you can see it by how it's trading. Like it's really, it seems to be difficult to hit that $1,000 level. It just gets very expensive. And then there's all this talk about would they split kind of once they hit that level. Kevin Hinks, I know you've been watching a bunch of these movers. It wasn't just Netflix, it was United. We've got Seagate. That's really gaining some momentum. We had Capital One and P&G out today. What was the earnings story that stood out to you?
Well, a couple things. Netflix, the big numbers that they put up. Think about this. In the last 12 months, they've added 41 million new subscribers. that is an incredible number. That's more. They've added this year more than the total subscribers of some other companies. So Netflix, a company that we're all worried about, how are they gonna, get the money to spend all this capex and bring in this new content? They are now the clear leader in streaming, and with no one else even close, frankly, to them. Then there's United, that if you look at a chart of United, and it was one of the topics we had on yesterday's show, how far that stock had run. A lot of people thought that it had run too far.
I didn't.
Here's United, as
I didn't think it.
The 11 o'clock hour in Chicago, actually down now, but it was,
I carried on last night about how much flights have increased. I mean, it's like almost like 15 to 20%, 20% at least in a year in prices. So they took advantage of the situation. Although the oil and gas declined in price, they did not decline. They kept it there. I mean, look up there and see how much it costs now to take a flight. Over $1,000. I mean, and then they stick you with these longer hours. I mean, the shorter the hour time to get to your destination, the higher the price is going to be. So it can run from 1,000 to 1,200 in some cases. At places I want to go, which is only a 6-hour flight, 5-hour flight from where I live, Jamaica or Mexico or anywhere, in my tropical Hawaii would be definitely. I think back in 2004 it cost 1,000 to. It was about 600 and something in 2004 to fly to Hawaii from California. I don't know what it would be now. I didn't even look. But I flew back from it was $1,000 when I flew from Hawaii back to Missouri. The shipping costs were about $1,000 to ship my truck back in 2004.
Some of the labor force and union activity that can be a headwind. All right, thanks a ton, KG, for that insight. Coming up, we're taking a closer look at Oracle. The legacy tech stock is moving higher today after Tuesday's Project Stargate announcement. Kevin Green will be back with us with an example trade for Oracle on the other side of this break.
Netflix, NFLX.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick. Knock, knock.
#1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market. Shares of Oracle rallying today after President Trump announced up to $500 billion in private sector investment in AI. The joint venture called Stargate brings together Oracle, OpenAI, and SoftBank. Oracle Chairman Larry Ellison said nearly a dozen data centers are already under construction and more are coming. I want to bring back in Kevin Hinks and Kevin Green to this conversation. Kevin Hinks, co-host of Fast Market. KG, let me throw it to you. So when we started having this conversation about the development and race to be first in Gen AI and AI growth, and there was a conversation about how it would be a jobs destroyer. The president promises this
AMD strong with new highs
create
still.
Jobs, hundreds of thousands of jobs. What's your take on what this signals for Oracle, KG?
Yeah, I think there's several different factors for Oracle. First, obviously they have a lot of exposure when it comes to cloud and the data center business as well here. So they're going to be a direct beneficiary of this AI spend and trying to build out these data centers. I mean, not only when you're looking at Oracle, but also some of the hardware, stocks that are out there like NVIDIA. But I think this really does kind of put them at the
Here's another one's had too big of a run.
Transition, and it appears, and we know that Larry Ellison has exposure and pull within the White House. So he might be the first one to get some favorable deals if that's going to be the case here. Now, and then the SoftBank side of the equation here, which I find very interesting, is the amount of money that they're willing to spend. I mean, they're talking about $500 billion, $500 billion in a matter of 4 years. That's a lot of money. So it will be a job creator. It will continue to spark interest when it comes to the AI trade. And I think that's going to be a benefit for Oracle. Let's put on the other side of that too, in the lesser story that we've seen over the last 24 hours. Oracle could also be a part of a deal for TikTok. And that could be a tailwind for them too when it comes to purchasing the U.S.
I'll be right back.
A lot of good things happening for Oracle, and luckily you are seeing a nice little bounce here. Let's see if it's going to be able to hold. They don't have earnings for another month and a half, 2 months or so you don't really have to worry about that risk. You just want to see this hold up. Maybe some more good news comes down the pike here.
Maybe 176.32.
Yeah, Kevin, what I was looking at in Oracle is very similar to what you were looking at in that, you mentioned cloud for Oracle. Well, if you look at the overall market share for cloud, Oracle is a very small player, which means 2 to 3% of cloud. If they were to just go to 5 or 6%, that's double. That's 100% improvement or growth in their cloud business. And yeah, you're right. They were, a small player when it's beginning, but slowly but surely, Larry Ellison is making his way into a lot of conversations lately. This story this morning, combining with SoftBank, combining with OpenAI, and not to mention what that'll mean if he has anything to do with the purchase of TikTok. And by the way, if you look at the chart in Oracle, they had sold this stock off pretty hard the last couple of weeks. It was, it traded as high as 198 when they came out with their earnings. Remember, you mentioned, Kevin, they have earnings late in earnings season. So they're just coming off their third quarter earnings. So, this stock up $12 today and change is still $8 from its all-time high. So it was higher than it's trading even right now. So Oracle could be a fun one to watch over the next couple of weeks.
Yeah, I agree with you. Yeah, I was going to say, I agree with you, Kev. And then also, they're a hardware and networking player too. So that's kind of what they're known for. They do have a legacy business too that they're trying to wind down. So this is actually really good news for them. And obviously we're talking about the AI and building out the data centers, but Oracle also has built out the infrastructure for TikTok. That was actually one of the things that we heard in October and November of last year. So they already kind of had their hand in the business. So we want to get two tailwinds here, two big market-making news items that is directly impacting this stock. And if they're able to kind of maintain for now, who knows what their earnings are going to be, because they've been kind of mixed, depending on the quarter. But if you can at least get enough enthusiasm in the news flow to really kind of match it, this is where you kind of get enough to try to break to these highs that we've seen as of late, and maybe try to break out. So this is going to be an interesting setup going into the earnings, and then also just the news flow in the next days and months.
Okay, so speaking of the news flow and these tailwinds that Oracle has, KG, how would you structure an example trade for Oracle?
Yeah, if you kind of look at the technicals here, we had this breakout to the upside above that 172 level, and it gapped higher. And the reason why that's really important, there was a gap lower between, let's say, 190 and going down to around 178. So that's actually now been filled. And you do see a little bit of support at the 180 level. So I'm actually looking at, as an example trade, of selling a put spread, selling the 180 put expiring this Friday, buying the 175 put, doing this for a credit of $1.15. So the max gain on the trade is going to be the credit received, $115. Max loss is going to be $385 with a break-even point of $178.85. And that break-even point aligns perfectly with that area of support that is laid out there on that chart. And you're trying to capitalize on the high implied volatility within this name right now. I mean, IV is sitting at around 34, and so this is already looking like a ramp up into earnings, and you're looking at the implied volatility. So even if the news flow does dampen down here, and the stock's able to remain above 180, time value is kind of going to be on your side. The IV crush is going to be on your side here. So you'd like to see it stay above 180. You have a little bit of wiggle room if it does break below. And then you're able to manage the trade if you do see a massive reversal over the next couple of days here, if a market's available.
Risk defined, Kev, and a 71.25% chance of a probability of finishing out of the money on expiration. Remember, which is only 2.5 trading days from now. So this is the trade, a bit aggressive, right? Because it's in this week, and you're basically, selling a put when the stock was lower than that started today. But this is market-changing news for this stock. So being aggressive with a short put vertical, like I said, set right now where it sits, 71% chance of finishing out of the money. Is that it's what we talk about? It's high probability, it's collecting theta, it's risk defined. Those are the three pillars that we look at with any short call or put vertical, Kev. This one touches all those.
And then KG, what would you do to manage this trade if you are kind of running up against any potential losses, or what would the exit strategies in terms of this example trade be?
I think you would look at that 178 level, and if it's going to be able to hold as an area of support, maybe keeping the trade on. If you have multiple contracts, if you feel like there's some risk, obviously manage risk here. What you don't want to see is a massive reversal to the downside, and the reason why it's really short dated is because, once again, the IV, you want the positive news flow. You don't want anything to abate when it comes to the enthusiasm for the stock. Put call ratio for today is sitting at 0.27. So there's a lot of call activity that's being brought in this name. This is just trying to capitalize on the enthusiasm. News flow usually lasts for about 24 to 48 hours. Kind of aligns with the expiration of this trade here. But if you were to see a
Randy,
for whatever reason,
I think we're ready for a pullback to the 200.
That break-even level as being probably that trigger in order for you to kind of
on the SPX.
Yeah, well, there's certainly some news flow.
Same as the SPY.
Really, Larry Ellison. When you think about both Oracle, with this being in partnership with Stargate and OpenAI, and SoftBank, and then obviously with TikTok as well. So Oracle is certainly one to watch, and that's an example trade for Oracle today. Thanks a ton. Kevin Green, Senior Markets Correspondent here on the Schwab Network. Coming up, the team from Likefolio will join us with consumer sentiment data for Tesla. Shares up 5%.
Oh, look at all them puts.
They've gained more than 100% over the past 12
Who put them in there?
Sarah here on the Schwab Network. Fast Market will be right back after this break.
Yep. I'm going to look at the puts. I'm going to take a chance. The SPX 6080s at 195 if I can get it.
3 p.m. Eastern, it's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim. The award-winning trading platforms. Bring your trading into focus on the
Get it to
Thinkorswim
me.
desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
It's not going to give it to me. I'm going to take $2.
What's up, Carl Nation? It's your number one.
What's up, Carl?
Full service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah.
We're experiencing technical difficulties.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate.
$2.
All with low fees.
We're experiencing technical difficulties. Carl.
We're experiencing technical difficulties. How did I late? How did that erase? Was it supposed to do that? We're experiencing technical difficulties.
Quality Focus has worked pretty much across
Ooh,
all 11
no.
sectors.
We deployed a fantastic array of
Damn
new
it.
technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
I hate this commercial.
The old guard is saying, away, off with their heads.
AI feels controversial on its go.
I won't listen to it. God darn it. We're at 175 now. Okay. I want to toot my horn here. So I have two contracts now, one at $2 and one at 175. No. Oh. I'm curious if that shows the VWAP on the SPX on this one. Oh, that's a SPY. Oh, I've got this on the wrong thing. You dumbass. I don't know, I might be wrong on this one again. I was wondering why it showed the VWAP on there. It's not supposed to do that. I'm experiencing technical difficulties. Jeez. My watch is killing me today. 6097. And we have a 123. We have a 123, but it's right there. Damn it. Seems like I'm fighting the bulls right now. 188 average. I tried to get someone to help me pay my taxes and no one would do it, so I did it myself. My target for the put would be the 608849 off the 200, but we got to break the 609404 area. Six oh nine 94. We got to get below that. $6093.99 with a 123 for right now. It could change, and if that doesn't hold, I think we'll bring her on down to 6090 for a triple top breakout. $609012. But I don't know. It's just now formed an ascending triangle, and I don't like that. Not one bit. Almost. Not yet. There we go. I'm now schmeevin'. Go get my tea and I'll be right back. We'll know here in a couple of minutes which direction this thing's going to take. I'll give it less than 3. Oh. $609,748. The countdown now begins. Nancy, will you come here and massage my back for me, baby? It's really having a hard decision. I got 1 more minute left. Less than a minute, almost. There we go. Now let's build this body candle under this here pattern and not let it go back in there, and I think I've got it made. We don't want that body to get back up in there. Randy, did you take the risks with me? SPX, good to go to the downside. I think so too now. I agree 100,000%. I'm now green in my trade by $4. Saying you don't pay much. Should have got a lot more. Bought about 3 of them down there at 165. Go away, little girl. It's not paying much at all. I should have made at least $50 there on that put. I'm even. So I think I'm going to get out of it. Well, got up to 205, but that ain't nothing. Well, looks like I might have to wait for another hour before I get my results. I don't like it when things don't go my way. Do you understand me? I said I don't like it when things don't go my way. Wake up, Randy. I said, wake up. Nope. You see that guy? She's late to answer that one. God, I'm waiting for you to drop. At least get a 250, okay? The VIX is rising. Magnificent, you give me a good grade on this trade if it goes to 250? It is a song by Johnny Cash. My name is Sue. How do you do? I drink tea. This is my second glass of decaffeinated chai. I want to see 6091.88. Could have sold that for $35. I sent you a friend's request. Damn it. I was up $35. I should have took it. Anybody on YouTube got a chart they want me to look at or a stock? I'm making a request. As I watch paint dry here. Another. Oh. Next time I'm going to load up 3 of them. If we get down to 160. 210. I'm gonna be rich. I'm gonna be rich. Crowd doesn't know what to think. He's at 210. It's at 210. It's at 210. Anthony. Penny stocks ain't doing nothing. We had a little run on DATS. Bob. I'm at 215 now. I'm starting to score. Come on, give me 250. Give me a big old fat knife. I'm about to hit my first support at 6093.99999999.
And the Nasdaq, Alex, as we kick off today, or this hour here, 1.6% gain to the upside. So S&P did touch a new all-time high. It feels like right now there's very little to get in the way of this momentum that's still overwhelmingly to the upside, at least in some of the largest.
Jenny, I'm trying to get in its way.
A pullback today.
Yeah, new all-time high.
Hey, girl, I'm trying to get in its way.
100. So. Pretty fun stuff. It's a really powerful rally. There's the kind of not fiscal spending, but sector spending within AI that was announced that could be exciting things a little bit. You do see the semiconductor index leading. You mentioned the NASDAQ strength. So there's certainly some fundamental news behind this as well.
About
you do see
$45
a little
bucks, or it
reprieve,
was.
over the last few weeks in the Treasury market. So the fact that that market is stabilized, I think, takes pressure off things as well. You also see the dollar's a little bit pulled back off its high. So a lot of things working.
Ooh, 225.
For stocks, but Jenny, we're going to set aside those conversations unless something massively changes. And it's not one of those days that you really feel like it's going to. Certainly can, headlines at any moment, but kind of seems like this story's been...
I've hit my next support.
I agree, especially because we had some pretty solid earnings,
But damn.
I think, across the board this morning, as names like Netflix, which is still up 10.5%, United, another nice performance, but now pulled back.
This is
90%.
just worthless.
So not a whole lot here as far as some of the data we're getting throughout these sessions to change the overall direction. And unless, of course, we get a massive update from the White House.
I'm sure I saw 235 there. And that'd have been almost 80 bucks. It would have been 80. So market's headline driven is what Hickey said. I got a headline for you. I need to get out of the trade because I'm at my resistance support level. I drink tea. It makes me a jolly good fellow. I drink decaffeinated tea. I just realized we got two Bobs in this room. We got a Slobby and we got a Bob. Put it together, you got Slobby Bob. Besides myself. And neither one can hear what I'm saying about them. Bond action results are coming in. Could tank the market. Yes, it could. I'd love to see that. It could tank the market. So we'll go to Market Watch. Economic event. I don't see it on here. Market drive. Futures liquidation. Hi. I'm about ready to sell these.
brands, but to me, this analyst points out the muted cord cutting. Well, maybe it's muted because of things like YouTube TV, which sort of also offer alternative options for traditional cable. But also, ESPN is one of the few things that live sports, you can't really watch a game after it's already happened and get the same enjoyment. So if there is a piece of cable that you still need, if you're a sports fan, it's something where you can get live sport games, or you got to go somewhere and watch it, because otherwise it's all ruined on social media if you open it for just 1 second.
I was going to say it's the worst to be delayed watching a game.
It's weird. I don't care about sports anymore like I used to.
Record them. And you can't go on, I can't go on any sort of social media platform because the memes on these games now are out of control.
Be honest though, do you really, if you record a game, do you really ever go back and watch it?
Yes, I do, because I'm
But have you already looked at what happened though?
Yeah, probably.
Okay. Yeah, you want to see, you're checking the tape, you know, doing some equations, seeing how things are going to work out for bets or something. But for me, the utility of watching a sports game is watching as close to live as possible. That's why going to the game is important. That's why watching it on a screen that isn't delayed is important, especially if you're participating in some of these companies like DraftKings or FanDuel. The slowing of the information, that'll cost you.
That's true. And gosh, the Rams game, I was on like a slice lane without realizing, and it's awful because you're just like completely off with the rest of the society. But nonetheless, shifting gears here and actually looking at Reddit with a downgrade today from Roth MKM. Too neutral from buy. Price target though lifted to 195 from 116. So they still said they're raising their estimates and targets, but did note that since going public in March of last year, at $34, Reddit share prices have gone up around 450% as we are trading right now. Even with a 2.7% pullback. They did say that given, again, its rise in share price, they do believe risk and reward is fairly balanced at these current levels. So not necessarily a complete re-rating. They're just saying take more of a pause from here. Again, with the price target, that implies upside. So right now, this name does have 14 buys, 4 holds, 1 sell.
Got another flag going on.
But the average price target actually implies downside from current levels because they've seen such a meteoric rise to the upside. I think that there's election noisiness still. I think that Trump reviving a lot of enthusiasm regarding like Truth Social. He's been more active again on like X, for example, Elon Musk. I mean, social media has been a hot spot as of late. No surprise, I think that Reddit has gotten extra attention because of that. And I think just again, there's a lot of chatter online right now. Love it or hate it about the election.
Just in general, this is where things are going. Digital advertising is going to places like Reddit and Meta and X and all these different platforms because that's where people's eyes are. And so whether you're a Redditor or someone who goes on X, whether you go on both, it really doesn't matter to these platforms. They want to grow their user bases. They want to have advertisers advertising their platforms. Always important to note that these calls from analysts, while maybe prudent, basically acknowledging, hey, this stock's almost 5x since it's went public, maybe it's gone a little bit too far. They're a little bit more risky in the sense that they're basically saying, hey, this is the time to say. You could have said this a lot of times over the last 6 months, so perhaps they're right, perhaps they're
I'll get ready to call a
not.
squeeze to the upside.
Hey, maybe you missed this, wait for it to cool off if you want to get in. I'll give you next segment's news now in the sense of what we may hear from Rick. I'm guessing we're going to hear the words bearish divergence, so that's going to be a preview for what we might hear from Rick.
Oh, I think that's a pretty good guess to make because I could also imagine we're seeing some divergence as far as momentum versus the performance of shares as of late. Now, our next name today is App11. Talk about another chart that looks meteoric. I mean, this name is up now 180% over the last 12 months. I actually had to triple check my platform because I was not believing the numbers I was seeing as far as some of the percentages I have automatically on the platform, but I mean, talk about a run. Today making another 7.3% move to the upside. And UBS, I mean, another analyst coming in today, giving a sizable...
I did hit my support.
40 from 315, which to me says we're a bit late to this call, but they did say they have more confidence in the e-commerce opportunity following channel checks, which they said were directionally positive, but indicated fourth quarter likely didn't feature any major algorithm tweaks for gaming user acquisition.
Gosh. It's going to take so much of her.
Other advertising channels. No bears in this name, 20 buy, 7 holds, and a price target that actually implies some slight downside from you. Yeah, 357. So we're at 362. I have not been paying as close attention to this massive move to the upside that's only propelled throughout today's session.
Okay, so that's perfect then. What do you think the market cap of this company is?
Gosh,
You
probably
may know.
smaller.
No, it's way bigger than I would have guessed.
Is it over 100 billion?
It is $128 billion, like 700 and some percent
For
total
app?
return over the last 12 months.
For
And
UBS.
Every time we talk about it, I look up again. What does this company do again? And it never makes any sense to me. Helps, I guess, app developers manage those apps, monetize them, take care of all the things that
For apps.
those who are smarter than me and are able to develop apps can figure out how to do. But AI is part of their company description as well. That can't hurt.
I know, especially because I do feel like with the overwhelming theme of this note today and what I hear from the street is that these e-commerce advertisers right now are so willing to spend online because it's like the most
It
lucrative
had a pop
aspect
today.
of businesses right now that App Love intends to benefit just from like the increased dollars right now being flowed into e-commerce, but that's not really a whole new narrative. It just seems like AppLovin may have finally found its rhythm with this market because
I'm ready to take a nap. This is a boring trading day.
I mean, again, meteoric. Last thing today is unfortunately our worst performer of the bunch, that is Celsius, with TD Cowen downgrading shares today to hold from buy, price target of 29 down from 40. They did say their retail tracking data indicates a deceleration in their sales growth of Celsius to around 0.3% in the last 4 weeks that ran through January 11th. They did say Celsius shares are already well below highs, but with its valuation multiple possibly contracting even further, the company could go X growth. And they said that heightened competition does continue to increase the risk of this scenario. I just anecdotally wonder if we saw too much pull forward growth, but this name was all of the rage. I mean, it was everywhere on every social media platform. I couldn't get away from it. It marketed itself really well as being like the healthier, the pre-workout drink. I will say from just caring about the energy drink world, that's not true. I mean, it was the same junk for you that's in every other type of energy drink. They just market it better. But so much enthusiasm around this company, it's still a highly competitive and saturated space in the energy drink market right now.
This is the risk when you see stocks that go basically parabolic like this one did, especially when they didn't revolutionize anything. I will say that they did a lot well, though, with sort of that branding around fitness and pre-workout is sort of expanding the marketplace. I've talked about this a lot. Monster, Red Bull, their target demo was like action sports and like snowboarding and things like that. So this did open that door a little bit to others who maybe were hesitant to a Monster or hesitant to a Red Bull. But once you're in that world, who's to say that you aren't going to try them, some of these other brands, especially if they're cheaper or more available. And so while Celsius has done a lot of good for this space and expanded those who are looking for caffeine alternatives or other energy alternatives, at some point, even with this pullback, this is still a $6 billion company with, as of the end of 2023, less than 800 employees. Like, it's lost 50% of its value and it's still worth $6 billion. It didn't create AI. It's not AI energy drinks. It's energy drinks. So I think that's the kind of the difference. There's a level to how high you can, how big you can grow when this is the business you're operating in. For context, AppLovin, also small employee count, less than 2,000 at the end of 2023, but again, $128 billion market cap.
That is just ridiculous. That's a great market cap factor. I'm never going to forget now, and hopefully, I guess it continues to move to the upside. But Celsius, I think that there was a while where it was now becoming more and more mainstream. It was in grocery stores, it was in gas stations, but we're there. So now, to get that next leg of growth, I think is really difficult in a market where there's so many competitors. I mean, I tried them all. Like, Coke has some, Pepsi has some, there's also the Prime energy drinks.
This is a good point, too, and this ties in to what we've seen in things like Chipotle.
Well, we hit the 200 this time.
They are coming in as new players. They were doing well for a while.
I just don't know about this. We definitely hit the 200 now, and we hit my trend line earlier. So I'm going to make a bold statement here. Today's commercial will be Twinings Chai decaffeinated coffee. I've been off caffeine for over 2 months now, and I've noticed one thing about my body is that I'm starting to grow hair on my chest. Twinings Chai Tea, brought to you by Washboardjim, retail traders. It took me 63 years to finally grow a couple of hairs on my chest. NASDAQ is dropping, Wash. SPX will too shortly. You think so? God. 5, 10, 15, 20, 25, 30. I've been in this trade for under 40 minutes. I ate my last banana. I know what I could do. I could go in the kitchen and make me a cheese burrito. But I won't. This is the third time down now. If it doesn't do it in the next few minutes, I don't think it will do it at all. Because here I am, just a little bit under even. I'm above even. I'm up $4. Oh. Uh-oh, here it come. It's on its way down. Go ahead and drop. Open the door. Does anybody on YouTube have a stock they want me to look at? Oh. Randy. This time I will sell. Mike called that to the penny. Right in good timing, Mike. I think we'll get more now. I could sell mine here at 220. Come on. You son of a bitch. Now we got a hammer, so that ain't gonna look too good. $60.90.12. Give it to me, please. There's my 220 if I want it. Mike's probably all out by now. I'm up to 21 futures. You don't think I can get 609012? If I do, it'll only be $5, probably more. La 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 la. 2.15. That was one of the boringest trades I've ever took in my whole entire life.
Highs just above 417. We had an upward sloping, rather narrow, rather tight blue channel here that gave way to this protracted sideways period here. Very, very.
Right there, it went down to 145 on that big fat candle. Could have been a good trade right there, $50. It's right now 225, and I'll be right back. I think I'm going to go do a treadmill or something. There's back to 215. Dadgummit. That'd have been a good trade. Did you see that, Randy? Shoot.
Really interesting chart here. Last but not least, when we look at key price levels again moving forward, what are we expecting?
Oftentimes when you see a period of sideways price activity for an extended length of time, you'll find an accompanying volume node here. So what this tells us that this is the key price level within this range. So around 335 or so, that's the heaviest trading point. It also lines up very closely with our old trend line and our yellow 21-day exponential moving average. So that seems like a noteworthy point to keep an eye on. Then we've got our range low at our green line. But even more importantly to me, we have our volume node, our orange.
Not a very big day today.
And the highs from that consolidation area that I mentioned earlier, around 292. So there's some extra weight to that area. If we were to move to the upside, +1 standard.
There's about
deviation
225.
Comes in near about 382. Then we have our old highs near 418. Then the +2 channel at this time is near 483 or so.
Okay, yeah, so a really phenomenal move today. And again, making a 6% move to the upside. Again, pulling back from session highs. But all things considered, a really stellar chart. Appreciate it, Rick Ducat, our chart master. Now we trade this name. And so leaning into perhaps some more bullish conviction here, for example, trade today.
Yeah, this could have been the FOMO stock today. What a run this name's had. We talked about its massive market cap appreciation over the last year. But say you see a run at those highs, and I'm not talking about the highs all-time intraday around 418. I'm talking about the all-time high close around 401. Big round number of 400 ahead of earnings, a 10% or so rally. Call calendar spread 400 strikes, selling the 31st of January, buying February 7th. So just over the next few weeks, and looking for that move. $3 debit, $300 in max risk here on this one. Kind of a mountaintop risk profile on there. And when you're looking at this, $300 in max risk, needs a move towards 400 for this one to work out, and you don't have a lot of time, so you need some help from
WK.
Yeah, and hopefully seeing some more recapturing in session highs. But like you said, we pulled back pretty substantially from all-time highs here. So even with a 730% move over the last 12 months, we'll leave it there though for our Chart Master segment. Now coming up next, time to talk the move in Discovery Financial ahead of these earnings here, which is getting another pretty sizable move, and we haven't even gotten those financials yet, so we'll dive into what we can expect coming up next.
Ooh.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
In the bed.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go, at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for FOMO, and we are looking at Discover Financial here with earnings due out after the close. So here to tell us more on what the street's expecting as a name that it continues to really see nice upside. I mean, yesterday we were pretty much at highs, today with another high here in real time. And I'd like to welcome in Caroline Woods, Senior Markets Correspondent for the network. So Caroline, we know that right now Capital One is one that's so closely correlated with this name, and this is making also a nice move today. So I'm sure playing into the momentum into earnings. Yes, a lot of optimism heading into this report after the bell. As you said, Jenny, shares up more than 3% right now, sitting very close to all-time highs. And if you take a look, Discover Financial actually up almost 13% to kick off 2025, up almost 100% over the past 1 year. So one would say the bar is pretty high heading into this report. In terms of what Wall Street's expecting tonight, adjusted EPS $3.17. That's a big tick higher from the year ago's $1.54 on revenue of $4.39 billion, also an increase from the year ago period's $4.2 billion. When they last reported, they said that their financial performance remained strong in the quarter, that they benefited from increased net interest margin, modest loan growth, and some credit improvement. So we'll see what they say about loan growth in the fourth quarter, also the impact of the higher for longer rate environment that we've been seeing. And also anything about credit trends and potential credit delinquencies. This is really a kind of good insight into the health of the consumer when we hear from companies like Discover. You mentioned Capital One Financial. We, of course, heard from them last night. They said that their acquisition
Not
plans
saying
for
much.
Discover remain on track. They, of course, back in February of last year announced their plans to acquire Discover in a $35.3 billion all-stock deal. The deal is expected to close early this year. So Capital One says that they're on track. So we'll see what Discover has to say about that as well. And you know, it looks like, as we said, there's some optimism. Shares up about 3.5% right now heading into this report.
When we're looking at this with that deal kind of on the table, how does that influence kind of how the street looks at this name? Is it still sort of judged on its own, or is it judged more off of Capital One's performance at this point?
You know, it's hard to say in terms of, you know, obviously we've heard analysts weighing in on the expectations for the deal. If you take a look for Capital One and for Discover, they're kind of split for Capital One, and with 50% in the hold camp, and actually even more for Discover. About 63% of analysts are in the hold camp for Discover heading into this report. So could also be a valuation played into it as well, given the good, you know, pretty impressive run-up that we've seen. Capital One has also had an impressive year-to-date performance, or January performance, up about 12%. Now, if you take a look at the median price target for Discover Financial, it's $194, and Discover
Man, that's a boring day. My oxygen level is about done.
Right now, so almost $2. The median is almost $2 below where it currently is. But we have seen some price target adjustments heading into this report, both in hiking and actually scaling back those price targets. So the high on the street is now UBS at $239, which implies, you know, $39 upside and change, and the low is at $146 from JP Morgan, which implies, you know, double-digit downside from here. So, you know, not a single sell rating on the street. The other analysts, the 37% of analysts are in the buy camp, but the majority definitely on hold here. And given the impressive run-up that we've seen in shares, certainly doesn't mean that we won't, you know, see a rally after earnings, but it seems like it kind of heightens that bar and makes it that much more difficult to impress. But Capital One is up 3% right now following earnings, so it's certainly possible. Yeah, and I think perhaps just encouraging that we were at least given some clarity on this takeover. I have
Thank you, Bobby.
These names are expected to be a pretty formidable competitor when combined to some of the massive behemoths that are like a Visa, MasterCard. So it's been a really interesting story to watch, and again, a pretty stellar chart as far as new all-time high today, now up about 13% on the year. So really nice January to kick off things for Discover as well as Capital One, but appreciate it. Caroline Woods, Senior Markets Correspondent for the network. And now, of course, we look at trading this day. We have earnings still out. I would say that a lot of this move right now is somewhat tied to Capital One, given the fact that they are in these advanced acquisition discussions. But walk us through the thinking when trading this name, of course, and considering that we are at all-time highs here.
Yeah, so the one thing that does make this a little bit different than traditional takeovers is that it's an all-stock deal. So you are going to still see fluctuations in Discover's stock simply because even if the deal goes through, it's not a cash compensation. It's going to be replaced with other shares of a different company. And so with that, there's still market volatility.
We're right back.
That said, it
I
remains
can't take
to be
this much
seen
longer.
with the deal kind of in the balance, how much the current performance of this stock actually reflects the fundamentals of it, or is it more reflecting what it could and will become if the deal goes through? I would argue the latter. That said, if the deal were to break down, there's risks of that breakdown, and that needs to be accounted for when trading this. Most importantly, if you're looking at these strategies, especially given the fact that it's an all-stock deal, there's not necessarily that traditional kind of arbitrage takeover where it was a $200 price and it's trading $190. If you buy it and it goes through, that you get that, which isn't a retail trading game really anyways. But that being said, it is a little bit different because it's all stock. If you wanted to get involved in this name still nonetheless, perhaps looking at risk-defined strategies that would be protected against a substantial downturn in the shares if the deal were to break through, but also can reflect kind of the fundamental of the combined company going forward over the next few weeks. And so what I looked at was buying a call vertical spread that's risk-defined, still can perform to the upside if the stock performs nicely, but it only goes to the end of this week, kind of around this news and momentum that we've seen within the financial space. If you see a continued pop through 200 by the end of the week, perhaps this could perform to the upside alongside that. $2 wide or $5 wide spread, $2 debit to 195, 200, January 24th, so super short term. Risk 200, chance to make 300 with a 197 break even. So you're gonna need some help in the market. You're gonna need it quickly, but with that, Jenny, you need about 0.5% rally, break even. And if you get that from there, then you have a chance to perform to the point where you can make $300 if it gets through 200 by the end of the week.
Yeah, and with a pretty substantial move today, of course, ahead of those results, I entirely agree with you. I think this is more on what the expectation for that joint company could look like. Less maybe about the more recent situation with Discover, but I will say that at least as far as the bank earnings were concerned, I think a massive takeaway is that the U.S. economy is looking strong. So that definitely bodes well for both Discover as well as Capital One. We'll leave it there for that discussion, though. Coming up next, time to talk a point of strength in this market, no doubt, and that's everything tied to Stargate, as the Trump administration has unveiled a $500 billion plan to invest in various aspects of AI. One of the biggest winners on the session today here is Oracle, up 7.4%.
Okay, we're at the 200. I'm gonna go back in these puts.
Trading the trending names every day. I'm Tom White, host of Fast Market.
If we don't break
Ready
here,
for you, ready to
nope,
go
we broke.
at 12 p.m. Eastern on the Schwab Network.
125.
Is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Schwab.
No politics.
Taking another
no
risk.
Noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time to talk the latest with Stargate, as this AI project is drawing a ton of attention because up to $500 billion, I mean, it's substantial. I know $100 billion is the initial promise, but when you hear the line of up to $500 billion, that definitely will garner some attention for companies that have already promised and committed to massive capex in the world of AI. So I'd like to welcome in Kevin Green, now Senior Markets Correspondent for the network. Kevin, walk us through the latest and greatest. I did cover the initial reports on this yesterday, and ever since then, I've seen like Elon Musk come out and make some interesting comments. I've seen some interesting comments from Larry Ellison, of course, the founder of Oracle. So I'm curious your thoughts here and what the news cycle is reading regarding Stargate.
Well, definitely this news yesterday, late yesterday, I definitely put some enthusiasm when it comes to the AI trade. As you talked about, Stargate is going to be the expansion of data centers here in the United States. And there's a commitment from SoftBank, as well as partnership with Oracle and OpenAI, to spend around $500 billion over the next 4 years in order to build out these data centers. Now, they're going to start this off in Texas, which is already kind of being built out. But over time, the expectation is that they're going to spend a lot more money, up to that $500 billion, obviously, as we kind of talked about here. So you're seeing stocks like Oracle pop to the upside here. NVIDIA also catching a nice little bid. Even if you're looking at some of the energy stocks that are related to the AI data centers, if you're looking at Constellation Energy, that stock is actually up on the session here today as well. So that's really what is giving us a boost from the broader equity markets. But we do have Elon Musk making some comments saying that he believes that SoftBank only has around $10 billion worth of commitments actually secured at this point, based on some good authority. And that's where you're kind of seeing a little bit of this back and forth. Sam Altman kind of refuting some of the claims and stating that Elon should kind of focus on his new role within the government in order to protect national security and things of that nature. So interesting times, and obviously this is going to be a headline mover probably for the next day or so as we get more details around this plan. But kind of just shows that there's a lot of foreign investment that is trying to make its way to the United States in order to be a part of this AI expansion story that is not only just a trend for the near term, but does seem like it's going to be a secular trend for the coming years.
Hey, KG, I don't want this to be commentary on, what is right or what is wrong, but just in theory, this in a way is fiscal spending without fiscal spending. In a way, it's getting money to be invested in these things without having to basically procure it at the Treasury or through Congress's purse power. This is essentially getting these companies to invest as opposed to the government itself doing it. Is that your interpretation?
Yeah, it's foreign. It's investment dollars from corporations in order to try to expand the industry out. So you're exactly right. The big key area here is that there's commitments, and then there's actually dollars and cents that are actually going to be spent. And if you're talking about the $500 billion is a lot of money, right? It's $500 billion. That's a lot. And so the interesting part is going to be if this actually does come to fruition. Not doubting the Trump administration. We've seen it from both parties where we see commitments being made, but they do fall short. When it comes to the actual dollar spent.
We do not see it. You're an idiot.
Funding in order to build out infrastructure is really the play that the Trump administration is trying to make.
Let me tell you something, son. We spent $14 trillion during that last 4 years of your money, your taxpayers' money. I didn't see anybody wanting to throw their money into the market and do an investment, hardly at all. Trump ain't been in office for 2 days, and he's got $500 billion investment already. You're right, maybe not all, but it's going to get there. Private sector money, the billionaires' money. Don't say both. I'll slap you across the face.
It's not unclear that a company like SoftBank or Oracle or OpenAI wouldn't be making these investments anyways. So maybe it's just the combination of them, kind of coming together.
Right now I'm down on this trade.
This is clearly a growth place for many of these companies, particularly kind of a vision fund type company like SoftBank to invest. But I guess my follow-on question, and
I'm not trading a lot of money here.
In theory, because this isn't necessarily creating new dollars, it's just bringing dollars here on shore. It can perhaps spur growth, but maybe not have as much inflationary knockoffs as simply inflating the monetary supply. I guess in theory, is that kind of the outcome if it happens?
Well, I think any dollar that is spent on any type of capex or investment, there is a expansion of that dollar over time, right? $1 can turn
If
into
it's from the
$1.40,
private
so on
sector.
and so forth. So it probably will be inflationary, but I'm not sure
Oh,
if it's gonna be
God.
inflationary as far as like consumer prices going up on eggs or anything of that nature. Right?
This
It's
guy's
probably
got it all
raw
wrong.
Materials and goods.
I can't listen to him here now. Inflationary. If it was my tax money, it would be, you idiot.
Pulling back a lot of these security measures I know that were laid out previously by the Biden administration. Elon Musk is saying, I mean, I know that he's like basically declared himself as a pretty public disliker of Sam Altman, so there's that beef there, but he's also come out and basically said there's a degree these companies don't have the balance sheets basically to support. I mean, is there risks to them? We hear $500 billion that we don't actually even get there or anywhere close.
Oh yeah, for sure. I mean, this kind of is reminiscent of the grain deal from the first administration, and then the tariff war that we had, and the commitments that China was going to buy so much grain, and they only fulfilled like 15% of it. So there's commitment, and then there's action. But the commitments that we are seeing right now is enough for
This guy's a doubter.
dollars on an investment side to kind of flow into the market. So as long as you have that enthusiasm, the equity markets probably are going to react in a positive manner. And then once again, you have 3 years, 4 years. News cycles usually only last for 24, 48 hours. We'll probably forget about this in a month from now. So you want to leave the commitments. That's good for equity markets over the long.
This guy's a doubter. I mean, he's smart. He's probably smarter than me by many means, but not in this outlet. If they stretch it out to 4 or 5 years, that ain't nothing. $500 billion. Calm down.
No one's going to really talk about it, just like no one's talking about the failure of China buying all the grain that we were supposed to get purchases from, 4 years ago, 5 years ago.
Well, that was under the Biden administration, you quack.
No, that's a good point, too, and that's an interesting parallel. I hadn't thought of it, and frankly, I think the long-term concerns are still worth acknowledging, because right now it seems like so much...
I can't take him too much, neither. Not when I'm down on a trade. I don't like it. I'm going to have to just take it. Right now I'm down $120. I needed that sweet potato. AAL, we can talk about it. But he was a doubter, man.
Portfolio with the Schwab Network. Schwab Network is available in...
Shit. Tesla dumping. I'm out of it. I'm gonna get out of it here.
This report, has that elevated the bar a little bit?
It might have a little bit, Alex. I think to some extent. I think what's really happening here in this whole group is essentially a movement of lower capacity and higher profitability. These companies have actually cut capacity. In some cases, capacity is less than where it was just going back to 2019. I mean, it's essentially almost 6 years now, but sales are higher. And with that said, you're starting to see the manifestation of earnings which just continue to encroach higher across the space, including the other legacy carriers like United and Delta. And we always talk about American as, of course, the largest out of the group by revenue, but the challenge underlying the business has always been the debt load. And
85 cents.
$39 billion on about $12 billion in equity. So it's still quite large, but nonetheless,
So I could have added there and
you look at
made
the
a killing.
EPS, estimates are growing quite fast. And the quarter estimate that they're going to be reporting soon is about 64 cents. That's more than double last year, which was around 29 cents. But the kicker is they're growing sales very slow. It's expected to be 13.42 billion, just fractionally or close to 3% versus last year's 13.06 billion. So they're expected to basically double their EPS on about 3% sales. And so what you're having here is a
might make it back.
of the stock price will reflect that these companies, including American and the other two legacy carriers, have generated lots of profit margins, which has caused many of the names to just move in a parabolic capacity, irrespective of things like higher fuel prices right now. Eventually, they'll reach a threshold where the profits will be baked into their stock price. But if you look at American, it's pretty remarkable that next year they're expected to earn about $2.45, the following year $3. So even at 2026 levels, this company is only trading around 6 times earnings, and it has double-digit earnings growth.
Yeah, and has risen now. I mean, 100% off at its lows. But George, I discussed United at length this morning. I've talked to Delta a lot, as I'm sure you have as well. And I'm curious where American, frankly, fits in the story, because right now we know that premium offerings are working. The high-income consumer is doing well, willing to spend on travel. And then some of these low-cost carriers are getting crushed. And American, to me, it lacks an identity because they don't really service the high-end premium offerings, but they also aren't low cost. So is that the concern, is that they don't really have right now this target market in which they're rapidly growing?
Well, all these airlines are different, and based on my evaluation, I put them in categories. For instance, Southwest at the more regional level, they really have a problem with operational efficiencies. That's very specific to that company. If we look at this group of companies like American, Delta, United, they have very similar profit margins and operating margins. The difference really lies in the balance sheets, and the stronger balance sheets have performed very well. That Delta and United. American's got that balance sheet overhang, so a lot of the earnings that they generate are going to pay interest on the debt, not coming back to shareholders. But all three of these legacy carriers have a lot of international routes that they're generating lots of profits from, because you have to look at the U.S. dollar. The
There
US
we
dollar
go.
is strong. So international travel, particularly places like Europe, have been very popular, and that's very profitable for these businesses. So I do think
I'm even.
you have
I'm
to
winning.
keep in mind that irrespective of American, they probably will need to finance that debt in some capacity. So they may take this opportunity as the stock price is rising to issue a secondary, but that might be a dip opportunity for buyers who are looking to get into this name that have maybe missed out on the initial rally.
And George, I think it's a good point, because they have started to make pretty noticeable progress on that balance sheet, but it's still a far cry from where those competitors that you mentioned stand in the case of Delta and United. So maybe something to look out for is that secondary offering risk to help pay that down. George, appreciate the setup here.
I'm out, 140.
It's going to do it for Jenny and myself here for Next Gen Investing on this Wednesday. Green on the screen again, unless you're in the Russell. That's going to do it for us. The watch list up next.
Schwab Bank in...
Hey, Randy, is your wife around? Ask her if she knows who that is.
Cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and
Ask her if she knows who that is. That's right. That's so right. Trump knows how to pick 'em, don't he? Jimmy made some money. Ricky says the end of the day might have a nice banger. I've got a big boner right now. I don't think we've ever had a first lady that looks so beautiful. I mean, Jesus, look at them eyes. Look at them lips. I think I'm going to put that up on my wall. She's the most beautiful girl in the world. It's the most wonderful time. I hit my 60, 90, 12. Who said I couldn't do it? Randy. You remember when I called the puts? It was right there. Right there. Right in here. And that was approximately at 11:37. Hour and a half later, hour and 40 minutes later, boom, baby. 60, 90, 12 with a double confirmation. That woke me up. Picture of her. I feel like I'm a brand new guy now. If I was Trump, I wouldn't be making no mistakes either. But I bet you if I had his money, I'd have something just as nice or nicer. I had a liberal on my Facebook page told me he said we got an oligarchy in the room in the White House now. I said, what do you mean? He's a bunch of billionaires. I said, haven't you been a witness of what happened in the past 4 years of all that printed money and how the politicians got filthy rich? What are you talking about? And he's a big environmental guy. I said, all because of climate change. He got pissed off and then blocked me. So I emailed him. I said, why'd you block me? We used to play music together all the time. He says, because you were getting into it with my friends. And I said, I did not. They're the ones that got a little mouthy with me. And he looked and went back and read everything. He says, you're right. He says, I'll unblock you as you promised me one thing. You won't talk about politics on my channel. I said, okay, I agree. At least you know how I think right now. I said, you're the one that started talking about him. Were you going to... I said, censorship, that's why... That's another thing about you liberals. You can't handle another opinion. Because I was one, but I never acted like that. Okay, that was pretty good. Still beautiful. Yummy. Oh, it's happened to me. It's the most wonderful time of the year. I think I nailed my support. Time for calls. Here we go. We are in 6100 strike. Randy, I'm having a change of attitude now. At $1. It's the most wonderful time of the year. SPX, I'm not in the 6080s, excuse me. 6100s. It's 6100. The most wonderful time of the year. Jack Frost nipping at your nose, Yuletime carols being sung by a choir. Merry Christmas to you. Uh-oh. $115. Come on. I get out now. Oh, yeah. Can anybody tell me who that was? Fool for the City. Break it. We want the 200 SMA at 6094.52. That was Fool for the City by who? Fool for the City. And yes, they used to be on 8-track tapes. I'll give you a clue. I want to drive me a Chevrolet. I want to drive me a Chevrolet. I want to drive me a Chevrolet. And something wants your love. Baby, I need your love. Come on, break out. No. Okay. Let's have a fake out. We're now making an inverse headed shoulders with a two-headed snake. It's a two-headed snake. And our exit idea is going to be up here somewhere. Maybe. Yes, that was Fog Hat. Nobody knows that song. She's 54, and I'm 63. Baby, I want your love. Oh. The time is now 1:20, and I'm playing the lotto, and we want to break out. $115, baby. Boom. You could sell now if you feel a little bit chicken at $115. Baby, I need your love. Uh-oh, 120. $130. $145. Oh, I'm hiding it. We can't be hiding it, Jim. Oh, with the 200 SMA. What do you think about that, Sparks? Did that spark you up some? Baby, I need your love. We're back down to retest, and I'm thinking about it again. Confucius says, get ready to buy.
Now Taxes is getting up to $4,000 instantly.
You're at the bottom. It's about time to make that trade. We're at 85. I don't live in town. $6,100 strike. Buy it at the lotto, it is. Got 3 black crows that cried. I got in 85 cents. I got in 85 cents. Oh yeah. The train, the cry. I got in at 85. Super cry. We want you to break. Let's do it now. Day. Oh, we get knifed. We don't want that. We could drop more now. I think I better get out of this before it's too late. Oh. Just give it a second or two. I'll give it just a little bit more time. This could be a fake out. But I called Netflix, but I did not take the trade. Come on now. And now I'm down 150. 100. 50. 100. 50. Blake it. Could have got that maybe at 65. You sure could have got it at 70. Now we're even. Break it. Yeah. Heard them say the other day. I love Elvis. No, it's a 6,100. Not the 60. That one was wrong. I heard them say. Did I put that one in here? That's a 61. And I sold that one for $1. I sold it for $145. We're at 95. You could make an exit here if you wanted to, but I think we can take it up to this here number right here. Another candle, please. We're at $1. We're at, no, stay up. Stay. Stack back to even. I was at $1 for a second. We can do it. If you put your mind to it, you can do it. There you go. I could easily get out here at $1. Right now, I could easily get out at 105. Give me a fat candle there. Okay. Now you're at resistance. Let's have a little run up to the 200. Give me 120. Come on, you can do it. You can do it. You could sell it now. Oh, 110. It's time to make a business decision. No. We're at $1. You know, we've all hyped up today in the market. We can bust it out. Bust a move. Bust a move. This ain't going to last too much longer if we don't bust a move. Man, my feet are cold. I gotta put back them shoes on. That's a bummer about having concrete floors. 105. I can get out at 105, I think. Blanket. I wish I'd have got in cheaper. 65 cents. We're at 110 right now. You can make a business decision. You get out at 105 for sure. And if you bought 10 at 85 cents, that's 850 bucks. Now you can get out at 110 for sure. Easy money. $250. I'll do it. Where away, I had to say, oh, we're gonna break to the 200. Let's do it. No. You son of a bitch. I'm back at 85. No. $110, baby. Now or never. I think I'm going to take it. Because I've been teased too much. What do you think, Randy? Out at 110. A very good day. Swing low. Sweet chariot. That's how you make money when you play the lottery. That's how you do it. I tried to tell you, man. Oh, shoot. No. 135. Damn it. What the hell's going on around here? Fuck 40. Ford 40, 55. No, don't do it. Oh. Oh, man. Did you just leave $455 on the table? Yeah, I did. Ethel was over by the veggie aisle, and all of a sudden I yelled, "Ethel, don't look!" Yeah, I did.
Start your journey with Holland America for only $129 per day. Receive
Really?
free balcony upgrade.
And what about all the extra charges?
This is Miss Grundy, the lady I told you about from Standards and Practices, you know? Say what? The censor, remember? Oh, listen, this man will take care of it. You know what to do. Thank you.
Hello, everyone. This is your Action News reporter with all the news that is news across the nation. On the scene at the supermarket, there seems to have been some disturbance here. Pardon me, sir. Did you see what happened?
Yeah, I did. I was just standing over there by the tomatoes, and here he come, running through the pole bins, through the fruits and veggies.
185.
There's a jaybird. Ethel's over there in the jams, jellies, preserves, and pickles. I hollered over there. I said, "Don't look, Ethel!" She dropped a whole jar of kumquats and fell back into the sweet midget cider. Hell, it's too late. She done been incensed. Boogie dad, boogie dad.
Look at that, look at that. Here ain't no code.
Well, yes, they call him the street. Fastest thing on 2 feet. He took as proud as he can be of his anatomy. He gon' give us a peek. Well, yes, they call him the street. Likes to show off his physique. If there's an audience to be found, he'll be speaking it round. Public critique. Hello, once again, everyone. Your Action News reporter on the scene at the gas station. There seemed to have been some disturbance here. Pardon me, sir. Did you see what happened?
Yeah, I did. I was just in here trying to get some air in my car there, and he disappeared out of the traffic. Come streaking around the grease striker, didn't have nothing on but a smile. Ethel's in there getting her a cold drink. I hollered in there, I said, "Don't look, Ethel!" Too late, she done been looked. Flashed her right there in front of the shock absorbers. Boogie dad, boogie dad. Boogie dad, boogie dad.
Well, yes, they call him the street. Like to turn the other cheek.
He's always making the news, wearing just his tennis shoes. Guess you could call him unique.
Hello, once again, everyone. Your Action News reporter in the booth at the gym, covering the disturbance of the basketball playoff. Pardon me, sir. Did you see what happened?
Yeah, I did. It's hay time. I just going down there to get Ethel a snow cone. Here he comes, right out of the cheap seats. Right down the middle of the court there, didn't have nothing on but his high-top Reeboks. He was a dribbling, made a jump shot, got out through the sensation. I hollered up Ethel, I said, don't look Ethel! Too late, she done got a free shot to grandstanding her right there in front of the home team. Oh yes, they call it the street. Whoa, here he comes again. Fastest thing, who's that we? Ethel, is that you, Ethel? Where do you think you're going? Yes, that'll be. Don't give us a beat. Oh yes, they call it the street. Ethel, you better show up happy.
Nailed it.
Once again, Mr. Stevens, you have managed to, pardon the expression, barely stay within the bounds of what is permissible.
And they called it the streak. I think I'm back to normal now. That thing went to 185. Got out of 110. You know how much that sucks? Does anybody know how much that sucks? I think it'd be the best thing to ever happen to our country if they abolished the income tax. Heck, they're printing money, what the heck? You know, it doesn't mean nothing to them. Would everybody be satisfied if you got a free check for $100,000 a year and you had a price freeze on everything? Then we'd have us everybody. And say goodbye to capitalism. Okay, that was a good trade. I just wish I'd have stayed in it. That'd have been a grand. Ooh. Magnificent, you can give me a grade. I want to see a B. Give me a B, please. I want a big B. B minus will work. See the minus in there? Thing goes up, there's the minus. This thing's going to fly. Ladies and gentlemen, we're nearing a quad top. Jim, what do you mean by quad? That means if you can count to 4, you might make a little bit more. But do you count the wick? Don't argue with me. Yes, you count the wick, you idiot. One, two bis, three bis, four bis. Time to make a little bit more bis. I can't believe I got out at 110. Oh. We're closing to the 200. Tesla under 420. Sound was having a good day the other day, and it's pulled back today. I'm going to set an alert right above the two. I'm going to set it right above this here channel. Right there. See this channel? I had a guy on, I don't know if you're out there right now, but I want to try to find the support to this here stock. So I've got the hour time frame. And I got the 200 SMA right here. I also have another channel right here. And I want to draw a line where I see the most consecutive, most consistent touches on that line. So I'm going to go here and I'm going to go to the body of that candle right there at 1519. So I'm going to come back over here. I'm going to set my alert above that 1519, right above that 63 EMA. Right around 1565, right on the body of that candle right there. Just a little bit below. I want to hit that 63 on the 1 hour. So I set my alert at the mark. I never chase a stock. I always let them come to me. So I've got an alert set. Now this had news the other day. And I think it's very bullish. We had one heck of a run up into here. Now, there's one thing we got to think about that's in the news. Trump came out, and he's okay with EV cars, but he doesn't want to throw a lot of money into it. He wants the investors to do that. So anybody that believes, instead of the government taking your tax money, he's going to open up the wells, and he's going to bring down energy. The cost of energy. So the gas engines are going to be popular again for a little bit. But yet, we're still going in the direction of the EVs. But he believes he doesn't want to dictate to you how the market is. Usually when the government picks and chooses winners, they usually lose. So they're wasting trillions upon trillions upon trillions of dollars in the EV car sector, where all you have to do is, if the private sector believed in it, they would go ahead and invest their own money in it. So there's going to be, the government's not going to be pouring the billions into this sector like they were before. They might even cut the tax credit out. Only rich people should be driving them cars anyway, right? Instead of forcing it down someone's throat that can barely pay the bills right now. So that's why we had that little pullback. And we could still have more of a pullback in the EV sector. Now, Elon's a different story. He's not a car company. He's a tech company. He's building rockets. He's building the internet. Who knows? Starlink might be a big deal in the next 4 years. Everybody will have free internet. If he makes enough money, he might just go ahead and just say, hey, I'm giving the internet out for free. I wouldn't put it past him. So you got to be a little bit bearish on this here sector, in the EV sector. And that's part of, SOUN is part of that sector. But it's also into other stuff too. Look here, will SoundHound AI stock get a boost from the Project Stargate? It's an AI thing, right? So this could easily double, maybe. I'm not gonna throw it out and say you got to be in the now when you take these trades. And think of innovation and ahead of what's going to happen. God, what's that? Is that a Martian? So usually before I get into a trade, I would like to look up the news. And I go to Wahoo Finance and type in sound. SoundHound makes tempting offer to car makers. AI stock surges. Wrecker system taps SoundHound AI to revolutionize emergency vehicle technology. Here's why SoundHound AI is skyrocketing. So that's all good news. And we just had a pullback. Sound software AI start 20. I didn't look at PLTR today. I bet you it's bounced back up. Ah, shit. Yep. Shares of AI technology companies are trading higher after President Trump announces $500 billion AI infrastructure investment called Project Stargate. Earnings 2-3 after close. So earnings are in a couple weeks. There's another reason to keep an eye on this stock. Okay, we're getting back down, Randy. I'm alerting SPX again. Well, we're below the 200. Jimmy will wait. You're below the 200, so you're bearish. See how we hit the 200 here? Boom, big knife. As long as you're below the 200, you're still bearish. So you need to find the next support, and that's probably right here. Well, didn't hold that. Now, probably your next support's right here. You probably take a risk, but you know what happens if it just knifes on down and hits that trend line. It's at 80 cents. Oh, what time is it? 2:13. $85 to $1. So far we've held that trend line. Yeah, didn't take it. A lot of sweat in the process. Randy's looking at 60.95s this time. Ooh, look at that. 85 to 110. 85 to 110. Yeah. I gotta take a vacation soon. Okay. It is now 3:16.
Been tons and tons of money going into this. So does all of that kind of geopolitical discussion or tariff, where does it rank compared to just how much need is there for all this AI computation that's being built out?
Yeah, we've had some positive news here over the past day or so with the kind of Stargate initiative, and certainly that adds some certainty perhaps and some additional reassurance that there will be continued investment.
Now you'll hear the negativity here on CNBC about it.
Timing of this, 24 hours ago, was on a podium next to Donald Trump, would probably instill a little bit more confidence to go after Elon Musk and say, you got to do what's best for the country, not what's best for your company. So that
shut up, bitch.
A strong tweet in response from Sam Altman.
I mean, these progressive liberals, they have no clue what Elon's about. They're bashing Elon, thinking that it's all in for him. I mean, this Musk. I bet you've been in the news all day long.
Steve Kovac here with that part of the intriguing story as well, Steve. Yeah, on the Microsoft side, Scott, it is the headline that it's no longer the exclusive cloud partner for OpenAI. That's been the case since it started investing in OpenAI back in 2019. Everything that happens on OpenAI happens on Azure cloud servers. And by the way, that is part of the growth that we've seen in the Azure cloud business, particularly the AI segment of Azure cloud comes from OpenAI. Now Microsoft has what they're calling the right of first refusal. They literally don't have the capacity, the cloud capacity, to do everything that OpenAI wants to do and keep AI start partnering with Oracle, which it has previously partnered with before. We saw this last summer when the two companies announced that they're going to start taking some of the cloud business from Microsoft to take some of that load off and do it on Oracle. And it also opens up the idea that maybe other hyperscale cloud companies can also get in on OpenAI. It's not all bad news for Microsoft, though. Again, they're still going to be using OpenAI on Azure for a lot of the critical stuff, and they're going to still have most of the agreement intact. That includes exclusive access to OpenAI technology before anyone else gets their hands on it. I've got a clip here from Satya Nadella. He was on with Andrew on Squawk Box earlier this morning, kind of explaining what is staying the same and why this still benefits Microsoft. Take a listen.
Look, I think the partnership with OpenAI to us is a critical partnership. We love it. It's working. It's created a lot of value for us. And we plan to just continue forward with it. It's true that on Azure today, there are other models. There are open source models. We have our own small language models, and we'll continue to have all of that. Because customers at the end of the day are going to demand choice there, and that's fine, and we'll make sure we support it. But having a leading model on Azure exclusively is a great advantage to us, and it's good.
Now, Scott, a lot of people are reading into this. This is just kind of the first step of an inevitable breakup between this partnership. That doesn't mean it's going to totally go away. The deal is intact until at least 2030, and obviously they can extend it from there. but it does show that this cozy relationship that these two companies have and are increasingly becoming competitors with each other, it's starting to open up a little bit at the same time. And by the way, Microsoft still is heavily reliant on OpenAI to do everything it wants to do on the consumer-facing front of artificial intelligence. That includes Mustafa Suleyman, who was hired last year as the CEO of AI at Microsoft. His whole group is heavily reliant on OpenAI's technology to do what they want to do and get that engine running as well, Scott.
One of the founders of DeepMind is
that too.
Suleyman. So
Exactly.
Important to note that. What's interesting to me, Steve, is that the market doesn't seem to be worried in any way, shape, or form about Microsoft. The stock's up near 4%. If you had showed me the stock and it was down 4%, I'd say, oh, okay, I guess I get it. Maybe there is a little bit of concern over that, the future of that relationship, but not today.
Yeah, there's no doubt that growth isn't there. I mean, there will be growth, and there will be growth in the Azure business from Microsoft, spurred by OpenAI. We're going to see it next week when Microsoft reports earnings on Wednesday. They'll tell us what percentage of that Azure growth comes from artificial intelligence, and you can go ahead and just kind of assume a lot of that is coming from OpenAI. So again, the relationship isn't going away, but it is starting to crack just a little bit right now, as many had expected.
The other thing I wanted to talk to you about was, we're talking about all these stocks that are up a bunch. Apple is now in danger of falling. I couldn't believe this. It's danger of falling below Microsoft in market cap, believe it or not, right? It got eclipsed by NVIDIA again yesterday. And here we are with Microsoft putting that in danger as well. It's on pace for...
That makes sense to me because Apple is Apple. I mean, they put too much emphasis on the phone instead of on the computers. And I've always been like that with Apple. When it had the huge run, I was saying, this don't seem right. Now we're at the 200 though. I mean, it's a beautiful setup. Okay, Randy, I think my price is down far enough now on SPX. The 6095s. $1.85. $185, baby. We're 235, 245. Exit idea right here. Well, here, Jake Paul, I'm here. 250. I'm here, Jake Paul. Bingo, baby.
Hello, this is Wash at Wash Stock Talk. But actually today I'm Charlie Sheen. Breakdowns on stocks. Man, this looks like a good one, guys. I'm really a winner here. This is looking good for me, man. The tiger in me's, oh boy, come on, go up, go. Oh no, don't go down, don't go down. No, please, it's going down. I gotta sell. I'm almost broke. I'm gonna sell, man. I'm freaking out, man. My tiger blood's gone. I can't take it. Oh, I feel much better. Come on, go back up. Stock's going up. Oh, no, it's going back down. Oh no, it's going back down. Panic. Freaking out, man. Where's my dog? Here. I'm freaking out. Oh, help me, Lord. It's going back down. Oh, it's going back up. I'm a winner. People's gotta love me. I know I can do it. Oh, the Charlie Sheen incident about got to me. This is Wash at Wash Stock Talk. You'll never get in a stock that you can't get out of.
Oh boy. Rob is getting ready for number 4. Rob, number 4. We're experiencing technical difficulties. Rob thinks we're going to go higher. Get ready. Get ready, Rob. Rob, are you ready? 155. $155. Magnificent. $155. Ooh, 135. No. It's got a hold right here. This is my support line, the right shoulder of the two-headed snake. Do it, you can do it, you can do it, you can do it. Oh yeah. You can do it, you can do it, you can do it, you can do it. Could be an exit idea right here at 40 cents. 45. It's now 232. $205. You can exit the trade right now if you want to, man. $195. There it is. 210. 220. Now's the time to exit the trade. I'm out at 215. I'm a robot waiting to be programmed. I am a robot. Randy says he's going to hold him. Randy says he's going to open him.
Brother bought a coconut, he bought it for the diamond. Sister hiding out a one, she paid it for the lime. She put the lime
In the coconut, pick it all up. Put the lime in the coconut, pick it all up. Lime in the coconut and drink it all up. Lime in the coconut and drink it all up. Doctor, get ready for another trade.
Ain't there nothing I can take a said doctor to relieve this bellyache. Now let me get this straight. You put the lime
In the coconut,
drank a boat up. Put the
lime in the coconut.
drank a boat up. Put the lime in the coconut. You drank a boat up. Put the
Lime in the coconut.
You called your doctor, woke him up and said,
Doctor,
ain't there nothing I can take a said
doctor.
to relieve this bellyache. I said, doctor, ain't there nothing I can take a said doctor, doctor. Yes, she said,
Lime in the coconut at 95 cents. I'm gonna stop trading. I'd take it at 95 though. Coconut. I'm in the coconut. I'm in the coconut. Doctor. Doctor.
To relieve this bellyache, I said, doctor, ain't there nothing I can take? I said, doctor, 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 doctor. You put the lime in the coconut, you drink it all up. Put the lime in the coconut, you drink it all up. Put the lime in the coconut, you drink it all together. Put the lime in the coconut, then you feel better. Put the lime in the coconut, drink it all down. Blood lime in the coconut, and call me in the morning. Ooh, ain't there nothing you can take? I say, ooh, to relieve your bellyache. I say, ooh, ain't there nothing you can take? I say, ooh, to relieve your bellyache. I say, doctor, ain't there nothing I can take? I say, doctor, to relieve this bellyache. I say, doctor, ain't there nothing I can take? I say, doctor, are you such a silly woman? Put the lime in the coconut and drink them both together. Put the lime in the coconut, then you feel better. Put the lime in the coconut and drink them both up. Put a lime in the coconut and call me in the morning. Yes, you can call me in the morning. If you
Call me in the morning.
tell you what to do. If you call me in the morning, I'll tell you what to do. If you call me in the morning, I'll tell you what to do. If you call me in the morning, I'll tell you what to do. If you call me in the morning, I'll tell you what to do. If you call me in the morning, I'll tell you what to do. If you call me in the morning, I'll tell you what to do. So to see the morning, call me.
It's 37 degrees. Man, we had a warm day. The bottom of that channel's right down here at 60, 87.50. $60.87. Man, that guy's strange. Oh, you got the 69.90 puts as well? He's out of the puts. Very good. Smart move. Smart move, Randy. I just can't listen to CNBC anymore. It's hard. It's hard for me to listen to them. It really is. I mean, they're so biased.
Angel, good afternoon. Double D, how are you?
All right, Oliver, how are you?
What's up?
I don't want to listen about Elon Musk all day long. You know what I mean? They get paid to love billionaires, and all they can do is bash him consistently, 8 hours a day. They started on him this morning, first thing. I just felt like dropping the mic. And if these people trade like that, they're worthless.
What, 217, so, and they're expecting it to tick up higher this week, and after getting down to near 200,000. So if that trend continues,
You get great news. You get great news. They're putting $500 billion into AI, and then they question it. And they say, "Oh, he's greedy. He's doing it all for himself." Well, frick. They've been doing these guys been kissing the government's ass for the last 4 years, begging for money. I'm not talking about Elon, because he hasn't. And they call these trades out, you know. They always mention the government. The government's buying this and putting, you know, military contract here, blah, blah, blah over here. They passed a new law, you know, just get continuous on that channel. And then when Trump digs into the private sector and has other people that want to come in here and invest, they fail to report it like that. They don't care about the debt. It just annoys me anymore. It used to not be like that.
Again, there's just too many unknowns out there. Short end of the curve, range bound for the last 3 months now, Oliver. You know, you look at the twos right around this 225 to 230 level in the middle of the range for the last 3 months. So you're looking at very low volatility as the market expects that the Fed's going to get to that point here over the next year now. But at the same time, the short end of the curve is where the Fed can kind of control things.
Man, I feel like putting gloves on.
Still, I think too many unknowns. Certainly, the debt being one of the primary unknowns, as far as also the spending and how the potential tariffs are going to impact economic structure moving forward. So I think, you know, we are seeing that 10-year getting down to below 460. At least it's at 460 today. Yesterday, hitting the lowest level.
I don't give a shit about these tariffs.
3-week low yesterday. Now finding a little bit selling pressure today, moving higher. But as you pointed out, we have weekly jobless claims tomorrow. We also have some PMI data Friday and consumer sentiment. And then the big thing will be the Fed announcement next week. Again, they probably won't move. It appears that they've telegraphed that. But what will they say about what they're seeing moving forward?
Okay. Looks like generally markets are pretty confident. Fed's still going to find its way into cuts after the Waller commentary last week. I feel like that was one of the more profound Fed speeches or comments. It wasn't even a speech, it was just an interview. It seems to be kind of lingering with the dollar getting hammered yesterday and not having much to bounce back today on.
Yeah, right. Yeah, it's still under 108 here. You know, we're seeing it come up a little bit, but what's interesting is you and Kevin talking about that big announcement coming out of the Bank of Japan is the yen is under some pressure today. So again, it may be fading of the expectations as far as how they're going to enunciate their policy moving forward, even though the rate cut is going to be sizable in the sense that it's one of the biggest since, as you mentioned, 2007. So there's a potential there for some volatility in the dollar. I think as we move through these central bank announcements, and we'll see how the Bank of Japan initiates that. Really, I guess once it's in the market, what are they going to say? How are they going to policy? How are they going to present their policy moving forward after the announcement of this rate hike that is widely expected? I think in next 24 hours, I believe.
Japanese yen due for a little love then with
Possibly,
the drop today?
You know, yeah, possibly. But again, this is so telegraphed that, you know, that's why you're seeing, I think, maybe a little weakness. So it's really going to be about how they interpret the future moves and how they express that, you know, and that's been the theme. You know, we've seen that also work its way through the markets here in the U.S., and that's going to be a big driver next week, however, there's no question about it. Fed probably won't move. They pretty much telegraphed that. But what are they going to say moving forward? Are they going to say there's still potential for 2 rate cuts, you know, on the table for 2025? And how's the voting? And you know, there's how that's interpreted. You mentioned it last week how that had a big impact when Waller mentioned that there's still probably 2 cuts coming. You know, that will have a big impact on not only the Treasury markets, but it'll ripple through to the other sectors of the market as well. And talking about sectors today, I want to close on this, Oliver. Yep. Even though we're seeing some nice hot price action in the tech sector, you know, again, it's not being supported. You're seeing utilities, banks, energy under pressure, as well as the small caps. To me, that tells me that, you know, this is going to be a very challenging level for the overall markets if you don't have participation from the majority of the sectors.
Fair enough. Okay. Does seem like we touched down 6,100, and since then been taking some off a little bit. A few chips off the table, some profit taking. Thanks, Dan Deming, managing partner, KKM Financial. When we get back, got a big picture discussion. Nice duo from the Schwab team coming up. Jeff Kleintop and Nate Pearson are taking us into the bell.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked,
Jimmy said he's sitting it out. I'm glad he did.
Manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and
60-90s now, maybe.
Bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. We got some time until the bell here. Let's talk big picture themes with Mr. Jeff Kleintop and Nate Peterson, Director of Derivatives Analysis and Chief Global Strategist at Charles Schwab. Afternoon, guys. Great to see your smiling faces. Jeff, KG kind of got us on the Bank of Japan track the last 15 minutes. Dan Deming was thinking about it too. What say you? Is this an event that we should be paying attention to?
Well, the 25 basis point hike on Friday is pretty much locked in, widely anticipated. A lot of signaling from the Bank of Japan that that's coming. And it looks like we've probably got a hike coming maybe one every 6 months as the base case. So the tone around that may be what drives the yen. More confidence in that outlook, coming from confidence in the wage outlook, continuing as we go through the Shinto wage negotiations in the spring here, would all further support those hikes, or even more. That could support the yen.
Baby, here it is.
We hear less confidence in that, given the maybe changing political scene. That'll be the key. I think it'll be the former, and we'll hear more confidence in the inflation and growth outlook, and that could nudge the yen higher. But there's a lot of variables.
Paper trade, no.
Right now, and
I got 7 minutes.
Swimming in all of that.
What do you think, Nate?
That's paper trade means 60, 85s.
Does the BOJ have the power to disrupt our beautiful bull market, breaking out to all-time highs today?
Gosh, it sure doesn't feel like it.
145 to 180 right there, baby.
Based on, money flow going into the U.S. here, there's a lot that's built into the fundamental backdrop that is explaining why the valuation in the S&P has that large of a discrepancy between overseas. Look, anything's possible. I think the shock that we got back in August with the unwind of the yen carry trade, I think it's difficult. Jeffrey can likely talk a lot better about this than I do, but if anything were to get disrupted,
245
again, I don't think it would have
paper trade
effect. Right now, I just think that we're in a little
310,
bit of a front loading, a lot
350,
doing a lot of
370,
capex binging here. That's
450, yeah. Yeah. 480. I'll take that. Bingo. Paper trade 145 to 480. Can't beat that.
One of the recipes for volatility. It's fascinating because we have not seen it, right? This is maybe the first day in terms of some of the markets around the world. China, first day in 6 that you see stocks pull back at all. Same thing for the currency. So kind of interesting to see how stocks and currencies have kind of taken all of this in stride.
I used to have a theory. This might help some of you traders out there that ain't doing well. Is don't try to load your brain with too much. Because I can't do it. I'm not smart enough. Others can. I've traded with people and they go, God, how the hell does he do that? And they get pissed off because they've been, you know, I was in this one room last year, and a guy confronted me. I called out a fallen wedge. And this guy traded on Wall Street for a big company for 20 years. And he got in there and said, no. I said, what? He said, no. I said, well, that's a straight answer. And I shamed him. About 45 minutes later, the thing broke out, run up. I got out of the trade, and he just embarrassed himself. Because, you know, my trades aren't always like that, but what I'm saying is he's sitting there and he's giving me all these funny numbers, and eventually, you know, I messaged him and I called him a rookie. Private messaging, I said, you know, I've been here before, you know, I've had rookies like you test me and say that's not this or that's not that, and then it ended up breaking out. I just called him a rookie. And he wrote me back. He said, I ain't no rookie. I traded on Wall Street in New York for over 20 years. I said, so he started giving me all these things that I had no clue what he was talking about. I can't even remember what he was talking about. It's been a long time. I said, what are you talking about? Some kind of technical analysis that he always went by. And if it didn't hit that thing, he would never buy the stock, which is good, which is fine. So I'm here looking at a 1 minute time frame, you know, and I call this wedge out, fallen wedge, and it was NVIDIA when it was in its prime, when it was really running up. Every pullback was almost a buy, almost every single time. Every time it knifed, you know, and bam, it'd break out. So he messaged me and he said, damn. So I've been watching you. I don't understand. So he invited me to his room, and I said, you know, that's all right. I'm in too many rooms already. But he was he had a special way of trading that, you know, he swore by, and it worked for him. He's a millionaire. But he missed a trade that bounced $3 a contract, and you know, he could have made $3,000. But he liked it so much that he seen me do it a couple of times. He said, I got to invite this guy to my room. And I said, you know, but he was too technical. There's no way I could sit there and trade with this guy. Because I don't have the brain capacity to learn all that stuff. So I'm going to get on out of here. Watch my videos. I just want to keep up on the Trump. I got, you know, it's been waiting for this for 4 years. I want to listen to my other. I got, you know, I get on here and on my YouTube channel, and I'll see who's getting ready to talk about Trump. I'll probably watch Trish. I'll watch this here. He's going to name his dog and cats. He made it up to 100,000. I think that Carrie Underwood, they said, was was a setup, and she sung it a cappella, and it was wonderful. It was beautiful. We got a new sheriff in town, so I might want to listen to about the border. I want to listen to how snooty CNBC is. You know, they're sending troops to the border now. We'll blow them. You know, we're going to turn them back. It's an invasion on our country. I like listening to this chick here. It's Angelina Rose. I mean, I've got a crush on this girl. I'll put the link in there and y'all can follow her. She's a sweetheart. I've seen her, man. She gets like 2,000 or 3,000 followers every time I look on here. She's up to 117 now. She had 85 when I started watching her. 75 or something like that. 75,000. So, I'll catch you all later. We got another fire going on. Dadgum, man. See you YouTubers later.